Hello guys, this is Vishal Jain, your faculty for ACCA, FR and SBR. Guys, do you know what? Whenever a student fails in the exam and comes to me for guidance and I discuss with them, you know what? Most of the times I have noticed that students have failed because of section C. So I always had in my mind that I have to do something for my students so that they should not struggle in section C particularly. Okay. So now what exactly to be done? So I thought, why not help them with practice of at least one question of each type what can be asked in section C. Okay. Now, as we all know, in section C, there are two questions of 20 marks each. Now, question number one will be from preparation of financial statements. It can be from group financial statements or it can be from single entity financial statements. Right? Now, another question, the question number two is from interpretation of financial statements. And this interpretation of financial statements, the question can come from 5 types of question, which I have always discussed in my classes also. I'll show here also, don't worry. Okay. Now, so what I have done is, first of all, I have identified 9 type of questions that can come up in the exam. Okay, that can come up in the exam. And I have tried to discuss all the questions. I have tried to discuss all the questions exactly how you have to solve in the exam. Okay, so now let me show you the list. Okay, see, if the question comes from preparation of financial statements, it can come from group financial statements or single entity financial statements. Now, if it comes from group financial statements, it can come from group P&L or group SOFP. So what I have done is, in this series, I have discussed the 2 questions of group P&L, 1 question of group SOFP. Now, if the question comes from single entity, okay, now it can come from single entity SOFP or single entity P&L. Additionally, they can also talk about statement of changes in equity, which is also discussed as part of this question. So whatever question can come up in the exam, I have tried to discuss each of these questions. Now you will ask, sir, what is the source of these questions? Trust me, this is not taken from any material. These are directly from the past papers. Okay, so if you sum up all these questions, they are nothing but the last 5 past paper question papers. Okay, and I have solved them in ACCA practice platform itself. So you will get to know the how to solve these questions, how to read the questions, how to interpret the requirements, and not only this, how to solve these in ACCA practice platform. Right, so this is again one of the big challenge, how to solve in ACCA practice platform. I have discussed that as well in this video, because I have actually solved in ACCA practice platform like a student have to do in the exam. Okay, now if you come to interpretation of financial statements, question can come from 5 types. Comparison year on year, I have discussed a question for that. Comparison of 2 companies, I have discussed a question for that. Comparison of the sector, I have discussed a question for that. Comparison of acquisition of a subsidiary, we have acquired a subsidiary during the current year. Okay, so previous year the subsidiary didn't exist, we have acquired in the current year, so comparison of that. Current year we have disposed of a subsidiary. Okay, so we have discussed a question for that. So I believe if you watch this 8-hour series, it will completely help you prepare for the entire section C. 40 marks effective study for this 8 hours, and consider this as a birthday gift from my side. It's my birthday and I'm giving you this gift from my side. It's my birthday on 18th May, that is tomorrow, and I'm giving you this gift from my side. Okay, and you guys have shown me so much love, and I am giving my love to you guys. Okay, now start watching the videos, and yes, make sure that if you are watching it, if you are enjoying it, if you are learning from it, okay, do like the video, share the video with all the friends. Make sure that this video reaches all the ACCA community students, and do not forget to leave a comment in the comment box. Okay, thank you guys. Let's see this channel. Now, before we start, just one small direction for all of you. I will be solving the questions in the same order. Okay, like this PDF. Okay, now first of all, I'll be solving the question of group, then single entity financial statements, and then interpretation. I will share this file in my Telegram group. Additionally, the suggested answer for all of these questions Also, I have shared in my Telegram group. The link is given in the description box. Now, additionally, I will give the timestamps for all of these questions in the description box. You can check the timestamps as well. Okay. Now, start watching the video and all the best for your preparation. Chalo. So this question is from group accounting, group P and L, and let me tell you, group P and L is one of the favorite topic of the examiner. If an examiner has asked group accounting 10 times in the exam, out of 10, the examiner has asked around 8 times group P and L. Okay. Now, chalo. Let us discuss this question of group P and L. Now, company is giving the reporting date. We have to highlight the reporting date, guys. We have to highlight the reporting date. Now, so this is the revenue given P&L, revenue and the entire P&L given for the parent and the subsidiary. Now, okay, the reporting date is 31st March 2006. Whenever you solve a question of group accounting, always see two dates very carefully. Okay, now one is the reporting date and another is the acquisition date. On 1st July 2005 is the acquisition date. Now please tell me the subsidiary has been acquired during the year, in the mid of the year, Now when you prepare a group P&L, tell me, will you consolidate the entire subsidiary? No, we will have to do the time adjustment. July, August, September, October, November, December, January, Feb, March. 9 months. Guys, a comment from the examining team. Please understand. Whenever you consolidate a subsidiary, in this case, it is 80% subsidiary. Let me show it here. Okay, whenever a subsidiary is consolidated, we have to consolidate parent plus 80% of subsidiary. Is this correct? Yes or no? Only tell me yes or no. Is this correct? Incorrect. Okay, I think I have made a mistake. Chalo, let me rectify. Multiplied by 9 by 12 because subsidiary was acquired during the year. Is this correct? See, I have done the time adjustment also. Tell me, is this correct? No, this is also incorrect, guys. Then what is correct? The correct part is this is correct. This is correct. 100% of subsidiary. This is correct. Is it clear to all of you? I believe all of you are aware of this part. Chalo, theek hai, good. Now, on 1st July 2005, Partridge Company, I will say P Company, okay? I'm not that good in English. Now, Partridge Company acquired 80% of $1 million ordinary equity shares in Strawberry Company. The purchase consideration comprised of $19 million cash payable immediately and so. So I don't want to read these additional information. So let me tell you, first of all, read the requirement. I have always mentioned the same thing, and I will mention here also. Whenever you get any question, first of all read the requirement. First of all read the requirement, because when you read the requirement, your mind gets a direction. This is how you have to move. Okay, now so let's give our brain a direction. Okay, now calculate the goodwill arising on acquisition of subsidiary. Okay, prepare the console P and L. So two requirements, goodwill and console P and L. Goodwill and console P and L is what we have to prepare. Okay, now see, this format is not given by the book. This format I have prepared on my own. To save my time in the class, I prepared this format well before the class. I am smart. Okay, now so I will have to prepare the working note number 1 of purchase consideration. Chalo. On 1st July 2005, Partridge Company acquired 80% of $1 million ordinary shares, equity shares in Strawberry Company. The purchase consideration comprised $19 million cash payable immediately and $2.4 million payable on 30th June 2007. Means after 2 years. Means it is a deferred consideration. So what will I write? I will write here cash consideration. Guys, please make a note. This is a comment from the examining team. Please make a note. Whenever you are solving a question of section C, watching from Somalia, very good. Okay, whenever you are solving a question from section C, please make a note. All the computation, working, presentation has to be done in the same format given in the question. If the question has given in thousands, you will also do your working in thousands. If the question is given the format in millions, you will also do the calculation in millions. Okay, so see what is the presentation of the question. You will have to use the same presentation. Okay, so what presentation will I use? I will write in thousands. Cash consideration will be how much? 19,000. Now then present value of deferred consideration. What is the present value? Can you tell me, guys? Few students are asking me, sir, they are not well aware of the concepts. So if you are not aware of the concepts, guys, you can make use of my marathon videos. Again, the only detailed marathon on YouTube with the extensive coverage. Okay, the only marathon on YouTube in the entire globe, I can say. Now, present value of deferred consideration. What is the present value? 2400 multiplied by 0.826. So what is the value of purchase consideration? 20982. Done. Adjustment number 1 sorted, close, deal done. Coming to adjustment number 2. On 1st July 2005, the net assets of Strawberry had a carrying amount of 15 million. The fair value of the net assets of Strawberry. Okay, so we have to prepare net assets. So let us prepare working note number 2, net assets. Net assets on date of acquisition, post and reporting date. Okay, now tell me, what is the net assets? What is the carrying amount of net assets? Tell me, guys, come on. Net assets have a carrying amount of 15 million on date of acquisition. Okay. Then what? The fair value is this much. Fair value adjustment on plant is how much? 0.1 million. Okay. So here you have to write 15,000. 100. Then since it is a fair value adjustment on plant, we have to, now we are increasing the value of plant. So we have to increase the value of depreciation as well, because the subsidiary company would have depreciated the plant on the basis of its carrying amount. But since we are increasing the value, we should increase the depreciation as well. So how to increase the value of depreciation? So right here, excess depreciation is how much? 100 divided by what is the amount? What is the amount? What is the life? 4 years. Multiplied by 9 by 12. 100 by 4 into 9 by 12. 100 na? Pakka. 800. Someone told me in the comments 100. It is 800. It is 800. 800 divided by 4 into 9 by 12 is 150. Negative 150. Okay. Chalo, what else? Done. Inventory had a carrying amount of 2 million but fair value of 2.1 million. So fair value adjustment on inventory is how much? 100. Now it says the inventory, please understand, all these inventories were sold by Strawberry. So what I have told, if the inventory gets sold in the post acquisition period, the fair value adjustment has to be reversed to the extent inventory is sold. Now don't link this with unrealized profit. Unrealized profit is different. Fair value adjustment on inventory is different. Okay, please understand that. Okay, now please understand, fair value adjustment on inventory we add on date of acquisition and we reverse in the post to the extent inventory is sold. But when it comes to unrealized profit, it means parent has sold the goods to subsidiary, but subsidiary is not able to sell the goods to outsiders. So to the extent inventory is unsold, we reverse the unrealized profit. Okay, so these two are two separate concepts. Don't merge them. These two are two separate concepts. Don't merge them. -100. Okay, done. Partridge measures non-controlling interest at fair value. The fair value of ordinary share is 13. Chalo. So I think I have got the. See, now this is the challenge which students faces. They are not able to insert column. So let me see whether I am able to insert the column or not. No, even I am not able to insert. If I am not able to insert, how do you expect that you will be able to insert? Chalo, what is the fair value of net assets on date of acquisition? It is how much? This plus this plus this, right? Now you have to compute goodwill. Now what is the value of goodwill? Goodwill is purchase consideration, working note 1, it is how much? 20982. Now fair value of NCI on date of acquisition. And what is the fair value of NCI on date of acquisition? Now tell me, total shares was 1 million. So 1000 multiplied by NCI will have 20%. Right now, what is the fair value per share? 13. Is it required to show these calculations? Yes, guys. If you want to score marks under own figure rule, that is step marking, you have to show all these workings very neatly in the exam. I think there's a mistake. 1000 multiplied by 20% multiplied by 13. Hey. It is how much? 1000 multiplied by 0.2 into 13, 2600. Done. Now less net assets. Fair value of net assets on date of acquisition is how much? 15,900. 15,900. Right? So let me put it down a little bit. So what is goodwill? Goodwill is this plus this plus 7682 is your goodwill. Is that clear, everyone? Come on, guys, please tell me. Is that clear, everyone? Please explain NCI. So now NCI fair value is given. The fair value per share of subsidiary is given as 13. Okay. Now, how many shares NCI has in subsidiary? Okay. Total shares of subsidiary is 1 million. NCI has 20%. 1 million ka 20% is 0.2 million. 0.2 million multiplied by the 13 per share is 2600. Simple. Yes. Now, if student is asking, sir, if we just write here rather than writing it here, if we just do equals to, multiplied by 20% multiplied by 13, will the examiner consider it? Yes, the examiner will consider. You are not required to give it here again. You are not required to give it here again. You are not required to give it here again. Okay, you have to give it only one place, not both places. Okay, either give here or you can give here. One place, not both places. Okay, so first part of the requirement we have very well answered. Goodwill calculation. Is that clear to all of you? Is the goodwill computation clear to all of you? Now coming to console P and L, which is very easy, right? So now let us prepare console P and L. Now one by one we will do the adjustments and we'll proceed further. Okay, now first adjustment that we have to do is we have to take 9 by 12. Okay, so right here S multiply by 9 by 12. So what I'll do is I will do entirely 9 by 12. I'll do for each of them. I will do 9 by 12 is equals to. Now a student asks, sir, are we required to give parent column and subsidiary column separately in the exam? Ideally not required. Okay, then sir, why are you giving? So that I am able to explain you in a better manner and you will be able to understand it with clarity. That's why I give it separately. Is it required in the exam? No, not required. Okay, now so let us understand. First adjustment, does it have any impact on the console P and L? Yes. We will have to add the unwinding of the deferred consideration, right? 1.982 into 0.1 is 0.1982. So let's write here interest expense minus 0. Okay, into 1000 into 9 by 12 Okay, minus 149 working 3. Working 3. Sorry, minus 149. Sorry. Okay. Now working 3 you can give. Okay. Unwinding of deferred consideration. You can give the calculation here. It will be 1982 multiplied by 10% multiplied by 9 by 12. Simple, done. Okay, then what? First adjustment done. Second point, carrying amount of net assets, any adjustment in console P&L? No. Plant fair value adjustment, excess depreciation has to be added to the cost of sales. What is the amount of excess depreciation? 150. So let us adjust that here. Minus 150 working 2. Working 2. Guys, I would like to highlight one point here. See, you would have seen we have to increase the interest cost, but still I have written minus. We have to increase the cost of sales, but still I have written minus. Why? Because we have to increase now, so we have to use the original sign. We have to use the original sign. Okay, now if we have to decrease the cost of sales, then I would have done here plus. So keep that in mind. A lot of students make a mistake in this area. Okay, if you have to increase the expense, give a negative sign. Okay, be careful here. Just I'm saying, don't by heart anything. Be careful here. Be careful. Apply logic, which I believe you have already. Okay, chalo. So first part done. Second part, fair value adjustment done. Inventory. Okay. Again, minus 100. Again, I can say working 2. Okay. Or what I can say is I write here working 3. Working 4. Okay. And I will come here working 4. Cost of sales. Lot of adjustments. So I will prepare it separately only. Parent, subsidiary, then excess depreciation on plant, then fair value adjustment reversal on inventory. Chalo, parent cost of sales is how much? 21,000. What is the subsidiaries cost of sales? 14,000. But we have to take for the 9 months into 9 by 12. See, I have just shown the working here 9 by 12. Is that fine? Yes, it is fine. Now, excess depreciation on plant is how much? Plus 150. Okay, what is the fair value adjustment reversal? 100. Adjustment reversal, right? It will increase the cost of sales. Chalo. What else? So I think we have done adjustment number 2 fairly. NCI, there is no impact. So fine, okay, let's leave it. Now, between 1st July 20x5 and 31st March 20x6, that is in the post-acquisition period, Partridge, that is a parent company, sold the goods to Strawberry, that is subsidiary, for 3 million. Intra-group trading. So we have to do minus 3,000 here. And we have to do minus 3,000 from here. Less intra-group trading, minus 3,000 from here. Okay. Now, if you can notice, I have, when I'm preparing the cost of sales working note again here separately, I have written the figures in positive numbers, right? So to increase, I am writing it in positive numbers. To decrease, I am writing in negative. Okay. So you have to be mindful. This is not something which you can learn. No, this is something where you have to apply your common sense. That's all, nothing else. Chalo, what's next? Now, intra-group trading done. Now, unrealized profit. Add unrealized profit on in unrealized profit. So, what is the amount of unrealized profit? What is the amount of unrealized profit? 900 multiplied by, see, we have to write the figures in thousands. This 900,000 is an absolute figure, so I'll take only 900. Now it is a markup, but this is a sale price, so what I'll do here, into 25 by 125. Okay, now this is your unrealized profit. Shall I multiply it with 80%? Shall I multiply it with 80%? No. Shall I multiply it with 9 by 12? No. 900 into 25 by 125. 900 into 25 by 125. 180. Unrealized profit done. Done. This is the done. Now dividend. Strawberry has paid a dividend of 2 million. So let's write working note number 5. Dividend from subsidiary. Guys, please show as many workings as you can. So now tell me, what is the dividend received from subsidiary? 2 million is what subsidiary has paid, but how much we have received? 80%. We have to eliminate it, right? From where? From where? Investment income. From where? Investment income. Minus 1600. Working note, how much? What is the working note number? 5. 5. Done. Profits of the strawberry accrue evenly throughout the year. Done. Chalo, let's close it off. Deal done. Tell me, what is the amount of cost of sales? What is the amount of cost of sales? 28930. 28930. Chalo, come here. So it is equals to this plus this multiplied by 9 by 12 minus 3000. Okay. Now I believe you can prepare the group column. This column you can prepare, I believe so, right? But now comes the important part. Now comes the important part, guys. Now comes the important part. You have to show the allocation of profits. You have to show the allocation of profits. You have to show the allocation of profits. Guys, just a minute. Before I move on to allocation of profits, can you please give me a heads up whether you can complete this group column? Can you complete this final column? See, one I have done. Parent fully, subsidiary 9 by 12 minus adjustment. Cost of sales we have already found out. What is the amount of cost of sales? 28930. We have already calculated this. Right now, further, if you come here, what is the general admin expense? It is this plus this multiplied by 9 by 12. Right? Again, this minus 1600. Minus 149. Done. I think you can do it off, right? Now, coming to the, you have to find what is the allocation of profits to owners of parent to NCI. Now, you have to compute this also in the working note. Working note number 6. So let's come to working note number 6. Working note number 6. So tell me, what is the allocation to NCI? Allocation to NCI. Okay, now, so it is, you have to write here, what is the post acquisition profit of subsidiary? Tell me. 4200 multiplied by 9 by 12. So what is the amount? 4200 into 9 by 12 is the post acquisition profit. 3150 is the post acquisition profit. Right now, what are the adjustments that impact the profitability of subsidiary? What are the adjustments that impact the profitability of subsidiary? See here, excess depreciation on plant, yes, it does impact. Fair value adjustment reversal, yes, it does impact. Copy. So let's write here, it will reduce the profit, so I have to do negative sign. It will reduce the profit, so I will have to give negative sign. Now, intra-group trading, just see unrealized profit. Who has sold? Parent has sold. So it is a parent profit that we have reversed. So will it impact subsidiaries profit? No. Strawberry company paid dividend. Will it impact? No. Anything else? No. Chalo, deal done. What is the amount? This plus this plus this. 2900. So what is the NCI percentage? 20%, right? So this multiplied by 0.2 is 580. So the profit that is allocated to NCI will be 580, and the rest amount, whatever you compute here, let's suppose it comes to XXX. So the owners of the profit will be XXX minus 580. I believe you can complete that. Is that clear to all of you? Come on guys, please tell me. Come on guys, come on, tell me please. Is that clear to all of you? So within 1 hour 35 minutes, we have completed both the questions. And I have explained the points also. Okay, I have explained a lot other things also. And tell me, did I just explain the question, or I have actually solved the question for you guys? I have actually solved the question, and this is how exactly you have to solve this question in the exam. Okay, this is how exactly you have to solve this question in the exam. Okay, so tomorrow we are again meeting and we will be solving March-June 2025 paper. I hope this session helped you, and do not forget to give a feedback in the comment box when we end up the session. Thank you guys, that's all for today. This is CA Vishal Jain signing off. Bye bye. Chalo. So let us discuss this question now. It says Stuipulotu company, a very difficult name to pronounce. So I will say parent company. Simple. I will say parent company. Okay. I am bad at English now. Okay. So let's make it very simple. Okay. Stuipulotu company. Stuipulotu company. Okay. Now, acquired 80% of the ordinary equity share capital of Smeaner company, and I'll say Smeaner a subsidiary company. Okay, on 1st April 2008. Smeaner is the only subsidiary. Okay, draft financial statements are given as follows. Now guys, you need to make a note. What is the reporting date? 31st December 2008. 31st December 2008 is the reporting date, and we need to take a strong note of the reporting date. Okay, we need to keep in mind. Guys, before we start the session, before we start discussing the further parts, all of you, can you please hit the like button? Come on guys, can you please hit the like button, all of you? Can you please hit the like button? Chalo. Now, so the group, P&L of the parent company and of the subsidiary company both is given in the question. P&L of parent and the subsidiary both are given in the question. Okay, now revenue is given, cost of sales is given, gross profit is given, expenses are given, operating profit, investment income, finance cost, or profit before tax, tax, profit, and then other comprehensive income and total comprehensive income is given in the question. Okay, now chalo, let us go to the additional information. But as I mentioned yesterday again, before reading the additional information, we have to always read the requirements of the question. Read the requirements of the question. Now, what is the requirement? Prepare the group consolidated P&L and other comprehensive income for the year ended 31st December 20x8. That is the reporting date. You have to prepare consol P&L. So in the yesterday's question was also of consol P&L, but they additionally asked you to compute goodwill. But in this question, is the question asking you to compute goodwill? No, the question is not asking you to compute goodwill, but rather the question is asking you to compute or explain something else. Okay, now let me highlight the reporting date first of all. Chalo. Now let me read the requirements, the information further. It says what? When is it acquired? Can you please tell me what is the date of acquisition? The parent company acquired 80% shares of the subsidiary company on 1st April 20x8. 1st April 20x8. What does it imply? It implies that the subsidiary is acquired during the year, in the mid of the year. The subsidiary is acquired. Okay, now, so if the subsidiary is acquired in the mid of the year, tell me, how will we do the consolidation? How are we going to do the consolidation? So now if I have to write it here, tell me, this is what it looks like. Our reporting date is 31st December 20x8, means it started from 1st January 20x8 and the subsidiary is acquired on 1st April 20x8. So what is the post acquisition period? 9 months. Now, what is the proportion? What is the percentage that we have acquired? 80%. We acquired 80%. Now tell me, in the consol P&L that we make, what will be the final amount? It will be P plus 80% of S. No, wrong. Will it be P plus 80% of S multiplied by 9 by 12? Again wrong. Then what? Then what is the correct answer? It will be P plus 80. No, not 80. P plus S multiplied by 9 by 12. This is correct. Sir, why are you trying to emphasize again and again on this point? In the yesterday's session also you emphasized on this point. In today's session also you are emphasizing this point because lot of students make a mistake here. Lot of students, not one, not two, lot of students make a mistake there. And this, I'm not saying, this is written in the examiner comments, in the examiner report. It is mentioned in the examiner report. Okay, so the intent of these sessions are to help you understand how well you can improve your answers in the exam. Okay, so many students watching from Somalia. Okay, keep referring my sessions to your friends also. Okay, chalo. Now, additional information. The fair value of the net assets of the Smeaner company at the date of acquisition was equal to the carrying amount. It says the fair value. We all know that the net assets of subsidiary are acquired at its fair value on date of acquisition. Okay. Now, it says the fair value is equals to the carrying amount except for intangible assets. Now, what is happening for intangible assets? The intangible assets have a carrying amount of 25 million and a fair value of 35 million. That gives me a fair value adjustment of how much? Can you please tell me? That gives me a fair value adjustment of how much? 10 million. Now, what is the remaining life? 20 years. So we have to amortize this extra 10 million over the remaining 20 years. But comes the question, sir, why do we have to amortize even, first of all? So the answer to that is, see, understand, the subsidiary company would have already amortized this intangible asset on the basis of carrying amount. But now in the group accounts, we are recording the intangible assets at its fair value. That is, we are increasing the value by 35 minus 25, that is 10 million. So if you are increasing the value of the asset by 10 million, you should increase the amount of depreciation also. Okay. Now, what will be the amount of depreciation? That is amortization in this case. So let us compute the amount of amortization. Working note number 1. Working note number 1. Amortization of intangible assets. So which will be equals to 10 35 minus 25 divided by 20 years multiplied by 9 by 12. So how much does it become? 10 by 20 into 9 by 12. Just check, as I have mentioned in the last class also, and I'll repeat that again. The format which is used in the question is the format which you will be using in your answers. So since the question has used the figure in thousands, hence you will also use the figures in thousands. So the amortization is 375. Amortization is 375. Now let's read the question further. Amortization charges are presented in the administrative expenses. Okay. So we have to add it to admin expense. So now tell me guys, come on. In this admin expense, we have to add 375. So which sign shall I use? Plus sign or negative sign? Negative sign, because it is an expense already in negative sign. So to increase, we have to increase off. To increase, we have to use the negative sign. Okay. Now, chalo, first adjustment is over. Is that clear? Is that over? Okay, chalo. Coming to the second adjustment. After 1st April 2008, Isminer company sold goods to the parent company. Isminer company sold goods to the parent company. Subsidiary has sold to the parent company. A total of 15 million. Also, intra-group trading is how much? 15 million. So we have to adjust 15 million from revenue and cost of sales both. So here I'll write minus 15,000. And here I am writing plus 15,000. I believe you are understanding why I am writing plus, because I have to decrease the expense. That's why I have to use a plus sign. Okay. Now, what you can do here is, though I prefer the same, what you can do here is, you can write here working note number 2, cost of sales. Because cost of sales generally has lot of adjustments. Right? So what you can do, you can write here cost of sales of parent, of subsidiary, Now, parent is how much? 141,000. Subsidiary is how much? 76,500. But we have to take 9 by 12 is equals to 76,500 multiplied by 9 by 12. Okay. Now, then what else? Less intra group trading. How much? 15,000. Now, since we have reduced intra-group trading, we have to add unrealized profit. Okay. Now, what is the amount of unrealized profit? So let us compute that as well. Okay. So it says total intra-group trading was 15,000, out of which the parent company has already sold 75% of these goods to third parties. So how much of the goods remains unsold? 25%. So unsold goods are 25%. Now, what is the markup? 25%. So it will be 25 by 125. It is 25 by 125. Okay. So be careful while using markup and margin. 15,000 into 0.25 into 25 by 125, 750. Now, you must ask me, sir, is it required to show the workings here? So please understand. If you are showing the workings here, then you can just write the numbers here. Okay, no issues. But if you are not writing the workings here, then in that case, what you should do here is copy this way. Even if you are writing this way, then also it's completely fine. You are not required to show at both places. Even if you show at one place, it's completely fine, guys. It's completely fine. So then why are you writing it here? Because I will convert this page into PDF and I will share with my students. So if I write it here, it will be easy for my students to refer how did I arrive at the 750 number. Okay, that's the reason I am writing it here. But in the exam, if you are writing in like this also, you will get full marks for that and you will be counted under own step marking. Okay, own figure rule. Now, so this is also done. Now, Smeaner company, that is subsidiary, has paid a dividend of 1 million. Working note number 3. Dividend adjustment. So now tell me, what is the dividend from subsidiary? 1,000 multiplied by 80% is equals to 800 is the dividend received from subsidiary, which we will reduce from the investment income minus 800. Is that clear? Why? Okay, now a query is coming. Why we adjust cost of sales instead of inventory? Please understand, unrealized profit. What is the treatment? We have to reduce the profit. We have to reduce the inventory. We have to reduce the profit. We have to reduce the inventory. Okay. Now inventory has to be reduced in console SOFP. Is this a question of console SOFP? No. So forget inventory part. We have to reduce profit definitely. How to reduce profit? By increasing the cost of sales, by increasing cost. If you increase cost, profit will go down. That's why we are adding the unrealized profit in the cost of sales. I believe it is very much clear to all of you. Okay, chalo, what's next? Smeaner company has recognized a revaluation increase on property of 5 million on 31st December 2008. Now tell me, so if you see here, just see, parent company has recognized a revaluation gain of 10,000. Subsidiary company has recognized a revaluation gain of 5,000. So ideally for each of the items of Smeaner company, we have to do 9 by 12. We have to do 9 by 12, right? But Will we do the same for this 5,000 also? Will we do the same for this 5,000 also? So if you read this line, you will get the answer. Isminer company recognized a revaluation increase on property of 5 million on 31st December, means this revaluation gain is recognized on 31st December. So it is entirely post acquisition, and we are not required to do the time apportionment of this. We are not required to do time apportionment of this. Is that clear, guys? Chalo. So if I have to write here revaluation gain, so it is this 5,000, right? So it will be entirely 15,000. Revaluation gain will be 15,000 on the console P&L. So this part also done. Sir, should we add the dividend of NCI in the calculation of NCI? No. Also on 1st April 2008, the parent company, that is Stuipulotu acquired, what type of weird name it is, yaar? Might be I don't know, but I'm sorry, but yes, theek hai. This company acquired 30% of the ordinary equity share capital of Hard Horse Company. Now this is about associate, so I will talk about it later on. I will not talk about it now, I will talk about it later on. And this adjustment is about parent company issuing loan notes. So I will talk about this also later on. So what I want to do is excluding the adjustment 5 and adjustment 6, I want to complete my console P&L. Shall I do it off? I want to complete my console P&L. Chalo, let me complete that first of all. Sir, why are you taking it separately? Because it will get proper attention. Okay, it will get proper attention. I will be able to show what is the effect of the associate in the console P&L. Okay, I will be able to show what it will be the effect of this in the console P&L. I will be able to discuss it exclusively. Chalo, let me prepare group P&L now. So it will be equals to group P&L equals to this plus this multiplied by 9 by 12 minus 15,000. Here you can write working note 2. So what is the cost of sale? Working note 2, 184,125 minus 184,125. Okay, so what is the gross profit? Chalo. Now coming to distribution expense, this plus this multiplied by 9 by 12. Now again, parent plus subsidiary into 9 by 12 minus 375. Okay, now operating profit. Investment income will be this minus 800 because there is no investment income of Isminer. Finance costs will be equals to this plus this multiplied by 9 by 12. Okay, now so what is the profit after tax? This is the profit before tax. Now what is the income tax expense? Income tax expense will be the parent plus subsidiary into 9 by 12. Done. Chalo, we are done with this. Tell me guys, is that clear everyone? Right now, shall we go and deal with these two adjustments of parent? And then so two things are remaining, rather I'll say three things are remaining. One is the associate adjustment, another is the loan note issue adjustment, and third is the allocation of profit to parent and NCI. These three things are remaining, and rest we have already completed this question. Shall we go and adjust these three things? Chalo. Coming to this one, on 1st April 20x5, parent company acquired 30% ordinary, that is equity share capital of Hard Horse. Okay, that is 30% means significant influence is achieved and it is an associate. The parent has significant influence over the Hard Horse company. Okay, the Hard Horse company generated a profit. Okay, so I will write here working note number 4. I will write here working note number 4. Share of profit of associate. Share of profit of associate. Now, what will be the share of profit of associate? Can you please tell me, guys? Come on. What will be the share of profit of associate? So let's write here. Let's compute. So the question says the company has earned, the associate company has earned a profit of 20 million. Okay. It will be 20,000. First of all, the profit for the entire year when we have acquired the associate on 1st April 20x8. On 1st April 20x8. So we have to do the time adjustment of 9 by 12 multiplied by 9 by 12. Now we have to take our share of profit. We have to take our share of profit. So multiplied by, what is the percentage that we have acquired? 30%. 30% is what we have acquired. So this is our share of profit. Okay. Now, further it says the investment in Hard Horse company, that is associate, was found to be impaired by 1 million. So we have to reduce the share of profit by the amount of impairment. Okay. So what I'll do is, minus 1,000. So can you tell me the amount? The amount will be 20,000 into 0.3 into 9 by 12 minus 1,000 is 3500. 3500 is the amount of profit that we have to record in P and L. I believe that is very much clear to all of you. Okay. Now, so let us put that in P and L. Let us put that in P and L. Okay. Now, where we have to put? Just before this one. Sorry. This is the challenge that comes up in practice platform, and it is a real challenge. Okay. Now, so you have to write here share of profit of associate. How much? 3500. And you will have to just give the reference to working. What is the working note number? What is our working note number? 4. Working note number 4. Okay, done. So this is also done. But let me adjust the profit. Is it adjusted already? Yes, it is already adjusted for the same. Chalo, tell me, is it clear, everyone? Is it clear? Now, so one thing already done, but though not asked in the question, but can you please tell me, what will be the carrying amount of investment in associate that we will present in SOFP? It is not asked in the question, but if it asks how to calculate that, so it will be equals to cost of investment. It will be equals to cost of investment plus 3.5, that is 3,500 plus 3,500, that is share of profit minus impairment of investment. Okay. Though not asked in the question, so I'll remove it off. But if it asks, this is how you have to compute. I believe it is very much clear to all of you. Come on, guys, tell me, is it clear? Is it clear to all of you? Is it clear to all of you? Chalo. Done. Now, moving on to working note number 5. 5% loan notes. 5% loan notes. Now, what is it saying? See here. The company issued 10 million 5% loan notes on 1st April 20x8 at a nominal value with interest payable annually in arrears. Okay, now the effective rate of interest is 12%. The initial issue of the loan note has been accounted for correctly, but no other accounting entries has been made. Means the question is saying the company has issued 10 million loan notes and they have very well recorded 10 million loan notes in the accounts. But after that, they have not done anything. After that, they have not done anything. They have not recorded anything. Tell me what to do. Tell me what to do. So we have to record the finance cost. Simple. It is as simple as that. So what we have to do? We have, since it is a question of console P&L, we will record finance costs. We will record finance costs, which is equals to how much? 10,000 multiplied by 12% multiplied by 9 by 12. Tell me, is it clear? Tell me guys, is it clear? Okay, chalo, what is the amount? What is the amount? 10,000 into 0.12 into 9 by 12 is 900. Is 900. 900. So let me add the 900 to the finance costs. Minus 900. Working note number 5. Minus 900. Tell me guys, is that clear everyone? Is that clear everyone? Chalo. Good, good. Now, the only thing remaining is the allocation of the profits. The only thing remaining is the allocation of the profit. Chalo, how to compute the allocation of the profit? So we have to, as I mentioned it yesterday, just calculate what is the amount to be allocated to NCI. The remaining part is for the parent. Okay, so I will write here working note number 6. Allocation of profit to NCI. Okay, sorry, my bad. Bold. Now tell me guys, what is the post acquisition profit of subsidiary? Come on, tell me guys. Post acquisition profit 20,200 is equals to 20,200 multiplied by 9 by 12. Okay, 20,200 multiplied by 9 by 12. Now what are the adjustments which impact the profits of subsidiary? First of all, amortization less amortization. What is the amount of amortization? 375. So it does impact the profitability of subsidiary, so we have to adjust that here. Now this unrealized profit, since subsidiary has sold the goods to parent, so we have to adjust that as well. Less unrealized profit. What is the amount of unrealized profit? 750. So minus 750. Okay, now what else? Dividend, will it impact the profitability of subsidiary? No, it does impact the profitability of the parent company because we reverse the income recognized by parent. Revaluation is an other comprehensive income item. Associate done. That's all. That's all. Okay, so what is the amount? It is this plus this plus this. So what is the share of NCI? 20%. So this multiplied by 0.2. Tell me, is that clear? Is that clear? 2805. Is that clear? Okay. Now, what is the allocation of total comprehensive income to NCI? So it will be equals to this plus what is the revaluation gain? 5,000. Revaluation gain of subsidiary multiplied by 20% will go to NCI. So it will be 3805. It will be 3805. Now we have the answers. We have the answers. Profit allocation to NCI, that is working note number 6. is 2805. And allocation of total comprehensive income to NCI will be working note number 6, and it will be 3805. 3805. Okay, chalo. So what is the amount to be profit? What is the total profit? It is 52375 minus 2805. What is the total comprehensive income? What is the total comprehensive income? It is 67375 minus 3805, which is for NCI. Remaining is for pay rent. Remaining is for pay rent. Is that clear, everyone? Now a query is coming, sir, why we take 5000 ka 20%? Okay, let me explain that. First of all, tell me, is this 2805 clear to all of you? Chalo, what I'll do is I will write it off here. Okay, now, okay, right here, revaluation gain is how much? 5000. That is entirely post, right? That is entirely post. So what is the total comprehensive income? What is the total adjusted comprehensive income? This plus this, right? So what is the NCI's share? What is the NCI's share? 20% of this. 3805. Done. So 5000 is revaluation gain. We have to take the 20% of that. Okay. I believe it is clear to all of you now. Is that clear to all of you? You have to give me a heads up, guys. Is that clear to all of you? Is that clear to all of you? See, we have actually solved this question in the class. While explaining the nuances, I have solved this question in the class as if you have to solve it in the exam. I have shown all the workings, right? I have shown all the workings, and this is how you have to solve in the exam. This is how you have to solve in the exam as well. Is that clear to all of you? Is that clear to all of you? Come on, guys, please tell me. Okay, now moving on to the another next requirement. So we have already prepared the console P&L. Done. Requirement number B, explain the principles behind the accounting treatment of hard horse company and summarize for hard horse specifically how this would be recognized in the statement of financial position. B. Requirement number B. Tell me, hard horse. Point number 1. See how many marks? 4 marks. You have to write 4 points. 4 marks, 4 points. 4 marks, 4 points. Hard horse, we have significant influence, and that's why it is an associate. That's why it is an associate. 1 point. Clear? Right? For associate, okay, entity recognizes using equity method in consolidated financial statements. Second point done. Second point done. Moving on to the third point. Guys, anyone else facing any voice lag issues? Anyone else facing any voice lag issues? Or is it only one student? I think it is only one student. There is no voice lag issue that is coming from my side. I believe so. Mic is perfect. Perfect. Chalo. Cool hai. Now, so significant influence, hence an associate. We will use equity method. We'll use equity method. Second point. Now comes the third point. Now comes the third point. What will be the third point? In the third point, you have to write. In the third point, you will have to actually explain that in consolidated SOFP under equity method, how will you recognize? You will have to write, okay, share of profit will increase the value of investments, will increase the value of investments by 4.5 million, by 4.5 million. And how did we compute 4.5 million? It is the proportionate profit of associate which is parents share only. 1 mark again, and then you have to write carrying amount of investment in associate will reduce by the amount of impairment of investment, that is 1 million. That is 1 million. I believe it is very much clear to all of you. Come on guys, tell me. Clear everyone? Is that clear everyone? Come on guys, tell me please. Okay, now I think we have very well discussed this question. Tell me, shall we move on to the next question now? Mr. Atiti, okay, please understand, this is a very simple treatment of associate that they are asking. Okay, how do we treat associate in the consol financial statements? Using equity method. What is the meaning of equity method? Cost plus share of profit, minus impairment of investments. Simple. That's what we have explained here. See, since there is a significant influence, see here, hard horse, there is a significant influence. Significant influence means what? Power to participate in decision making, which makes it an associate. You can write that line also. That is power to participate in decision making. You can write this statement as well. Okay, now since it is an associate, we have to use equity method. That's all. Okay, chalo. Let us now move on to the next question. Next question here. Now, come on guys, tell me, are these sessions helping you out? Come on guys, please tell me now. Please tell me. Okay, now as I mentioned, in March June 2024 question, it will have section C will have 2 questions. One will be from preparation of financial statements, which is group SOFP in this case, and one will be for interpretation of financial statements. Okay, so now let us start and solve these 2 questions. Okay, chalo. Come on guys, tell me now, before we start the session, before we continue with this session, can I have a huge round of motivation? Come on, all of you, can you please tell me how's the Joes, everyone? Come on guys, tell me how's the Joes, everyone, tell me guys, how's the Joes? Tell me. Hi, sir. Come on. Come on. Each one of you. Come on. Tell me, guys. Come on. Now. Wonderful. This should be the motivation, guys. This should be the motivation. Now, all of you, if you're watching the series, please hit the like button right now. Right now. Please hit the like button right now. Hit the like button right now. Okay, chalo. Now, so first question is from group SOFP. Now, on 1st July 20x9, Miss ACCA Devi, you were saying that you are not able to solve the question on your own, right? So I request you now, please try to understand how I am proceeding in a question. Okay, try to understand how am I solving it. Okay, now the process. On 1st July 2009, Paisley Company acquired $100 million in cash, meaning thereby it is a date of acquisition. Highlight that. Highlight that. Paid $100 million in cash. It is an investment purchase consideration. Highlight that. To acquire 80% of Scottish, it is a percentage acquired. Highlight that. The individual financial statements of Paisley Company and Scottish Company as at 31st December 2009. It is a reporting date. Highlight that. Now, reporting date is 31st December 2009, meaning thereby the reporting period is 1st January 2009 till 31st December 2009. Till 31st December 2009, we have acquired subsidiary on 1st July 2009. Now, tell me one thing, guys. Come on. Tell me, please. So when we are preparing the console SOFP, so we need to understand the reporting period started from 1st January 2009, ended on 31st December 2009. Subsidiary was acquired on 1st July 2009. Okay. Now, parent acquired 80% of subsidiary. So now when we are preparing console SOFP, tell me what to do. We'll take the entire of parent plus subsidiaries multiplied by 80% multiplied by 9 by 12. This is A. B. Parent plus subsidiary multiplied by 9 by 12. Not 9, 6. It is half year, na? 6 by 12 into 6 by 12. C. It is parent plus subsidiary multiplied by 80%. And D is parent plus subsidiary. Tell me which one shall we take in the console SOFP? Tell me which one shall we take it. Please understand it is a console SOFP. Okay. Which one shall we take? A, B, C or D? Students are saying C. Very good. Wow. Students are saying B. Tanya is saying B. Tanya, please understand it is a SOFP. It is SOFP. Meaning thereby if I have acquired subsidiary. Okay. So now subsidiary has a cash of $100. So, but we have acquired subsidiary in the mid of the year. So I will say 100 into 6 by 12. $50 cash is mine. Is it? No, for SOFP, we do not do time apportionment. For SOFP, we don't do time apportionment. See, you guys are doing mistake now also. This is the correct answer. For subsidiary SOFP, we do not do time apportionment. Are you getting my point? If it would have been a question, since it is a question of console SOFP, we will do this. If it would have been a question of console P and L, we would have done this. I believe it is clear to all of you. I believe it is clear to all of you. Chalo. On 1st July 2009, Paisley Company paid $100 million in cash to acquire 80% of Scottish. Okay, the individual financial statements are given. Now comes to the adjustments. Okay, now. So what will I do ideally? Okay, so ideally, if I am being a very ideal student, I will draw the pro forma now. But I am not an ideal student. What I told in the very first day, I will be solving the questions in here in the sessions as if I am actually solving it in the exam. Okay, so now how to deal with it? Okay, how to deal with this? So I will first of all do the workings, and then towards the very end I will prepare console SOFP. So first of all, tell me what should I do? Working note 1. What? From where shall I start? Please understand, whenever the question is of console SOFP, always start with statement of net assets. This should be your first working. And in this one, date of acquisition, post reporting date. What is date of acquisition? 1st July 2009. What is reporting date? 31 December X9. Now, chalo, let us write that. And how will we start with this? Why not start with group structure? You can write that. If you want to write with group structure, you can write that. Okay. Group structure and everything, I always mention that you have to please make a note of it. Okay. But you're not required to write that in the answer. Okay. Okay. Group structure we have taken care of. That reporting date is 31st December 2009. Date of acquisition is 1st July 2009. Percentage acquired is 80%. This is the group structure which I have kept in my mind. Now, so I will start with the net assets of subsidiary. So share capital of subsidiary and retained earnings of subsidiary. Now, what is the see this SOFP is given on 31st December 2009. So what is the balance? 40,000 and 81,700. Now, share capital of subsidiary remains the same. Opening also, no change here. Now, further here. Retained earnings. Does the question give you what is the retained earnings on date of acquisition? So far no, but let us read the adjustments one by one. Okay, now Aisha is saying why not goodwill? Okay, Aisha, tell me, to calculate goodwill you will need what? To calculate goodwill you need three things: purchase consideration, NCI and net assets. Do you have the net assets? Then how will you compute goodwill? Right? To calculate goodwill also you need net assets na. If you don't have net assets, how will you compute goodwill? That's why always start with net assets. Now, The fair value of Scottish company's net assets were equal to the carrying amount with the exception of its head office. The head office had a fair value of 12 million in excess of the carrying amount. Okay, so fair value adjustment. Sorry. Fair value adjustment on in head office. Just fair value adjustment is also fine. 12,000. Write the figures in the exact same format as written in the question. Since the amounts are in thousands, we will also prepare the workings in thousands, the SOFP in thousands, everything will be done in thousands. How to make this table? It's simple, I have made. At the date of acquisition, this had a remaining life of 10 years. So depreciation now of 10 years. Okay, so I will say depreciation will reduce the profitability, so this by 10 years, but I have to take only for 6 months, so that is 600 is the excess depreciation in the post period. Now first adjustment is fairly done, close, deal done. Second adjustment, on 1st July 20x9, Paisley company acquired 40% of Angus. Now this is talking about an associate, so I don't want to talk about associate right now, so I am keeping this on hold. I am keeping this on hold for now. Okay, now Scottish company made a loss of 10 million for the year ended 31st December 20x9. For the entire year, the company made a loss of 10 million. So in the post period, what is the loss? Loss is minus 10,000 into 6 by 12 is negative 5,000. So can you tell me what is the retained earnings at the opening? What is the retained earnings on the date of acquisition? It will be equals to 86,700. How come? This plus this is equals to this one. Okay. Closing minus profit for the current period is equals to opening. So this minus negative 5,000, negative becomes positive. So this plus this is equals to this. So this is also done, but again the profit for the associate company is also given, which I am not taking care of it as of now. I am keeping that on hold, which I'll deal it afterwards, not now. Paisley company and Scottish company both held equity investments. No election has been made to classify them at fair value through other comprehensive income. Means these equity investments are measured at FVT, P and L. At 31st December 2009, these has been correctly increased by 15 million and 3 million respectively, but no entries in the post acquisition period. Okay, so understand all of these gains, please read this line, all of these gains have been made in the post acquisition period. So what will I write? Fair value gain on investments. How much? 3,000. For the subsidiary, parent will record in its own. I am talking only of the subsidiary. Now done. This is also done. Now Scottish and Angus both sold goods to Paisley for many years. Paisley company's financial statement shows, okay, it says none of the goods remained in the group. So will there be any question of unrealized profit? No. So now values NCI at fair value. This is done. So what is the fair value of net assets? Sum. Okay, now so this fair value of net assets, please understand this fair value of net assets on date of acquisition, that is this value will be used to compute goodwill, and this post acquisition profit will be distributed to parent and NCI in the ratio of their holding. So parent will get how much? Parent and NCI. Parent will get how much? 80% of 2600. That is 2080 negative 2080, and NCI will get 2600 into 0.2, 520, negative 520. I believe it is very much clear to everyone. Come on guys, please tell me. Is that clear? Is that clear to all of you? Come on guys, please tell me. Now, since working note number 1 is done, now you will move on to working note number 2, and this will be goodwill or gain on bargain purchase. If it is goodwill, we will record that is a non-current asset, but if it is a gain on bargain purchase, we record that in P and L. But since this is not a question of console P and L, so we will add the gain on bargain purchase to retained earnings. Okay, so now let us evaluate whether it is a case of goodwill or gain on bargain purchase. So for that we need three things. One is the purchase consideration. Then we need fair value of NCI on date of acquisition, and then we need fair value of net assets. Okay, so now I believe we have all three. What is the purchase consideration? 100,000, 100 million, right? But I am writing the figure in thousands. Now NCI fair value is given as 29 million, so it will be 29,000. Net assets we have already computed as 138700. So what is the value? Oh ho, it appears to be gain on bargain purchase. Okay, it is a gain on bargain purchase. It is a gain on bargain purchase. It is a gain on bargain purchase. Tell me, is that clear, everyone? Now, with this, we come to working note number 3. That will be NCI. Now, what is the value of NCI on date of acquisition? It is 29,000 less. What is the post acquisition loss? It is negative 520. Okay. Now, then anything else that has to be adjusted with NCI? I can't think of it here. Anything? No, that's all I believe. Sum 28480. Then working note number 4, console RE. Console RE. So what is the retained earnings of parent? Tell me, guys, what is the retained earnings of parent? That is Paisley company. It is 214,300. 214,300. Then what is the post acquisition loss? It is 2080. Okay, then what else? Add gain on bargain purchase. How much? 97. It is a gain, positive figure. It is a gain, positive figure. Okay, gain on bargain purchase. I think that's all, nothing else. I think that's all, nothing else. So let us add up 221920. Is that clear, everyone? Is that clear, everyone? Anything else that will go to P&L? I believe no, but still let me check it. Anything else that will go to P&L, console P&L? This is done. This is parent associates part, which we'll take care of later on, not now. Yes, one more thing, guys, one more thing. This one, add fair value gain on equity investments of parent, 15,000. This one, this 15 million. This 15 million. Okay, so this is also done. Now we are in a good position to prepare console SOFP. But just do one thing, right here working note number 5. Right here working note number 5. Why? Because there is an associate also now, so we need to find out the value of investment in associate. So just for that I am writing, I am leaving the space, and then I am drawing consolidated statement of financial position as at 31 December 20x9. Now let us quickly draw the pro forma. How to draw the pro forma? Just copy paste from here. Non-current assets property, plant and equipment, investments, investments will come. Then investment in associate will also come, which I'm writing out of because later on I'll not get the space. I'm not writing any figure there, but I'm writing the amounts here. Okay, now the current assets will have again inventories, trade receivables, and cash. Then comes the total assets. Then comes equity, equity capital, retained earnings, then NCI, then non-current liabilities. Under that, loan notes will come. Any deferred consideration? No. Then current liability. Under current liability, trade payables will come up. Then total equity and liabilities will happen. That's all. So now how will you write those figures? How will you write those figures? So it will be 215,000 plus 87,000 plus 12,000 fair value adjustment minus 600 excess depreciation. Investments is how much? 297,000 plus 11,000. Okay, minus subsidiary cost of investment is 100,000 plus 15,000 is the fair value gain of parent and 3,000 is the fair value gain of this one, 3,000 gain of associate subsidiary. Okay, now coming to inventories, 61,300 plus 22,500. Any adjustment to the inventory? No, I can't think of it. 37,100 plus 15,600 done. Cash 1,300 plus 9,200 done. Then equity will take only for the parent, not of the subsidiary. Be careful here. 270,000 not for the subsidiary. Even retained earnings, I think we have already found out the retained earnings, so I'll take that figure of retained earnings. It is 236,920. It is 236,920. Okay, and equity is here 270,000. Now NCI also, I think we have already found out. NCI is 28480, so we'll take the same figure, 28480. Okay, so you can give the reference to the working notes here. You can give the reference to the working notes here. Working note number this, working note number this. You can give the reference to that. Loan liabilities will be 78,000 plus 5,300. Then trade payables will be 49,400 plus 18,300. Now what we'll do is we'll run through the adjustments and see what are the other adjustments that we have to do to the console SOFP. Okay, so now quickly let's run quickly. This 100 million we have already removed from the investments because it is adjusted in the process of consolidation, so it is sorted, done. First adjustment, fair value adjustment and excess depreciation, we have already done that, done. Associate, I'm not looking at it. Post acquisition loss, we have already done it, no need to look at it again. Okay, now 15 million and 3 million we have already adjusted in the profit and also in the investments figure also, it is already done here, see. So no need to take care of it further. Now Scottish and Angus have both sold goods to Paisley for many years. None of these goods remained in the group. Fine. Now Paisley company's financial statements shows $5 million payable to Scottish. So parent has to pay 5 million to Scottish. This disagreed with the receivable in the book of Scottish due to 2 million payment made by Paisley. So what is happening here? Please try to understand. Parent is saying a payable of $5 million. Subsidiary is saying a receivable of 7 million. There is disagreement. There is a disagreement. Okay. Now not 7 million, right? It has not said 7 million, right? So now it says the receivable balance is not 5 million. It is not 5 million. It is not 5 million. It is not 5 million. There is a disagreement. And it says 2 million has been transferred by parent to subsidiary, which is not yet received by subsidiary. So what will happen? What will happen? Parents' balance ideally would have been 7 million. Paid 2 million, hence become 5 million. Receivable balance would have been 7 million and still it is 7 million only. Okay. So now what happens? What we will do here is coming back to the screen. So what we have to do is we have to remove the balances as it is. So from trade receivable, we'll eliminate 7,000. From cash in cash, I will add 2,000 cash in transit, and from trade payables I will eliminate 5,000 contra. This is what we have to do, and the console SOFP is ready. It is ready, guys. It is ready. Now, for your sake, can you please tell me the final figures? Come on, guys. Can you please tell me the final figures? Chalo, quickly, tell me. 215,000 plus 87,000 plus 12,000 minus 600. It is 313,400. 297,000 plus 11,000 minus 100,000 plus 18,000. It is 226,000. Okay, then investment associate, let's ignore for now. 61,300 plus 22,500. It is 83,800. Then 37,100 plus 15,600 minus 7,000. It is 45,700. Then 1300 plus 9200 plus 2,000. It is 12,500. Ideally, I should leave this to you guys. This much you should do. But okay, still, I think since I'm solving it, I thought why not solve it entirely, completely itself. Okay. Now, equity will be entirely 270,000. Retained earning will be these two amounts, retained earning and this one. Done. Non-current liability will be 78,000 plus 5,300 is 83,300. Now, current liability is 49,400 plus 18,300 minus 5,000 is 62,700. Is 62,700. Tell me, is that clear, everyone? Is it clear, everyone? We have not yet taken care of the associate so far. Okay, this is the group P&L. So now let us see if the group SOFP, not P&L, group SOFP. So total assets will be this sum. Bold. Sum. $681,400, $681,400, SOFP tallied, yay! Come on, guys, tell me, is that clear to all of you? Now, one thing remaining is associates. So now let us come to that associate and close that also. Okay. First thing is, what is the investment in associate? Investment in associate. What is the cost? 40% is acquired at 30 million. In addition to this, Paisley issued to the previous owners of Angus 30 million shares in Paisley, which had a market value of 2.3 each on 1st July. The total consideration exceeds the group shares of Angus net assets. Paisley company has only recorded cash consideration. Okay. So what is the cost? So first of all, it's cash consideration. Cash consideration is how much? 30,000. Now, fair value of share exchange. What is the amount? Tell me. $30 million shares. 30,000 multiplied by 2.3 each is 69,000. ठीक है. Now, so only 30,000 is recorded in the console SOFP. This one, as part of these investments, only 30,000 is recorded. So what I'll do, you know what? So I will do minus 30,000 and I will do plus 30,000 here. Okay. Now, Angus company made a profit of 6 million for the same period. Share of profit, it is 6,000 multiplied by 6 by 12 multiplied by how much? 40%. So what is the amount? 6,000 into 0.4 by 2 is 1200. Okay, chalo. So what is the total amount? Sum 100 200. How to account for it, I'll guide you. But share of profit has to be added here also. Add share of profit of associate. How much? 1200. Okay, now, so how will this change? I'll guide you one by one. First of all, this 30,000 I reclassified from here to here. Now, what about share exchange? So the share exchange will first of all increase the value of the investments by 69,000 and it will increase the equity capital. It will increase the equity capital by 30,000 into 1 by the amount of face value will come up here. Okay, so it is 300,000 and in one more column will come here. One more, not column, row will come here. Sorry. By the name share premium. By the name share premium. Now in share premium, what will happen? 30,000 multiplied by 2.3 minus 1 is how much? 39,000. Okay. Clear everyone? Now share premium is done. This is done. Now comes the share of profit of associate, which will be added here. 1200. Okay. Now which will be added in console RE also. Plus 1200. Okay, since we have already adjusted here in 1200, so I can directly link here. Done. This is done. So now can you write the value of investment in associate? It will be 100,200. Is the SOFP tallying now? Is the SOFP tallying now? So we have to do the adjustments here also, na? 226 minus 30,000. 226,000 minus 30,000. It is 196,000. Done. Is the SOFP tallying? Yes. 751,600, 751,600. Now, first point, we should celebrate. SOFP is tallying. But one more point. A student asked me a query, and a very genuine query, guys. Whichever queries are genuine one, definitely I take it up. Okay. Total consideration exceeds the group shares of Angus net assets. What is the meaning of this line? Shall I go and do some analysis on this statement? Tell me, shall I go and do some analysis of this statement? Okay, chalo. Let me do some analysis. Please understand. This is parent. This is Angus. Parent invested how much? 99,000 and received how much shares? 40%. Net assets of Angus is 200,000. Is 200,000. So tell me, what is the parent's share of net assets? Investment is 99,000. Parent's share of net assets is 80,000. That is 40% is 80,000. 80,000. It means you will have to disclose a goodwill of 19,000 in the notes to accounts. But sir, what if the reverse situation is given? That is, let's suppose rather than 80,000, let's suppose rather than 80,000, this is 105,000. Then what will happen? So please understand, my dear students, if this was the situation, disclose goodwill in notes to accounts. But if this is the situation, there comes a gain on bargain purchase of 6,000. Then in this case, okay, the entry will be investment account debit to gain on bargain purchase to P&L. 6,000. You have to, that is, recognize as cost, recognize or add to the cost of investment. Add to the cost of investment. Tell me, is that clear, everyone? Is that clear, everyone? Come on, guys, please tell me. Okay, chalo. Now with this we complete this one, and also you can write here, just a minute. In the bracket I can write here goodwill 19,000. That's all. Just disclose. Just disclose. Don't write in the final column. Just disclose. Now coming to the requirement number B. What is the requirement number B? Explain the rationale behind elimination of the intra-group balances and unrealized profit in relation to the sales made from a parent company to subsidiary company. 2 marks. Why are we eliminating? Why are we eliminating the intra-group balances from the trade receivable, trade payable and the unrealized profit? Why? You have to write why. So for that, the reason is we prepare the consolidated financial statements from the point of view of single economic entity. Okay, that is parent and subsidiary is a one company now. Can a one company record payable or receivable among themselves? No. Can a group company, can a one company record a profit among themselves? No. Right? So let's suppose if I transfer money from this pocket to this pocket, will I say it is my income? No. No. Right? Now tell me, my father gives me rupees 1 lakh. Tell me, from a family point of view, is this 1 lakh an income? No. I owe 1 lakh, I have to give to my father. Okay, I took a loan of rupees 1 lakh from my father. Tell me, which I have to repay it to him. So from a family point of view, is there a receivable or a payable? No. Right? But if you see individually, Vishal Jain, yes, there is a payable. But if you see family point of view, no receivable, no payable, right? So we record only the receivable and payable which are due to be paid or received from the third parties, not within the group, not within the group. This is what you have to write in this question, with important key term. Two key terms which you have to write. One is single economic entity concept. Second key term is third parties. We record the receivable or payables or the profit which are from the third parties. Done. This is how you have to complete, and this completes our question. Tell me, guys, is that clear to all of you? Is that clear to all of you? Come on, guys, please tell me. And if you're watching these sessions and not liking it, which is very bad, very bad, very bad, very, very, very bad. Okay, and you know what, this is why you were not able to solve the questions on your own, because you didn't like the session. Okay, so I say all of you, come on guys, please hit the like button right now. Okay, chalo, now we will start with the next question of this exam paper. Ankush Pandey, I have not yet planned. If there is a plan, we'll announce on YouTube, but as of now there is no such plan. Okay, Savreed Kaur is asking, can you please explain why 30,000 is reduced from the investments? Because that was the cost of investment of associate. So I removed from the investments and added to the cost of investment. It's just a reclassification I did. It's just a reclassification that I have done. Just a reclassification that I have done. Please see. Minus from here plus here plus here, just a reclassification, that's all. Chalo, let us start this question. We are solving the question of September December 2024. Okay, let's not confuse ourselves. Trial balance is given. This is a question of preparation of single entity financial statements. Trial balance is given in the question. Okay, now in the trial balance, properties cost is given, equipments cost is given, and accumulated depreciation is given as at the beginning of the year, because year end is 31st December 20x1. It means that depreciation for the current year is not yet charged. Point number 1 to be taken care of. Point number 2, which is important, is the retained earnings is given at the beginning of the year, and the draft profit is given here. The draft profit for the current year is given here in the trial balance. Now the question is giving you the draft profit. Question has given you the adjustments. The question has given you all the adjustments, and the requirement is asking you to calculate the adjusted profit. So how will you arrive at adjusted profit? The draft profit that is given in the trial balance plus or minus the adjustments which are given in the additional information, okay, which will give us the adjusted profit. Now this adjusted profit will be added to the retained earnings. Is that clear to all of you? Come on guys, can you please confirm in the chat box? Is that clear to all of you? Okay, so now what we will do is we will first of all read the additional information one by one and start making the adjustments. Okay, chalo. But keep in mind the reporting date is 31st December 20x1. Very important part. Okay, chalo, let us start discussing it one by one. Now it says on 1st July 20x1, on 1st July 20x1, Newcraighall Company received a $5 million loan. Now again, I have said in the previous classes also, and I again repeat it today, Whenever you are preparing the solution or doing any workings, always try to use the same format given in the question. My mic is working properly, guys. Are you not able to hear me properly? Anyone facing challenges? Audio is perfect. Now, on 1st July 20x1, that is mid of the year, the company received a 5 million loan, that is, I will say 5,000. How much? At the rate of 8% loan that is received. Okay, and the loan was accounted for correctly at that date. When we received the loan, we have accounted for it correctly. It is due for repayment on 31st December 20x6, meaning thereby it is a non-current loan. Okay, the interest is payable annually in arrears. Please make a note of it. Interest is payable annually in arrears. Okay, so at the end of the year, we pay the interest. Okay, payable annually. Now, when will this annually start? Tell me, when are we going to make the first payment of interest? On 30th June 20x2. We are going to make the first payment on 30th June 20x2, right? Annually in arrears, meaning thereby whenever we have taken the loan, from that date annually will start. Point number 1. Now tell me, what is our reporting date? Our reporting date is 31st December 20x1. So by 31st December 20x1, some part of the interest would have accrued. Some part of the interest, that is from 1st July 20x1 till 31st December 20x1 would have accrued, but not yet paid, because it will get paid on 30th June 20x2. So you have to accrue and record the expense for the same. So what is the amount of interest? Can you please tell me the amount of interest? It will be 5,000 multiplied by 8% multiplied by 6 by 12, which is equals to 200. Now, the question says the loan that we have taken of 5 million was used to fully fund the construction of new building. Apply IAS 23. When we take a loan to fund the construction, then the borrowing cost incurred on the loan is capitalized to the cost of the asset. The construction cost has been correctly capitalized, but no other accounting entries has been made in respect of the property or the loan being made since that date. Okay, so what we'll do? What will be the treatment for this one? We will have to record property account debit to interest payable 200. Tell me, is that clear, everyone? Ideally, if this paragraph would not have been given, I will write expense, interest expense, but since we have to capitalize to the property, I am writing it here, property. Now tell me, do I need to make any adjustments on the profitability? Do I need to make any adjustments on to the draft profit for this one? No. Why? Interest was not yet recorded. Okay, it was not recorded. So we are recording it here. In this journal entry, do you see any P&L impact? No. No P&L impact. So will we adjust anything here? No, nothing to be adjusted here. Okay. Now moving on to the next part. Second, on 1st December 20x1, Newcraighall Company. Guys, one more point. This question of Newcraighall Company, I can say it is a master question for single entity financial statements. It's a master question for single entity financial statements. Okay. Now, and all of you who are watching the session, and if you're not liking, it's very bad. Okay. Come on, guys. All of you, can you please hit the like button right now? Can you please hit the like button right now? All of you, can you please hit the like button right now? Okay. Now, chalo. On 1st December 20x1, Newcraighall company placed the order for the equipment at a cost of 3 million. The cost was included within the equipment and trade payables. The equipment was received and paid on 6th January 20x2. Tell me guys, please. On 1st December, our reporting date is 31st December. Okay. On 1st December, I just thought I want to purchase a machine. I just thought I want to purchase a machine, and I called my friend, buddy, I need to purchase a machine. Can you please give me the machine? He told, yes, Vishal, I will give you the machine, but I will give you on 6th of January. I will give you here on 6th of January. Then I'm like, shall I pay you the money now? He's like, no. Whenever you get the machine, that day itself you pay the money. Tell me, neither I have received the machine nor I have paid the money. Tell me, do I need to record any accounting entry here? No. So on this date, we have to record the treatment. On this date, there will be no treatment. But what the company has done? What has the company done? See here. The cost was included within the equipment and trade payables. Is that correct? No. So to rectify, what we will do? To rectify, what we have to do? So to rectify, we have to reverse. So we will do trade payables account debit to equipment. Reduce equipment and reduce trade payables. By what amount? 3,000. Is that clear, everyone? Is that clear, everyone? Now, the third point is for the depreciation. So let's hold it. We'll discuss about depreciation at the last, not now. The financial assets are 3% bonds, which were acquired at a cost of $3.5 million. Okay, which were acquired at a cost of $3.5 million, and on which Newcraighall company intends to keep until maturity. Means it is a financial asset at amortized cost method. Okay, now understand. The transaction cost was 0.5 million. Tell me, what is the treatment of the transaction cost? What is the treatment of the transaction cost in case of financial asset at amortized cost method? It is capitalized to the cost of the asset. But what is the treatment done? The bonds were capitalized at 3.5 million and the transaction costs were expensed. Oh my god, this is a wrong treatment, guys. This is a wrong treatment. So how to rectify this treatment? So we'll increase FA, we'll increase financial asset by what amount? 500, and we will reduce P and L. 500. So what will happen here in the P and L? I'll write here, add a page. Okay, or okay, ठीक है. Please come here. Draft profit is given as how much? 4420. Okay, then transaction cost is considered as expense, which we have to reverse. So add transaction cost on financial assets. How much? 500. How much? 500. Now further, what else? The bonds have an effective interest rate of 7%. The Newcraighall company received the annual receipt of 105,000 and recognized this as income. Oh my bad. They have recorded a finance income of how much? 105,000. But this is wrong. So what is the correct finance income? Can you please tell me? What is the correct finance income? it should be finance income, correct, should be 4,000 multiplied by 7%. 4,000 multiplied by 0.07 is 280. Correct finance income is 280. So we have to record the financial income. We have to record the financial income, extra financial income. How much? Okay. So rather I'll say here, I'll do it this way. I'll do it this way. Less incorrect finance income 105, we will remove it, add correct finance income. I believe you are understanding why we are adding and why we are subtracting. Okay, how much is the correct finance income? 280. It will increase my profits. Just think whether it will increase the profit or decrease the profit, and accordingly do the plus or minus. Okay, chalo, deal done. Now can you tell me, as a result of this, just I am making one working note here. Working note number 1. Can you tell me for what is the correct FA at 31st December 20x 20x, what is it, the year end? X1, 31st December 20x1. What will the amount of correct FA? So correct FA will be, initial is 4,000, finance income is 280, receipts is 105. Therefore, closing balance is how much? 4,000 plus 280 minus 105 is 4175. This is the closing FA. Okay, chalo. Now further it says, point number 5. I believe it is clear to all of you till here. Come on guys, please tell me. I believe it is clear to all of you till here. And that's the reason I took this question on my iPad, because I had to explain a lot of working notes with you guys. That's the reason I took it in the iPad. Okay, chalo. On 1st January 20x1, it says Newcraighall. So can we add net income directly? Yes, you can do that, but there are chances of making a mistake. That's why I always say that, okay, do it this way. At least you will not make a mistake. But if you are doing net also, is it correct? Yes, it is very well correct. No challenge at all. Now adjustment number 5. On 1st January 2001, means at the beginning of the year, Newcraighall company entered into 5-year lease of equipment. The equipment had a useful life of 5 years. Okay, chalo. The Newcraighall company will make 5 payments of 2.4 million on 1st January each year. Payment at the beginning of the year, including on the commencement date. Meaning thereby it is a lease payment in advance. Using the implicit rate of 13%, present value of the future lease payments after the first payment is 7.139 million. Now what is the meaning of this? I have seen students struggling with this point. So please understand guys the meaning of this one. Lease term is 5 years. 1, 2, 3, 4, 5. So the lease payment is 2.4 million. So 2.4 million is being paid here, and here. Okay. So now this present value of these is 7.139 million. This is the meaning. Present value of future lease payments. You are standing here. So future is these, right? These are future lease payments. Okay. Now further it says 2.4 million paid on this date. This payment was expensed. Do we expense this lease payment? No, that's wrong. That's wrong. That's wrong. And no other accounting treatment was performed. So please understand what is the correct and what is wrong happening here. What is the correct treatment and what is wrong happening here? First of all, understand the correct treatment. Or let's understand the wrong treatment. What they have done wrong. They have recorded a rent expense in P&L account debit to bank 2400. Whatever lease payments was paid in the current year, they have recorded that as a rent expense, which is a part of operating expense. Okay. Now, what is the correct treatment? What is the correct treatment? The correct treatment. The correct treatment will be on lease commencement date. You should record ROU asset account debit to lease liability and to bank. Lease liability is 7139. Payment we have made is 2400. So ROU will be 9539. Do you agree with me? Now, subsequently at year end, you record finance costs of how much? You record finance cost how much? It will be 7139 multiplied by what is the interest rate? 13%. Since the lease was taken at the beginning of the year, so it will be for the entire year, and this amount is 928. And what is the value of lease liability at 31st December 20x1 will be equals to 7139 plus finance cost of 928 is equals to how much? Now you will say, sir, why are you not doing minus lease payments? Because the lease payments are paid at the beginning of the year, and this 7139 is excluding the lease payment for the beginning of the year, is already adjusted for the payment of lease. Okay, so it will be 7139 minus plus on 7139 plus 928. It is 8067. 8067. Now, can you please tell me what is the breakup of this for current and non-current? For current and non-current, if you can recall, I have always mentioned in the class. I have always mentioned in the class. Okay, in our regular lectures, we do mention it again and again and again. You have to break the lease liability into current and non-current and then present in the SOFP. If you just write 8067 in SOFP, your marks will be deducted for the same. Sir, how many marks? At least 1 or 2 marks will be deducted for non-classification of lease liability. Okay, now how to classify? Since the lease payments are paid at the beginning of the year, hence the current lease liability will be equals to payment made at the beginning of the next year, that is 2400. What will be non-current liability? Non-current, it will be the balancing figure, that is 8067 minus 2400, that is equals to how much? 8067 minus 2400, it is 5667. Now please understand, this is the case because lease payments are made at the beginning of the year. But if lease payments are made at the end of the year, do we calculate the classification this way? No. If the lease payments are made at the end of the year, then the non-current liability will be balanced at the end of the next year, and the remaining part is the current liability. Okay, I have already explained these things in my revision lectures. Okay, in the marathon which I take, in the revision lectures, I have already mentioned this and shown the calculation also. Okay, now again, second, for you will also record depreciation. You will also record depreciation. What will be depreciation? The entire amount of ROU will be depreciated over the lease term of 5 years, and the depreciation will be 9539 divided by 5 is 1908. And what will be the balance of ROU at year end? It will be 9539 minus 1908. It is equals to 9539 minus 1908. It is 7631. Is that clear, everyone? Easy peasy. Is that clear, everyone? Come on, guys, tell me. Okay. Now the next part is current tax payable. Okay, but before going to the current tax payable, shall we adjust here in the draft profit? So what we have to do, we have to first of all add lease payment, because that was reduced from the P&L, right? That was considered as an expense. So we have to add up lease payments of 2400, and we have to reduce what? Finance costs on lease liability and less depreciation on ROU asset. It is 928. It is 1908. Done. What's next? The current tax payable is 680,000. So what is the entry for this? What is the journal entry to record this one? So it will be current tax expense account debit to current tax liability. Current tax liability of how much? 680. Of how much? 680. Okay, so this is also, this will, current tax expense will also go to P&L. So I will have to reduce that also. So less tax expense, how much? Minus 680. Now done, I think. What else? In the financial statements for the year ended 31st December 20x1, Newcraighall Company planned to disclose a contingent asset of 1.2 million. Okay, on 30th December, just one day before the reporting date, the court ruled out that the company would receive only $1 million. Means it became virtually certain. And we have to recognize this as an asset and income. So what is the journal entry for this? Asset account debit to P&L. How much? 1000. Okay, chalo. Let's write that here. Add receivable, court ruling, 1000. Okay, now this will give me the final profit. Can you please calculate the final profit, guys? Can you please compute the final profit? It is 4420 plus 500 minus 105 plus 280 plus 2400 minus 928 minus 1908 minus 680 plus 1000. Rest 200. Why 200? Why 200? Why do you want to add 200? Tell me please, guys. I don't think so it should be added. Now, okay, ठीक है, चलो. It is coming as 4979, right? We are still to consider something in this one, but still you can't finalize this one right now. If you can recall, I think I have not yet considered depreciation right now, depreciation of the property and depreciation of the equipment, which I said I will deal later on. Now is the time I will deal with the depreciation. Add page, depreciation. First point is property. What is the amount of property? Can you please tell me? Cost is how much? What is the cost of property? Cost of property is 32,500 and ACCA is 9,200. Come here. Cost is 32,500 and accumulated depreciation at the beginning of the year is 9,200. Okay, chalo. Now, what is said about the depreciation here? Property includes land at a cost of 12 million. Property includes land at a cost of 12 million. So, do we depreciate land? No, we do not depreciate land, right? So, right here, this and this, land and other properties. Land is 12,000. So, what is the rest? 32,500 minus 12,000 is 20,500. So, we have to depreciate 20,500. But if you can recall, the question said here, this part, the 5 million was used to fully fund the construction of the new building. The construction cost has been correctly capitalized. So now tell me, we are still constructing. Will we depreciate it? Will we depreciate this 5 million now? Will we depreciate this 5 million now? No. Why? Because the construction will get over on 31st January. That is beginning of the next year. Okay. And until the construction is completed, we can't depreciate it. So we can't depreciate this asset. 5,000. So minus 5,000, we can't depreciate it. The remaining part we can depreciate. 15,500 we can depreciate over 20 years. So what is the depreciation? It will be 15,500 divided by 20. It is equals to 775. Clear? Now, so what is the carrying amount of property? It will be 12,000 for the land. 12,000 for the land plus 20,500 for the property. 20,500 for the property minus 9,200 is the accumulated depreciation, minus 775 is the depreciation for the current year, plus 200 is the interest that is being capitalized. So what is the carrying amount? 12,000 plus 20,500 minus 9,200 minus 775 plus 200 is 22,725. Is that clear? Now moving on to equipment, the depreciation of equipment. The depreciation of equipment. The depreciation of equipment. Now, what does the question say about equipment? Can you please tell me, first of all, the cost and the accumulated depreciation? The cost is 16,200, ACCA is 8,420. Cost is 16,200 minus ACCA at the beginning of the year is 8,420. So the carrying amount is how much? 16,200 minus 8420 is 7780. Now, do you remember that equipment? Do you remember that equipment which which we have received after the year end, but we have capitalized? So we have to reverse that equipment. If you can see that here, I passed that journal entry also. See that here, trade payables account debit to equipment. So equipment has to be reduced by 3,000. How can we record an equipment that we have not yet received? That is 4780. So what is the depreciation on equipment? What is the depreciation on equipment? Equipment has to be depreciated at 25% reducing balance method. At the rate of 25% WDV. 4780 into 0.25 is 1195. Now comes the question, what is the carrying amount of equipment? What is the carrying amount of equipment? So the carrying amount of equipment will be 4780 minus 1195 is equals to how much? 3585. 3585. Is that clear, everyone? So now here I can say minus depreciation also has to be done, less depreciation, uh, 775 plus 1195. That is how much? 775 plus 1195, 1970. So what is the amount? It's 4979, 3009. Is that clear, everyone? Is that clear, everyone? Come on, guys, tell me. Now, can we prepare the can we prepare the final SOFP? Can we prepare the final SOFP now? Chalo, let us prepare the final SOFP now. Okay, now. Now, shall we go and prepare the final SOFP in the ACCA practice platform? I believe we should go and solve it there. Chalo. Final SOFP. Chalo, tell me. Come on. Statement of financial position. Okay. As at 31 December 20x1. Okay. Chalo. First is assets. Then is non-current assets. Now under non-current assets, first one that will come is property, plant and equipment. Okay, now you have to give the reference to the working note which you have done here. Okay, and write the figures here. So now though I will write here, though you have to give the reference to working, but I will be writing it plainly here as per the calculation that we have done already. Okay, so for carrying amount of property we calculated 22725 plus equipment we calculated as 3585. Okay, so this will be shown here as 22725 plus 3585 is 26310. 26310. Don't worry, I'll show it to you. Now what else? I need question. Question is here kya? Okay, question is here. ठीक है. Property, plant and equipment done. Then ROU asset. So right here, right to use asset. We calculated that also. How much? 7631. 7631. Then what else? Financial asset. Financial asset we calculate that also. How much we calculate financial asset? Can you please tell me how much did we compute as financial asset? It was 4175. 4175. Right? Now what else? Property done, equipment done, financial asset done. Then comes the current assets. Current assets. Under current assets, you will write inventories, trade receivables, okay, inventories, trade receivables, cash, okay, and one more we have, right, that other current assets, other current asset, the court ruling one, 1000. Okay, trade receivable is how much? 2810. Any adjustment for trade receivable? I don't think so. Now inventories is how much? 4640. Any adjustment on inventories? No. Done. Done. Sir, what about cash? See, cash is negative balance, credit balance. Okay, so it's a liability. It's a bank overdraft. It will be a bank overdraft. Now, Savreet is asking why lease payment is taken in P&L. See, because question is saying here, please read the question. Okay, it says, where does it say? The lease payment was expensed. This is wrong. The lease payment is expense. This is wrong. So we are removing from P&L. We are not considering in P&L. We are removing from P&L. Okay. We are removing it from the P&L and we are adjusting finance cost and depreciation in P&L for the lease payments. So this is all about the current assets and non-current assets, right? Can you please do the total? Can we please do the total assets? Total assets sum. Done. Now comes equity and liabilities. So what do you think? Our balance, our SOFP will tally or not? The biggest question in the life of a commerce student is, will SOFP tally or not? So tell me guys, come on, what do you think? Will our SOFP tally, yes or no? Equity capital. So tell me, what is equity capital? Equity capital is 14,000. So let's write 14,000. Okay, then retained earnings. What was retained earnings at the beginning of the year? 12620. And what is the profit for the current year? 3009. So can you please add up 12620 plus 3009 is 15629. 15629. Done. Anything else in the equity? No. And then non-current liability. In non-current liability, what will come? Can you please tell me, guys? Loan payable. Loan payable. Loan payable will come. Loan payable will come. Okay, loan payable of 5,000. But what about the interest? What about the interest? Tell me guys, what about the interest? Interest will be paid after 6 months from reporting date. Interest is payable annually, right? So interest has to be paid after 6 months. Hence interest is a current liability. So I'll write here under current liabilities. No, but first of all, let me complete non-current. Lease liability. Lease liability. What is the non-current portion of lease liability? I believe we computed the same as 5667. We have already done these workings. Then comes current liabilities. What are current liabilities? Come on guys, tell me. First is how much? Tell me what else. Let me see here. Trade and other payables. Current tax payable. Current tax payable. How much? 680. Then bank overdraft. How much? 210. How much? 210. This 210 is coming from this one. Okay, then what? Trade and other payables. Trade and other payables. Now, what will come under trade and other payables? So understand, trade payable 5780 5780. Pakka 5780. Acha, theek hai. Now, in this we have to first of all add 200 for the interest and remove 3000. Why 3000? For the equipment. For the equipment. See here, equipment. This cost was included within equipment and trade payables. So we have to remove this 3000, not 300, 3000. So what is the amount? 5780 minus 3000 plus 200 is 2980. Is 2980. So what is the amount? Sum. Done? Is it done, guys? Is it done, guys? Now, one more thing. One more thing. I think one more thing. Lease liability. Current. So what do you think, our SOFP is telling or not? What do you think, our SOFP is telling or not? I have kept the examiner report also with me. And I will discuss the examiner report now. But first of all, tell me, is that clear, everyone? Come on, guys, tell me. I believe we have spent as good as 1 hour to solve this question, but it was whole worth it. Now, one student was asking, sir, can you please show how to do the working notes in the exam? Yes, I will show that also. Don't worry. Vishal Jain is here. Why to worry? When Vishal Jain is here, why to worry? So please understand, guys, the working notes. So working note number 1 will be for interest. Okay, so compute interest first of all, and then pass journal entry. Okay, then working note number 2 will be for equipment and trade payable. Pass rectification journal. Working note number 3 for lease. Okay, for lease, you prepare lease liability, lease amortization schedule for year 1 and ROU depreciation schedule for year 1. Simple, make it simple, done. Okay, that's all, done. Working note number 4 for financial asset. Okay, so you have to say for financial asset you have to say financial asset purchase price 3500, add transaction costs 500. Okay, then this gives you the initial value. Okay, now then interest, sorry, not finance income at effective interest rate. Okay, then so the calculation here, that is 4000 multiplied by 7%. Okay, right here 280 less receipts minus 105, and then this plus this plus this. Okay, this is the closing balance. Okay, similarly for working note number 5 for property, similarly working note number 6 for equipment, Okay, this is how you have to show. Will it be possible for you to show the workings now? Right, you understood the fair idea how to do the workings. You got the fair idea, everyone? So with this, we complete this question. But before we move on to the next question, let me just run you through the examiner reports. Just give me a minute. Let me run you through the examiner report comments. See here. Students are required to show their workings. Comes the question, why to show the workings? It says, see, if you have not shown the working and your answer is correct, you will get full marks for that. But if your answer is wrong, if your answer is wrong and you have not shown the working, you will get a marks reduction there. Please understand how. Let's suppose you calculated depreciation. Okay, you calculated depreciation. Okay, now this was wrong. So definitely, even if you have shown the working and this is wrong, you will get 0 marks for this one. Okay, but since depreciation is wrong, your carrying amount of property will also be wrong. The carrying amount of property will also be wrong. But if you show how you have arrived at the carrying amount of property, this is the cost, this is the accumulated depreciation at the beginning of the year, this is the depreciation for the current year. Now this depreciation amount is wrong ideally, okay? But still, if you have shown this, you will get full marks for this one. Okay, that's the reason why we always say you need to show the workings, because when you show the workings, you are giving a detailed explanation to the examining. You are making the life of examiner easy. Okay, now if the answer is incorrect and in the absence of relevant working, no marks will be awarded for the same. Okay, the marking team always award credit for own figure rule, that is consequential marks, but this is only possible with accompanying workings. Now again, see here, the final profit, that is 3009 in our case, will be transferred to retained earnings. Okay, now for each rectification, you have to pass journal entries. So for each rectification, you have to pass journal entries. You have to pass journal entries for each rectification. Okay, even if you don't pass journal entry, you will not get a marks reduction, but if you write a journal entry, things will become quite very easy for you. The chances of making mistake in the exam will reduce considerably. Okay, that's what is the examining team recommending you here. Okay, this is all the comment from the examining team from this question point of view. So this is a question of Gibraltar Company, question of single entity financial statements, where the primary requirement of the question is statement of profit or loss. There are few other requirements also, which is statement of changes in equity and the basic earning per share of the, okay, these are the secondary requirements of the question, but yes, the primary requirement is a statement of profit or loss, which will definitely cater to in this question. Okay, chalo, let us read the question and try to answer it. Okay, first of all, It says, following is an extract from the draft trial balance of Gibraltar Company as at 31st October 2003. Always make a note of the reporting date and highlight that. Highlight the reporting date. Highlight the reporting date. Highlight the reporting date. Okay, now. Further, land at a carrying amount at 31st October 2003. Land at carrying amount of 31st October 2003. Now, please understand, my dear friends. The reporting date is 31st October 2003 and the carrying amount of 31st October 2003 is given for the land and for the building. What does that imply? What does that imply? So it basically means that buildings are already depreciated for the current year. Are we required to post further depreciation? No. Land is anyways not depreciated, but buildings are depreciated. But since the carrying amount is given as at the reporting date, it simply means that it is already depreciated. Depreciation is already accounted for and we are not required to account for any further depreciation. Investments at fair value through P&L. Investments through fair value through other comprehensive income. Okay, both type of investments are given in the question. Share capital is given at the beginning of the year. Might be the case there are some movements in the share capital during the current year. Share premium is also given at the beginning of the year. It might be the case that there are certain movements in share premium during the current year. Revaluation surplus is also given at the beginning of the year, means there might be a situation where the revaluation surplus, there is a movement in the revaluation surplus during the current year. Retained earnings is also given at the beginning of the year, so we have to prepare P&L and post that to retained earnings to arrive at the balance of retained earnings at the year end. Now, P&L items are given: revenue, cost of sales, distribution cost, admin expenses, other income, income tax expense. All these items are given here. Okay, now what we will do, we now know we have to prepare a statement of profit or loss. I will not read the other two requirements, let's keep that aside. Now what I'll do is I will read the adjustments. I will read the adjustments and account for it. But what I will request, please understand one thing. If a question comes from console SOFP, if a question comes from console SOFP or console P&L, I have always mentioned that you first do the working notes and then prepare the console SOFP or console P&L. Okay, because the working notes are fixed, because we have to prepare a statement of net assets, we have to prepare goodwill, we have to prepare console RE, we have to prepare NCI. These four working notes are fixed, which we have to prepare anyways. Right? So in the questions of console SOFP or console P&L, I have always mentioned that first of all do the working notes and then prepare the console SOFP or console P&L. But when it comes to single entity financial statements, whether it is SOFP or P&L, I have always mentioned, first of all, draw the pro forma of the financial statements, and according to the need you start doing the workings. Okay, and that's what is the approach which I am going to take today as well. Okay, so what I'll do is, since the requirement is statement of profit and loss, so I'm writing here requirement A, statement of profit or loss for the year ended 31 October 2003. But if a student particularly wants to first of all do all the workings and then come to the statement of profit or loss, can he or she do it? Yes, you can do it. Okay, examiner will not be deducting even a single mark Okay, if you are doing the workings first and then showing the console SOFP or console P&L or single entity SOFP, single entity P&L, examiner will not deduct even a single mark irrespective of whether you give the workings first or you give the SOFP or P&L first. Doesn't matter at all. Okay. Now, how do we prepare P&L? Tell me. First of all comes revenue, then comes cost of sales, comes a gross profit. Okay, now then comes distribution costs, then comes admin expenses, okay, this is profit before operating profit. Then comes investment income. Then comes profit before financing and taxes. Then comes finance costs. Then comes profit before taxes. Then comes tax expense. Then comes profit after tax. Then comes other comprehensive income. Okay, let's leave aside other comprehensive income for now. Now, before making any adjustment, just write the figures given in the question as it is. Tell me, what is the figure given of revenue? Just write it as it is. $3,765 $3,765,505. Then comes cost of sale is 2,446,577. Gross profit is this minus this. Distribution cost is 116,166. Admin expense is 127,713. Operating profit is this minus this minus this. Let's bold this one also. Investment income, that is other income, is 15151. Profit before financing and taxes is this minus this. Finance cost, is there any finance costs? No, zero finance costs. Profit before taxes is this minus this. Tax expense is 428,000. Okay, what is profit after tax? Okay, what is this? Profit after tax is this minus this minus this. This is the profit after tax. Tell me, any challenge anyone till here? Any challenge anyone till here? Come on guys, please tell me, any challenge anyone? I believe no. It is quite very simple to do this way. I believe it is quite very simple to do it this way. First of all, prepare the profit and loss according to the question given. According to the trial balance given, you prepare it off. Now what you have to do is, one by one we will read the adjustments and make the changes accordingly. One by one we will read the adjustments and make the changes accordingly. Let's read the first adjustment. In October 20x3, that is, okay, Gibraltar company received 350,000. So let's write here adjustment number 1, a working note number 1. Okay, In October 2003, Gibraltar received $350,000 from a customer for arranging the provision of maintenance services. This has been recorded as revenue. Gibraltar company does not provide maintenance services itself, but instead uses a third party. Means IFRS 15 principal versus agent question. Gibraltar retains 12% of the amount received as commission and pays the balance to third party. What is the meaning? It says we have received 350,000 from the customer, but we have received these as in the capacity of an agent. We have received these in the capacity of an agent. Okay, now, so shall we record the entire amount as revenue? No, wrong. We have to record only 12% as revenue. Okay, so please understand, agent, right here, agent. And what is the treatment? Please tell me. We have recorded a revenue of how much? 350,000. But what is 350,000? 350,000. But what is the correct revenue? What is the correct revenue? Only 12%. Right? Revenue to be reversed is how much? This minus this. This minus this. Right? And now we have to make the payment also. So what we have to do? We have to reverse the revenue by this amount. Just a minute, guys. I think we will need some space here. So I'm writing it here. We will need space. Okay. Now revenue has to be reversed, plus we have to pay also, right? So increase trade payables also by 308,000. Now if you're not writing trade payables, that is completely fine, because the question is not asking console SOFP. So even if you're not writing this line, it's completely fine, but at least a bare minimum this much should be written. Okay, now I will always say, whenever there is a mistake in treatment, you pass journal entry. In my opinion, you should pass journal entry. But I have seen most of the students, when I say most of the students, I can say 90% students, you guys don't know how to pass journal entries. Okay, but that's the reason I somehow hesitate to pass journal entry, because I believe students do face challenges, okay, in passing journal entries. But still I will let me pass it off. Okay, since we have to reverse revenue, so I will write revenue debit to trade payables credit by 308,000. Sorted. First adjustment done. So now what is the treatment of the first adjustment here? What is the treatment of the first adjustment? Right here, minus 308,000 A1. Simple. If the examiner needs the working of this 308,000, he has the working here. And we have fairly written it here also. Is that clear, everyone? Come on, guys, please tell me. Is that clear, everyone? Come on, guys, please tell me. Chalo, what's next? Adjustment number 1 fairly done. Coming to adjustment number 2, the year end inventory. Let's write here. Adjustment number 2, working note 2. I write here. Just a minute. Here it is not A1. It is working note 1. Na? It is working note 1. Working note 2, year end inventory. Now see, the year end inventory count was performed a day early on 30th October 2003. What was our reporting date? 31st October. But the count was done on 30th October only. Okay, and the count was correctly recorded in the trial balance. On 31st October, the Gibraltar company made a sales of 12035. Tell me, it should reduce inventory and increase cost of sales, right? We should decrease inventory and increase cost of sales. Now, the sales were correctly recorded. However, the inventory records were not updated. Since the inventory records were not updated, hence the cost of sale is also not updated. Because how do we arrive at cost of sales? How do we arrive at cost of sales? It is opening plus purchase minus closing. Opening plus purchase minus closing. Now, Muhammad is asking me, is it allowed to enter revenue here? Okay. Muhammad is asking, can we write revenue of 350 and cost of 308 and net profit of 42? This way, no P&L impact. Yes, the P&L impact will be wrong, but the revenue will be inflated now. Tell me, when we recognize revenue, what is the meaning of revenue? The amount that we expect to receive for the promised goods or services. Tell me, what is the performance obligation of Gibraltar? Is it the maintenance services? No. So how can you recognize revenue for maintenance services? How can you recognize revenue for maintenance services? You can't. Okay. Think of it this way. Do you know? Let's suppose let's suppose a totally hypothetical situation. One of my friend is into the construction industry. Okay. And I know a person from government official. Okay. The government is trying has a tender to construct a bridge, and the contract value is $200 million. Okay. Just while having a word with the government official, I told my friend is into the construction sector. You can give this tender to my friend. Okay, I referred my friend's name there. Okay, now my friend got the contract, and my friend is saying, I will give you a commission of 5%. My friend will give me a commission of 5%. So tell me, what shall I do? Shall I recognize the entire revenue of 200 million or only 5%? Can I do this thing? I will recognize entire revenue of 200 million. Then I will recognize a cost of 95%. Can I do it this way? No. My revenue is only 5%. Okay. So for agents, the net amount only for the commission is their revenue. Though I don't want to enter into that depth in these sessions, but still fine. Coming to this again to the inventory topic. Okay. Now we have done the inventory count on 30th October 20x3. And it was correctly recorded in the trial balance. Okay. Now on 31st October, some sales were made. So if the sales were made, okay, so sales is correctly recorded, but the inventory is not recorded. So we have to decrease the inventory. Okay, and since the inventory decreased, cost of sales will increase, right? So what you have to do? But first of all, tell me, what is the cost of sales? What is the cost of inventory sold? Since it is 12035, and it was sold at a markup of 30%. So it is multiplied by 30 by 130. Sorry. It is 12035 minus profit. 12035 multiplied by 30 by 130. This is the cost. So what we have to do? We have to decrease inventory, and as a result of decrease of inventory, we have to increase cost of sales by amount of 9258. Ideally, I will always recommend it to pass journal entry, but still fine, totally okay. Even if you don't pass the journal entry, Okay, but you have to show these workings. Okay, so now what we'll do is we'll write here plus 9258 working note 2. Is that clear, everyone? Is that clear, everyone? Tell me, guys. ठीक है, चलो. Point number 3. During the year ended 31st October 2003, one of the FVT P&L investments which had a carrying amount of 62,000 was sold for 59,000. Working note 3. So now tell me, guys, don't you think by following this approach, the life becomes comparatively easier? You have already the pre-formatted table prepared. Just do the adjustments and find the closing amount. So just find the final figures. Find the final figures. Okay. This is an adjustment column and we will have to prepare final column. This is draft column. Simple, right? The best approach. I believe it is I believe it is a good approach. Now, working note number 3 is FVTPL investments. So now what does it say? One of the FVTPL investments which had a carrying amount of 69,000 was sold for 59,000. The proceeds have been deducted from the year-end balance of these investments. However, any gain or loss on disposal should have been recorded in administrative expenses. Now tell me, what has happened and what should happen? What has happened and what should have happened? Okay, what is the wrong treatment given in the question? Wrong treatment given in the question is bank account debit to investments credit. How much? We have sold for 59,000. 59,000. This is the wrong treatment. But then what should be the correct treatment? What should be the correct treatment? Correct treatment. In bank, we have received 59, but we have sold investments for 62,000. Okay, and hence it gives us a loss. Hence it gives us a loss, that is admin expenses. Administrative expenses debit of 3,000. This should be the correct treatment, right? Then as a result of it, tell me what is the rectification. What is the rectification? Can you please tell me now? What is the rectification? Can you please tell me, guys? Bank is correctly debited. No point. Okay. Now, so we have to write this one as part of rectification. Then investments should be credited 3,000. Tell me, is that clear? Is that clear? Is the rectification treatment clear to all of you? Is the rectification treatment clear to all of you? So basically, we have sold the investment of 62,000 for 59,000. So the investment balance should reduce by the cost. The gain or loss should go to P&L. The gain or loss should go to P&L. They have adjusted the gain or loss also should with the cost of investment, which is wrong. Okay. So what I'm trying to do is I'm reducing the investment and transferring the loss to P&L. Is that clear, everyone? This is point number 1. Now, what is the value of these investments ideally? 178,400. Okay. Carrying amount of investments is 178,400 less rectification. Rectification is 3,000 minus 3,000. Okay, so what is the value? This plus 175,400. Then comes fair value gain. What is the fair value gain? fair value. It had a fair value of 184,300. The remaining investments in this classification had a fair value of 184,300. Okay, so the fair value is 184,300. So what is the fair value gain? This is this minus this 8,900 is the fair value gain, which has to be recorded where any gain or loss on revaluation should be recorded in other income. Okay, so now let us deal with these two adjustments. Okay, so this has to be recorded in investment income. Okay, so let's write here. Come to the P&L. Investment income. I'll write plus 8,900. Working note 3. And in admin expense, we have to again do the plus, I believe, in my opinion. We have to record this loss of 3,000. So plus 3,000. Again, working note 3. Is that clear, everyone? Is that clear, everyone? Chalo. Done. So working note number 3 also information done. So are you seeing how we are moving systematically? Are you noticing how systematically are we moving ahead? Okay. Working note number 4. Working note number 4 is about FVTOCI investments. The fair value of FVTOCI investments include a purchase made during the year. The cost of 8,000 associated with this purchase were charged to admin expenses. Oh, ho, 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 ho. So we have to see when the investment is at FVTOCI, we capitalize the transaction cost with the cost of FA. We capitalize the transaction cost with the cost of FA, right? So what will happen is carrying amount of FA is how much? Carrying amount of FA is how much? 120,000. 120,000. Okay. Now, cost, transaction costs. 8,000. So let's write a small narrative here. Okay. Costs to be removed from admin expense. We have to remove this cost from admin expense. We have to remove this cost from admin expense. Okay. So before I move further, I'll first of all remove it from admin expense. From admin expense. Working note number 4, admin expense. I will remove this 8,000. I will remove this 8,000. Working note number 4. Is that clear? Okay. The transaction cost has to be capitalized to the cost of FA rather than being expensed off. Okay. Because see the question, what they're saying, the entity, the accountant of the entity has charged these to admin expenses. So we have to remove it from there and capitalize to the cost of FA. So what is the value? It is 128,000. Now what is the fair value? What is the fair value? 124,750. So it is a fair value loss. This minus this 3,250. Fair value loss 32. Where will you record this? Other comprehensive income. Where will you record this fair value loss? Other comprehensive income. And where will you record this fair value gain on FVT P&L investments? Where will you record fair value gain on FVT P&L investments? In P&L under investment income. In P&L under investment income. Okay, chalo. So let's prepare other comprehensive income here. Other comprehensive income. Okay, then comes here fair value loss on investments. How much? So it will be minus 3,250. Working note 4. 3,250. Okay, minus 3,250. Correct. Done. Why not minus? Okay, just a minute. 850 na. Done. This is also done. Now, fifth point. Gibraltar has made a decision to measure the land and fair value for the first time. Oh, they want to measure the land and the building. So, working note number 5. Revaluation. Revaluation. So, now tell me what is for land and for building. What is the carrying amount on 31 October 20x3? What is the carrying amount? 800,000 and 476,000. Let me write that. 800,000 and 476,000. Okay, now what is the fair value? Since they are already depreciated, will not depreciate any further. What is the fair value? So fair value of the land is 1 million and fair value of the building is 700,000. So what is the fair value gain? It is this minus this again here. Okay, so what is the total fair value gain? Total fair value gain is how much? This plus this is 424,000. 424,000. Okay, now so let's write that here. Fair value gain, revaluation gain is 424,000. Working note 5. Working note 5. Working note 5. Revaluation gain. Done. Now the question says no adjustment has been made on the revaluation or the related deferred tax. Okay, so we have to do the deferred tax adjustment. So now we have to create a deferred tax charge. How much? Deferred tax charge. So let's write that here. Deferred tax charge will be this multiplied by 21% is 89040. Is 89040. Working note 5 again. Done. So this is also done. Now fifth point. 6th point, sorry. The share capital of 1st November is this much. Market price is new shares issue is done, so no adjustment to the P&L, no impact of P&L. Dividend paid, no impact. Done. I believe we are done. Now we can calculate the final figures, I believe. So chalo, come on, tell me what is the final figure. It is this minus 308,000. It is this plus 9258. It is this minus this. Now distribution cost are this much. Administrative expense is this plus 3,000 minus 8,000. Okay, now so operating profit is this much. Investment income will be this plus 8,900. So profit before finance and taxes this much. No finance cost. So the profit before taxes this much. Tax expense will remain this much, 428,000. So profit after tax will become this much. Tell me, is that clear, everyone? Come on, guys. Come on, guys, please tell me, is that clear, everyone? Is that clear, everyone? Anyone facing any challenge here? Just a minute, guys. I think it will be plus. Investment income is plus. It is plus. Income will be plus, na? We have to add. Chalo, done. Now, here other comprehensive income will be 3250. Then 424,000 and 89040. So the total comprehensive income will be this minus loss plus revaluation gain minus deferred tax charge. It is 690,552. Right? So see, what we have to do is we have to make our life simple, and I believe we have fairly made this quite very simple for the students who were saying, sir, we are not able to proceed further how to solve a question of section C. This is the approach which you have to take. Tell me, guys, come on. Right? You are breaking the question into small adjustments and then solving it off. Now a query is coming up regarding working note 4. Okay, let me see what is working note number 4. Okay. Could you clarify why the fair value loss is recognized in other comprehensive? In my understanding, the loss should go in P&L except to the extent it offsets any existing revaluation surplus. Mr. Muhammad, it is an FVT OCI investment. You should read the name. Working note number 4. The fair value of FVT OCI. What is the meaning of FVT OCI? Recall the chapter of financial instruments. For financial assets at fair value through other comprehensive income means any fair value gain or loss has to be recognized in other comprehensive income. Okay. Now, one point. In this question, in this solution, you could make one change if you want to. See, I have written the cost of sales as a positive figure itself, but while calculating the profit, I have shown negative. Is it correct? Yes, it is correct. You will get marks for that. Alternatively, you can show here negative sign. You can show here negative sign. Okay. You can do it that way also. That is also correct. Okay. Chalo. In the book solution, you will see that in the suggested answers, you will see that they have shown here negative sign. Okay. That is also correct. Chalo. Is that correct? Clear, everyone? Chalo now. So first part is fairly discussed. Coming to the second part, that is statement of changes in equity. What is the meaning of statement of changes in equity? Can anyone tell me? Requirement B. What is the meaning of statement of changes in equity? It means equity, share capital plus reserves and surplus. So let's write here equity, capital. Okay, then what? Retained earning, share premium. Then what? Retained earnings. Then what? OCI reserve. Then what? Revaluation surplus. I think that's all. Chalo. First of all, let's write the opening balances. What is the opening balance? Share capital is 900,000. Share premium is 500,000. Retained earnings is 436,607. OCI reserve any opening balances? No. Revaluation surplus any opening balances? No. So 0, 0. No opening balances. Now, how exactly are we required to move further? First of all, coming to profit after tax 358842. So let's write that here. Profit 358842, or I'll directly link no there. Profit 358842. Now OCI reserve is a negative figure of loss, fair value loss, 3250. Then revaluation surplus is a gain of this much minus tax impact of 89040. Okay, so this is revaluation surplus also done. Then what? Profit is done. We'll have to make different columns for these here. OCI fair value loss on FVT OCI investments. Then revaluation gain on land and building. Okay, then so we have done so far. Now 6th and 7th adjustment are remaining. Let's read 6th adjustment. The share capital of 1st November comprised these many shares at a price of this much. On 1st Feb 2003, Gibraltar made a right issue of 1:5 rights issue. Revaluation surplus 32514. Is it given in the question? Opening. Okay, my bad then. My bad. Revaluation surplus opening is given 32514. I'll write it off here. Revaluation surplus opening is given as 32514. I'll write that here. Sorry. Can't pakad ke sorry. Okay. Arey, I made the mistake purposely so that I'm just checking whether you guys are active in the class or not. I'm just checking whether you guys are active in the class or not. Now, Gibraltar made a right issue of 1:5 right issue for $1 per share. How many shares issued in the right issue? So let's write rights issue. Rights issue. So how many shares? Originally 1.8 million. Okay, divided by 5 is how much? 1.8 million divided by 5 is 360,000. Okay, it is issued for $1 and the face value is 0.5. Face value is 0.5. So 180,000 here, that is 360 into 0.5 is the face value, and 360 into 0.5 is the premium. So right issue is also done. Dividend is also paid. Dividend. What is the amount of dividend? $0.10. So how much? 1.8 million plus 360,000 new shares issue multiplied by 0.1. It is written earnings minus 216,000. That's all total sum. So this is it. Is that clear to all of you? Is that clear to all of you? Come on guys, tell me please. Okay, So we have fairly solved this question, buddy. Now, the requirement number A and requirement number P done. A and B done. A and B done. Shall we move on to C? Come on, guys, please tell me. Shall we move on to C? I am enjoying it, yaar. Now, question is asking you restate the basic earning per share at 31st October 20x2 to account for the rights issue. Now, why do we restate? Why do we restate? We restate for the bonus factor. Now, in the rights issue, how do we compute bonus factor? Requirement number C. Restated BEPS for 31 October 20x2. How do we restate? So what is the basic earning per share for the previous year? 0.20. Okay, multiplied by 1 by bonus factor. So now we have to find out the bonus factor. So understand, please understand how to find out the bonus factor. Sorry, my badge. Bonus factor in case of rights issue is fair value before right divided by theoretical X right price. Okay, so now we know the fair value before rights. Question is given you. See here, the market price before right issue is 1.6. That is given. So, but we need to find theoretical X rights price. So, we have to find theoretical X rights price. Now, how to find that? So, we have to say that for every five shares, 1 shares are issued. Okay, for every 5 shares, 1 shares are issued. Okay, 1 share is issued. Now, the price of the 5 shares was 1.6. And the price of 1 share is issued at 1. Okay, so the price is this. What is the total value? This is the total value. 9. Add this plus this. Add this plus this. Therefore, TERP is equals to 9 by 6 is equals to 1.5. Therefore, bonus factor is equals to 1.6 divided by 1.5. This is the bonus factor. So now, how to find out here? So right here, therefore, restated BEPS is 0.20 multiplied by 1.5 divided by 1.6. .19. 0.19. This is the answer. This is the answer. Simple. Right? Chalo, cool. So with this, we complete this question. Come on, guys, tell me, is that clear to everyone? Come on, guys, I need a response from each one of you. I need a response from each one of you. Come on, guys, please tell me, is that clear to all of you? I need a response from each one of you. Okay, chalo. So now with this, we are moving on to the, okay, as you are aware, this question is of year on year comparison. A company is Rey company. The performance is given for the previous year. The performance is given for the current year. Okay, 2-year performance is given, and we have to evaluate the company whether the performance is improved or declined. What is the scenario which we have to comment here in this question? Tell me, will you be able to solve this question? Shall we start it? Shall we start solving? Chalo guys. Rey Company is a services company offering support and training to several large entities. Basically, it's a services company. Okay, please understand. It is a services company. We need to know about the products offered. Extracts from the Rey's financial statements of the previous year and of the current year are as shown below. Profit and loss is given, revenue, cost of sales. Now, just if you spend 2 minutes time with this P&L, guys, revenue has decreased. Revenue has decreased, but profitability has increased. Huh? How can this be the case? How can revenue decrease and profitability increase? Quite weird, quite weird. But still, we are here to analyze. Extracts from the statement of financial position is given, current assets are given, ordinary share capital, share premium, retained earnings is given, loan notes are given, deferred income is given from government grant, trade payables, deferred income, and tax payable is also given. Okay, now we have to read the other information, but before that I will read the requirement and then come to the other information. Okay, but before reading the requirement, I will first of all have some water. Chalo. Using the information in note 6, here. Calculate the basic earning per share for Rey company for the year ended 31st December 2009 and restated earnings for 2008. Oh, independent question of earning per share. ठीक है. Requirement number B is calculate the ratios for both the years. So 4 plus 5, 9 marks. Done. 11 marks is for analysis. Now for the students who says that, sir, my interpretation is not that strong. So my dear friend, my dear cute friends, out of 20, this 4 plus 5, 9 marks is easy peasy. Right? Now out of 11, I believe you will be able to score at least 5, 6. 4 plus 5, 9, 9 plus 6, 15. You are able to score 15 out of 20. What else do you need? What else do you need for a question where you are not having that strength? Even if you are scoring 15 out of 20, what is wrong in that? I believe you can definitely do that. Okay, chalo. So shall we start with the first question? That is the earning per share. Chalo, let us start with it. Requirement number A. Earning per share. For that, we need to read the this point number 6 first of all. The earnings per share was correctly calculated to be 12.5 cents for the year ended 31st December 2008. Means for the previous year, earning per share is given. Now during the current year, on 1st March 2009, Rey company issued 10 million shares. So Rey company issued 10 million shares at market value, and cash was raised to purchase new property. On 1st September 2009, there was a 1 for 3 issue of bonus shares. Profit for the year ending 31st December 2009 was 5.6 million. So first of all, we have to compute what? First of all, we have to compute what? We have to compute what? Tell me. Weighted average number of outstanding shares. So date, issue, adjustments, close. Chalo. On 1st January 20x9, opening balance. Then after that, how many shares opening balance? How many shares opening balance? Is it given in the question? Yes. Opening balance was 20,000. 20,000. Then on 1st March X9 20x9 fresh issue of 10,000 shares. So after issue it became how much? 30,000 shares. After issue it became how much? 30,000 shares. Okay. Then on 1st September 20x9 bonus issue of how much? 1 for every 3. 1 for every 3. So how many shares you ideally have? 30,000. So how many shares in bonus issue? 10,000. So 30,000 plus 10,000 is how much? 30,000 plus 10,000 is how much? 40,000. Now, what is the bonus factor? What is the bonus factor? 1 plus 1 by 3 is 4 by 3. 4 by 3 multiplied by 4 by 3. Okay, done. Now, let us adjust with the timing. 1st January, Jan, Feb, 2 months to 2 by 12. Then March, April, May, June, July, August, 6 months. Then September, October, November, December, 4 months, 4 by 12. Done. Can you please compute the value? Tell me guys. 20,000 into 4 by 3 into 2 by 12 is 4444. 4, 444. Then 30,000 into 4 by 3 into 6 by 12. 20,000. Then 40,000 into 4 by 12 is 13,333. So what is the amount? 4444 plus 333 is 37777. 37,777. This is the weighted average number of participants, right? So what is the earning per share for 31st December 20x9? It is the profit is 5,600 divided by 37,777 is equals to how much? 14.8 cents. What is the restated earning per share for 31 December 20x8 for the previous year? So what is the earning per share? 12.5 cents multiplied by 1 by bonus ratio. What is bonus ratio? 4 by 3. So multiplied by 3 by 4 is how much? 12.5 into 3 by 4 is 12.5 into 3 by 4 is 9.38. or 9.4, also you can write 9.4 cents. Palas is asking why 4 by 3. You see the bonus factor which has to be multiplied for all existing shares existing on the date of bonus issue. All the shares existing on the date of bonus issue has to be multiplied with the bonus factor. Okay, chalo, deal done. Now close. This is part is closed. So first requirement is over. Coming to the second requirement. Requirement number B is ratios. Requirement number B is ratios. So now for ratios also, what we'll do is we'll insert table. It will be easy for both of us since you have to prepare for 2 years. So I'll take 5 columns. Okay, so let's write here for workings, or I'll write here 3 columns. I'll take up 3 columns. Okay, ठीक है. 5 columns. Workings, then 20x9, again workings, 20x8, ratios. Chalo, which ratios you have to compute? Gross profit, operating profit, ROCE, GP margin, operating profit margin, return on capital employed, current ratio, trade receivables collection period. Current ratio, receivables collection period. Chalo. Now, please keep in mind the ratios which you have to compute. We have to compute excluding deferred income because it is given in the question. The requirement is given in the question. Okay. Now, so let us compute the ratios now. Gross profit margin. First, we'll do entirely for 20x9, then we'll do entirely for 20x8. 20x9. Gross profit margin is 41050 divided by 58,200. Then 9450 divided by 58,200. ROCE is again 9450 divided by capital employed is long-term equity plus non-current liabilities. Equity is 58,500 plus 8,000. 58,500 plus 8,000. Current ratio is current assets by current liability, that is 24,600 divided by current liabilities is 9650 minus 5,000. Receivables collection period is trade receivables 6,500 divided by sales, assuming it to be credit sales 58,200 multiplied by 365 days. Okay, done. Can you please tell me the final ratios? Can you please tell me the final ratios, guys? 70.5%. Since it is in the service industry, the margin will be higher. Operating profit margin is 16.2%. ROCE is 14.2%. Current ratio is 5.3 times or 5.3:1. Receivables collection period is 41 days. Okay, now similarly for the previous year, what is the amount? Ratios. Gross profit margin will be 38750 divided by 63,400. Then operating profit margin is 3350 divided by 63,400. Then ROCE, return on capital employed. Return on capital employed is how much? It will be 3350 divided by Sir, for interpretation, we don't need to read all notes. Just start from the table given. That's a you can say a misinformation that you have. Okay? No. Since we are calculating the ratios, we don't need this one. For ratios, unless question specifically says that adjust the financial statements, then yes, we will need to read the information to adjust. Otherwise for the ratios, we have to use the information given and calculate the ratios. Okay, but for writing the reasons, we definitely need to read the this information. Otherwise, if we are writing the reasons without reading these, we will fetch a big zero. See, this much big zero. ROCE divided by capital employed for the previous year. Capital employed is 41,200 plus 8,000. Current ratio is 7,200 divided by 3050. Receivables collection period is trade receivables of 6,100 divided by sales of 63,400 into 365 days. Chalo, let us find the ratios. 61.1%, 5.3%, 6.8%, 2.4:1, and here it is 35 days. Everything is done. So now, before we start to read the additional information, just have a look at it. Gross profit margin has went up. Operating profit margin has went up. ROCE has went up. Means the entire profitability has went up. The entire profitability has went up. Current ratio has also went up. Okay. Current ratio has also went up. Okay, but I don't know why current ratio has went up. Oh, see, current ratio has went up due to why? Tell me. Cash. Sufficient cash. So much of cash. Okay, now receivables collection period has also increased. Might be we have given extended credit. Chalo, let us write the information. Analysis. Now, what was the third requirement? Comment on the performance and position for the both the years. Chalo. Requirement number C. Comment. So we have to write for financial performance. We have to write for financial position. And then we have to write conclusion. Okay. Chalo. Now, how will things work here? Total marks is 11, right? So please understand, conclusion will have around 1 to 2 marks, depending on how much you can write, but roughly a bare minimum of 1 mark. Then total marks allocated for requirement C is 11 marks, right? So then I can say here 5 to 6 points, 5 points here. Roughly 5 marks here, or I can say 7 here, 3 here, 7 marks here, 3 marks here, depending upon how much we have. Total financial performance plus position should be of 10 points. Okay. Conclusion 1 mark for sure. Conclusion 1 mark a bare minimum. These plus this accumulated 10 marks. Okay. Chalo. Now this allocation between financial performance and financial position, I believe we can do on a case to case scenario basis. Okay. Now, chalo, how to do it? But before I start to do the analysis, we will have to read the information. One of the Rey company's directors left at the beginning of the year, 1st January 2009, to set up Kylo Company, a business in direct competition with Rey Company. Okay, basically it says one of the directors of the company, of this Rey Company, left the company and started its own company by the name Kylo Company at the beginning of the year. Okay, now to meet its sales level, Rey Company reduced its prices by 5% and extended the payment terms. So I can write first of all here, I can write few points. Receivables collection period has increased. Receivables collection period has increased from 35 days to 41 days due to extended credit period offered by Rey Company to maintain its sales level. Is that clear, everyone? Fairly possible to write? Tell me yes or no. I believe it is fairly possible to write these points. Nothing difficult in my opinion. Nothing difficult in my opinion. Come on guys, tell me please. Is it clear, everyone? This point? Yes. Now, please understand. Please understand. The company has reduced the sales price by 5%. The company has reduced the sales price. Now, if you see, as I was telling you, revenue has decreased in current year. Revenue has decreased in current year. It might be the case that customers would have shifted to Kylo Company. Tell me yes or no. Revenue has decreased. The customer would have shifted to Kylo Company, right? Or it can also decrease. Due to additional, due to decrease in selling prices. Due to decrease in selling prices. 1 point done. Now, since the selling price has decreased, but the cost would have remained the same. So then we'll write, since selling prices has decreased, this will reduce gross profit margin. Okay, now, but we see that the gross profit margin is increasing. However, gross profit margin is increasing. Now, why it is increasing? Let's read the information further. Kylo Company ran some advertisements publicly criticizing the work of Rey. Okay, the competitor is criticizing the work. Okay, now Rey Company began legal action against Kylo Company and received $4 million compensation. This is recognized in operating expenses. Okay, now please understand, We have received 4 million compensation, which would have reduced my operating costs, thereby increasing my operating profit margin, Now, Rey Company received government grant of 20 million on 1st January 2009 for Rey Company to maintain employment in the local area. Okay, Rey Company has recognized $5 million of grant income against cost of sales. So now you understood, this 5 million of grant income is reduced from cost of sales, means cost of sales reduced, profit margin increase, gross profit margin increase. Okay, now understand, this increase of gross profit margin is mainly attributable to grant income of $5 million. Now if you see here, if you come here guys, come on, if you come here, gross profit is 41050. Let us remove this 5,000. What is the profit then? 36050. See, the profitability reduced. It is 38750. If we remove 5,000 from this one, it will become 36050. Means the gross profit margin reduces. Okay, so this increase of gross profit margin is mainly attributable to the grant income. It is because of grant income. I believe you are able to understand my point. Then coming to operating profit margin. Operating profit margin is also increasing. Now we know the reason for that also. Further, operating profit margin is also increasing. One of the reason for increase is the carry forward impact of increasing gross profit margin. Also, since the company has received a settlement amount of $4 million, which is reduced from operating costs, thereby increasing operating profit margin. Very easy. Tell me, so far I have written 5 points. Tell me, in these 5 points, do you think any points are like you can't write it? Very simple, right? Revenue decreased, selling prices decreased, increase of gross profit margin, operating profit margin, settlement amount, right? Very apparent. These are very apparent points, right? Now let us do some what if analysis, because see, understand, since settlement amount of $4 million and grant income of $5 million are one-off transactions. Hence, if we remove what if analysis, if we remove these, operating profit is how much? Operating profit is equals to how much? Tell me. 9450, right? 9450 minus 4000 minus 5000. It is equals to 450. Okay, and margin is is how much? 450 divided by 58,200. 450 divided by 58,200 into 100. 0.773%, which is significantly lower than last previous year. Right? Tell me yes or no. Come on, guys, tell me yes or no. Right? What else can we write? We have written about gross profit, we have written about operating profit margin. Now we can write about ROCE. ROCE, return on capital employed, has increased in the current year. Has increased in current year, and this is majorly attributable to increase of operating profit margin. Clear, everyone? Okay. Now, so we have written how many points? 1, 2, 3, 4, 5, 6, 7 points in financial performance. Okay. Now we can write around 3 points in financial position, of which we have already written 1 point. Now we have to write 2 more points. 2 more points you have to write, and then conclude, and then done. Okay. Now, chalo. What are the other points? First is current ratio. Current ratio is significantly higher. Current ratio increases significantly in the current year as compared to previous year. And why? This is mainly due to, now let us read the reasons. First is cash. I know cash. This is mainly due to higher levels of cash. Now, from where the cash came up? Comes a question, from where this cash came up? So let's read. Grant done. Okay, this point is done already. Now, Rey company reduced its staff in 2009, but the finance director believes the government grant will not be repaid. Okay, a government inspector is due to visit Rey company within a few months. Okay, loan notes are due for repayment in 5 years, but the bank negotiated the interest rate following the concerns it had over Rey company's cash flow. Okay, now share capital, issue of shares, issue of 10 million shares. Okay, is mainly due to higher cash. Okay, cash inflows are coming from issue of equity shares and grant proceeds. Okay, now you can write further also, though it is 3 points done, but still you can write further also. Why was equity shares issued? You can write why was equity issued. You can write what is the risk, what if grant is to be repaid. See, you have lot many points. To write. We are not writing only those many points, okay? Because we have to write 10 points, and 10 points we have written. So why will we write further, okay? But see, what I'm trying to say is, even if you miss out on 1 or 2 points here, you will have to write again here, okay? You have a buffer of 2-3 points. Always in the exam you have buffer of 2-3 points, okay? So you can definitely write those many points, okay? Now this is done. Now then you have to give the conclusion. Then you have to come to the conclusion. Okay, now conclusion. Okay, profitability. Okay, the company's performance has improved in current year, but most of them are one-off events. Okay, further, 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 okay, there is a risk, of repayment of government grant which has to be evaluated. Simple, deal done, close. Tell me, is that clear, everyone? Is that clear, everyone? Okay, now I believe we have written fair, good reasons. Okay, now we can write further also. Loan repayment. About loan repayment also we can write, right? What if grant is to be repaid? Lot many points. We are not required to write only those many points. 10 marks, 10 points, simple, done, cool, done. Okay, now one point which students were asking me, ideally I believe you guys know this, but still since you are asking me, I am telling it to you. Okay, how to identify the additional part of analysis except financial performance, financial position and conclusion, if any? The question will specify, Batman. Question will specify that. Okay, now understand. Students are asking me, while calculating the restated earning per share of previous year, why did I multiply it with 3 by 4? Tell me, how to, what is the formula for ratio? Profit divided by weighted average, right? Now, so tell me, if I have to multiply bonus factor, I will multiply bonus factor here. Okay, now for the previous year, this amount is given as 12.5 cents and asking me to compute restated. So I will say 12.5 divided by whatever is the weighted average number of shares, because this is this one, right? So I can say 12.5 multiplied by 1 by 4 by 3. So this becomes 12.5 multiplied by 3 by 4. 9.4 cents. I thought, guys, you guys already know these basic things, but still, okay, if you don't know, I am here to explain. A very good evening to all of you. Can you please confirm if the audio and video is clear to all of you? Come on, guys, in the chat box, please. Come on, everyone. Everyone in the chat box, please. Come on, guys. Is the audio and video clear to all of you? Let me just check things if it is okay or not. Yeah, wonderful. Okay. So let us start the past paper practice series. So basically it will be a series of 5 sessions wherein we will be practicing the past papers, section C. Now, as you know, the past papers available in the ACCA practice platform. The past papers available in the ACCA practice platform has only section C, and we will be practicing section C here in these live sessions. Okay, now the modus of this session will be, first of all, I'll be helping you understand the question. I will be helping you understand how to draft the answers, how to do the calculations, how to understand the requirement, okay, what exactly has to be written, okay. Sometimes I will be drafting the answers myself, sometimes I will be helping you on how to present the answers. It will be a mix and match of each and everything, okay. Now, further, we'll also be referring to the comments from the examiner reports. Okay, so what I'll do, I'll show it to you. Just give me a minute. So what I have done is, see, I have got myself examiner report. Okay, so let's suppose today we are discussing September, December 2025 paper. Okay, now in this September December 2025 paper, whatever are the relevant comments given by the examining team, we will be discussing it off. So I'll show it to you. So what I have done is I have already highlighted the comments which I have to discuss with you. I have done my homework. I have already done my homework. Okay, I have already done my homework. Whatever comments I need to discuss with you, I have already highlighted, so that we'll discuss it and we will be done with the same. Come on guys, tell me, are you super excited for the same? Are you super excited for this 5 days FR past paper practice series? Come on guys, please do let me know in the comment box, all of you. Everyone, come on guys. Okay, now coming to the point, guys. First of all, if you're watching this session, and not liking it, it's not justified. It's not justified. Come on, I request all of you, please do hit the like button and subscribe button. Okay, and maintain a high interactive in the class. Be as much as possible. Okay, be interactive in the class. Discuss with me. Okay, now I'll try to take up all the queries that comes to me in the chat box. Okay, chalo guys, let us start the session now. Okay, chalo. So today we are going to discuss September December 2025 paper, and September December 2025 paper has 2 section C questions. It has only 2 section C questions, right? Okay, now before I start, I just want to highlight something, guys. I know some of you might be knowing this fact, but most of you don't know this part. So I want to highlight something. Please understand. In FR exams, section C, which is of 40 marks, and I believe you know that it has 2 questions, question number 31 and question number 32. Please understand, guys, please make this very clear, okay, that one of these questions will definitely be from interpretation of financial statements. One of these questions will be from interpretation of financial statements. Okay, now, and another question, question number 32, will be from the preparation of financial statements. Now it can be single entity financial statements, or it can be group financial statements. It can be a mix and match of anything. Now please understand one more thing. As per my understanding, as per my analysis, okay, I think I have evaluated more than past 15 exam question papers, okay, and as per my understanding, okay, now the interpretation of financial statements question that comes up in the exam are of 5 types generally. Type 1 will be comparison on year, same company, current year, previous year, what is the comparison, or comparison of 2 companies, or comparison with sector averages, with sector or industry averages, or acquisition of subsidiary, or disposal of subsidiary. So these are the only 5 types of question that has been asked in the chapter of interpretation of financial statements. These are the only 5 types of question that has been asked in the interpretation of financial statements. Okay, now in question number 32, it can be either a preparation of single entity financial statements or a group financial statements. Now what can happen in the exam? If you are giving your exam, okay, what will happen is option number 1, you will get interpretation of financial statements plus preparation of single entity financial statements, or it can be the case you will get interpretation of financial statements plus group financial statements. Now it will never be the case that you will get single entity financial statements plus group financial statements and no interpretation. No, that will never be the case. So is interpretation important? It is very, very, very important from an exam point of view. Is that clear, everyone? Come on guys, please tell me. Is that clear, everyone? Come on guys, please tell me. Okay, so now today we are discussing September December 2025 exam paper. Okay, now next day, that is tomorrow, this is day 1, this is day 1 of 5. Day 2 of 5 will be discussing March June 2025 paper. Day 3 of 5, okay, we will be discussing September December 2024. Day 4 of 5 we will be discussing March June 2024, and day 5 of 5 will be discussing September December 2023 paper. These are the 5 papers which we have to discuss. Is that clear to all of you? Come on guys, tell me the dates if you want. Okay, I've already shared the schedule in the Telegram group and the WhatsApp group also. So these are the 5 papers which we have to discuss. Now coming to our paper, if you see here, can you see the ACCA practice platform? First point is, you see the exam paper September December 2025, point number 1. Now first question, if you see, it is from the interpretation of financial statements. Okay, and this is type 2, comparison of 2 companies. Here you will have to compare 2 companies, Coral Company and Reef Company. Okay, now I told no, you will get either of one type, right? Either interpretation of financial statements and single entity, or interpretation of financial statements and single entity financial statements, right? So now if you see here, this question is of interpretation of financial statements. The next question is from the group financial statements. Okay, is from the group financial statements. Now we are going to discuss both the questions in the today's class. We are going to discuss both these questions in the today's class. Okay, chalo, let us discuss one by one each of these questions. Okay, and yes guys, if you are watching these sessions, I request you, all of you please hit the like button. Okay, hit the like button. Chalo, let us discuss these questions now. Shall I start reading the questions, guys? Come on, tell me. Shall I start reading the questions? Chalo. First question is from the interpretation of financial statements. Okay, chalo. It says Aqua Company is a listed company looking to grow through acquisition. It has currently $5.1 million of excess cash available. We will need this information. This company has excess of $5.1 million cash available, which the company wants to invest. Okay, we don't need this information right now, but we will need this information going forward. Now, Aqua Company intends to take an active role in managing its investment. So basically, what is happening in this question, Aqua Company has $5.1 million surplus cash. Now tell me, whenever we have surplus cash, what do we think? Let us invest it somewhere. Let us invest this cash somewhere. Okay, same thing Aqua Company is also thinking of. I have surplus this much cash. I want to invest in a company. Now, Aqua Company has identified 2 potential companies, Coral Company and Reef Company. So now what does the Aqua Company expect from us? So the management of Aqua Company expects from us that we should evaluate both Coral Company and Reef Company and suggest to the management of Aqua which among these 2 companies are a better investment target. Okay, so we have to identify Aqua company should invest 5.1 million in which company? Coral company or Reef company? So basically we have to compare these two companies. We have to compare Coral company versus Reef company. I believe you have got the background of this question. I believe you have got the background of this question. Okay, now chalo. Further, both Coral and Reef operate in the same industry sector, and the extracts of the financial statements are given as follows. Okay, so revenue is given, gross profit is given, operating expense is given, operating profit is given, interest expense is given, SOFP extracts are given, equity share capital, retained earnings, loan notes, loan payable, it is given. Okay, now there are some additional information given. Let us read the additional information first of all. On 1st December 2005, Coral Company, Coral Company purchased an item of plant and equipment from an overseas supplier. Guys, whenever you read a question, I request all of you, first of all, always see what is the reporting date. Whether you are an FR student, FM student, SBR student, any paper, any skill level, P level, but whichever paper you are giving, okay, if the question has a reporting date, always highlight the reporting date. Okay, identify that reporting date. Now, come on, guys. So it says on 1st December 2005, Coral Company purchased an item of plant and equipment from an overseas supplier which cost 6 million dinar. Now tell me, so basically the purchase has been in foreign currency because our functional currency is dollar. The functional currency is dollar. Purchase has been made in dinars. Right? So it's a foreign currency transaction application of IAS 21. Coral Company paid the invoice in full on 30th April 2006. The foreign exchange has not yet been calculated or recorded. Oh, they have not yet calculated the foreign exchange gain or loss. So can you please tell me, the exchange rate is given. Can you please tell me, guys, what is the foreign exchange gain or loss? Can you please tell me? So let us compute it. Let us compute the amount of foreign exchange gain or loss. Now, see here. So we purchased on what date? On 1st December 2005 we purchased. At what price? 6 million dinar. Okay. Now, what is the exchange rate on 1st December 2005 to? Guys, please understand. Let us understand how to read this part. It says for every $1 we need 2 dinar. For every $1 we need 2 dinar. Tell me, which currency is stronger, dollar or dinar? Definitely dollar. So we have to convert from dinar to dollars. Right? So we have to divide 6 million by 2. Okay, we have to divide because we have to come from a weaker currency. To a stronger currency. The amount should reduce. Okay, that's why we have to divide. So 6 by 2 is $3 million. Now, when are we going to pay? We are paying on 30th April. 20x6. Okay, how much we will pay? We have to pay 6 million dinar. Okay, now, what is the exchange rate on the date of payment? 3. Okay, so what is the value here? What is the amount that we have to pay? $2 million. Oh, we got an exchange gain. Exchange gain of $1 million. Is that clear, everyone? Is this exchange gain of $1 million clear to all of you? Clear? Okay, chalo, let us read further. It says Coral Company's 8% loan notes was issued several years ago. Okay, and these are redeemable in cash on 31st August 20x8. 20x8 means after 2 years. After 2 years, the company has to repay, the Coral Company has to repay the loan notes. Okay, so we need to know whether the company will have sufficient cash for the repayment or not. We will need to know whether the company will have whether the Coral Company will have the sufficient cash for the repayment or not. If the Coral Company has sufficient cash for repayment, well and good. If Coral Company does not have sufficient cash for repayment and this Aqua Company acquires Coral Company, think of it. If Coral Company has sufficient cash for repayment, good, very good. But if Coral Company does not have sufficient cash for repayment, then what will happen? Aqua Company will have to do the refinancing. Aqua Company will have to do the refinancing. Aqua Company will have to support its subsidiary. Aqua Company will have to support Coral Company. If Aqua Company acquires Coral, if Aqua acquires Coral and Coral is unable to repay the amount, then Aqua will have to support Coral. Aqua will have to support Coral. Okay, how support? Support might be in the terms of refinancing or might be giving guarantees to the bank. Chalo, let's read the question further. Reef Company negotiated a $2 million 10-year bank loan in August 20x4 to fund the purchase of new equipment. The principal is repayable in full at the redemption date. Now, on what date? We have taken, the Reef Company took a loan on August 20x4 and it will be payable after 10 years, means August 20y4. Okay, now we are in 20x6, means this loan will be repayable after 8 years. Repayable after 8 years. Okay, now the potential prices of the company are given as follows. This is the market price of the company. Now, neither Coral Company nor Reef Company has issued any equity shares or raised any additional long-term borrowings in the current year. Okay, neither any equity shares have been issued by both these companies. They have neither issued any equity shares nor they have taken any new loan in the current year. Okay, so this is the situation, additional information given in the question. So now what we have to do? Guys, please understand what I have seen. Ideally, students struggle in solving a question of interpretation. And why do they struggle? Sir, what if the analysis which I write in the exam doesn't hold good, or I am not able to write the analysis? Then what will happen? Sir, I am bad at doing analysis. Will I be able to score good marks in the exam? Buddy, please see. This question is of 20 marks. Out of 20 marks, 4 marks is for calculation of ratios. 3 marks is for calculation of ratios. 4 plus 3, 7 marks is for calculation of ratios. Now in the analysis also, these two will have roughly around 4 marks. So 4 plus 3, 7, 7 plus 4, 11 marks is solely calculation based. Out of 20 marks, 11 marks is solely calculation based. I'll show it to you. Just give me a minute. Why I am saying 11 marks is calculation based? Let me show it to you. Where is marking scheme? Okay, I have not got the marking scheme. Kya? ठीक है. No issues. I have not got the marking scheme with me here. Okay, but still, please understand. This 4 marks is calculation. This 3 mark is calculation. Out of these 13 marks, this is for this conclusion is for 1 mark and explanation of control is for 3 marks. So 3 plus 1, 4 marks. So this 4 marks is also mostly calculation based. So 4 plus 3, 7, 7 plus 4, 11 marks is solely calculation based. You are just required to write analysis for 9 marks, 9 points. You have to write just 9 points. Chalo, in the exam, out of 9, even if you score 5, tell me how much are you scoring? 4 plus 3, 7, 7 plus 4, 11, 11 plus 5, 16. 16 out of 20 you are scoring in this question. Is that bad? No, I don't think so. No, I don't think so. Yes, if your target is to score 100 out of 100, then definitely it is not good. But if you're targeting 100 out of 100, definitely I expect that you are doing practice of lot of questions. Okay, chalo. Guys, chalo. Now we have to solve the questions. The best part is they have already drawn the format. Now, one comment from the examining team. One comment here from the examining team before I move further. The examining team says, students, while calculating ratios, they write formulas. And examining team is saying, we don't need formulas. We need working. So if you are writing gross profit margin, what is the formula for gross profit margin? Gross profit by revenue, right? So right here, what is gross profit? What is revenue? Write that. Okay. If a student writes here, gross profit margin is gross profit divided by revenue, 0 marks, a big zero for that. No marks for that. Why to spend time in that? No formulas required to be written in the exam. Okay. Now, so what you have to do here? See, first of all, you have to calculate the ratios, ignoring the foreign exchange difference. Ignore it. Okay. Now, let us ignore. For coral and for reef, both we need. Chalo. Gross profit of coral company, it will be gross profit is 4650 divided by 14995. Operating profit margin is 1050 divided by revenue of 14995. Then return on capital employed is operating profit by capital employed. What is operating profit? Tell me what is operating profit? Operating profit is again 1050 divided by what is capital employed? Capital employed will be equity plus non-current liabilities. What is equity? 4,000 plus what is non-current liabilities? 5,000. Students have generally what they do in the exam is while computing capital employed, they don't take non-current liabilities. Okay, they take only equity. Guys, capital employed means the funds invested in the business. Capital employed means the funds invested in the business, whether through equity or through loan, doesn't matter. Okay, whether through loan or equity doesn't matter. What is the amount of funds that is invested in the business? Okay, now students are asking whether we will get this type of pro forma prepared in the exam for interpretation questions. Yes, ideally it is prepared. For the questions on interpretation, ideally I have, in my experience, what I have seen is they prepare it off and give it. Okay, not for other questions. Now, gearing is debt by equity. Guys, understand. For gearing, if they clearly write debt by equity, you are not required to use any other formula of debt by debt plus equity. No, don't use that formula. Students have done that mistake. And all these I am talking from where I am coming from for these points. See, these are the comments not designed by me. These are the comments given by the ACCA examining team. See here. Students must show their workings in full. You have to show the workings. You are not required to show the formulas. Again, capital employed, students have taken either only debt or only equity. No, capital employed is debt plus equity, both. Then while calculating debt equity ratio, students have used debt by debt plus equity. You can't use this formula. When the formula is actually given in the question, you can't use any other formula. Okay, when the correct formula was stated in the requirement. Okay, and then you will say, sir, I solved it correctly only in the exam. My concepts are clear only. I don't know how I failed in the exam. Okay, so you have to take care of these small petty issues. Now, debt by equity. What is debt? Tell me for Coral Company. 5,000 divided by equity is how much? Tell me, come on guys. How much is equity? 4,000. So now, can you please tell me the ratios? I will not be computing the ratios. You have to tell me the ratios. Quickly, tell me please. Quickly, tell me please the ratios. So this one will be 31%. This one will be 7%. This one will be 11.7%. And this one gearing will be 125%. Okay, now chalo, let us compute the same for the Reef Company. For Reef Company, gross profit is 4505 divided by 15015. Operating profit is 1800 divided by 15015. Return on capital employed is 1800 divided by capital employed is debt plus equity is 6,000 plus 2,000, 6,000 plus 2,000, and debt by equity is 2,000 divided by 6,000. So tell me, what is the ratios? What are the ratios? Ratios. So it will be 30%. It will be how much? Tell me. 12%. Very good, very good, very good. Now return on capital employed will be 22.5%. Very good. Gearing ratio will be 33.3%. This is the gearing ratio. Now, if you have solved this much, very well. Congratulations, guys. You have scored 4 out of 4. You have scored 4 out of 4. Now, please understand. Here, so 4 out of 4 means what? If this entire thing, 4 ratios and 4 ratios, 8 ratios, you are getting 4 marks. Means half a mark for each ratio. So even if one ratio is wrong, no need to panic. You will get only the reduction only for the area or the ratio where you have made a mistake. Okay, guys, am I going fast? Can you please tell me, am I going fast? Am I going fast, guys? Is the speed fine? I think I'm not fast. Okay, chalo. Foreign exchange difference. So foreign exchange difference, how to compute the foreign exchange difference? Speed at the point. Very good, Sneha. 6 by 2 minus 6 by 3 is yes, is equals to exchange gain of $1 million. Exchange gain of $1 million. Now, can you please tell me, though you are not required to write the treatment, but can you tell me what will be the treatment of this foreign exchange gain? What will be the treatment of this foreign exchange gain? Can you tell me, guys? It will be a part of the operating profit. It will be a part of the operating profit. Okay, chalo. It will be part of the operating profit because it is arising in the business, right? It is a part of operating profit. Now, so we will add it to the operating profit. So we have to find for the Coral Company what is the ratios including the foreign exchange difference. Right? And yes, very good point by Parul. We have to add it to the retained earnings. Why? Because operating profit will increase, then the ultimate profit will increase, and the profit is added to the retained earnings, hence the retained earnings will also increase. Very good, very good. I am very happy with this understanding discussion. Okay, and guys, those who have not liked this session, tell me, shall I say something? Those who have not liked this session, please like it, yaar. Come on, guys. Everyone, please like it. Please hit the like button. And also the subscribe button. Chalo. Now the ratios. Of Coral Company. Operating profit is 1050 plus 1000 divided by revenue is 14995. Now return on capital employed is 1050 plus 1000 divided by what is the retained return on capital employed. So it is 5000 plus 9000 but plus 1000. Okay, now debt by equity, so it will be, debt is how much? 5000, no change in that. 5000 divided by equity is how much? 5000. How come 5000? 4000 plus 1000 is 5000, right? So what is the ratio? What are the ratios? It is 13.7%. Return on capital employed is 20.5%, if I'm not wrong. 2050 divided by 10,000 is 20.5, yes. And here it is 100%. Tell me, is it clear? Is it clear? So with this, you have scored as good as 7 marks. Tell me, guys, what, don't you think it was quite very simple and easy? Don't you think it's quite very simple and easy, right? Okay, chalo. Now, we have to write our analysis. How to write the analysis? Before writing the analysis, always read if they have given any specific instruction. Analyze the performance and the position of the potential acquisition targets. Okay, so how you have to do the analysis? So first of all, we will analyze financial performance, then we will analyze financial position. Okay, then we have to comment on which company the control can be exercised. Aqua would exert control on its investment. Okay, and then we have to evaluate the conclusion. Please understand, the conclusion you will fetch 1 mark. For this analysis you will fetch 3 marks. Right, now the remaining is for the financial performance and financial position. How many marks? 20 minus 7, 13, 13 minus 4, 9 marks. So for financial performance and financial position, cumulatively you have 9 marks. Okay, cumulatively you have 9 marks. Chalo, let us comment on the financial performance. How? Please see. The gross profit ratio of Coral is higher. The gross profit ratio of Coral is higher. Okay, and what about after exchange difference? Oh, there is no impact of exchange difference on the operating profit margin. So let's write here. Let's write that. Let's write that here. Gross profit margin of Coral is higher. Now, can you tell me the reason why? Gross profit of Coral is higher. Can you tell me the reason why? Why? Because it might be due to a higher selling price or lower cost. Now, sir, you only said that for writing the reasons, we have to link it to the scenario. You have to link it to the scenario. But tell me, in the scenario, in the additional information, is there any information given for gross profit? No. So how can we write that? So here we are left with no other alternative other than writing the, you can say, rote learned knowledge. Okay, now Kusal is saying, sir, introduction is necessary. No introduction is necessary. Directly jump to the financial performance, financial position, your point, and conclude. Close answer. Closed answer. Be specific to the point. Now, students ask me, sir, can we write this analysis in the form of points? Yes, you can do that. Yes, you can do that. No issues at all. Okay, now, so gross profit done. 1 mark, close, done. What else? What else? Operating profit margin. See here, the operating profit margin of Reef is 12. Coral is 7. Means the operating profit margin of Coral is low. But if we compare this with after adjusting the foreign exchange difference, it becomes 13.7. Means it increases. So what I'll write for operating profit margin? Operating, I'll write here, operating profit margin of Coral is lower as compared to that of Reef. As compared to that of Reef. Now you have to write the potential reason for the same. Again, the reason is not given. The reason is not given. So again, we will write rote learnt knowledge. So this could probably be due to better control over costs of Reef. Basically, Reef has a better control over the costs. Reef has a better control over the operating cost, you can say, over the operating costs. Okay. Now, again you write, further, we see that the operating profit margin of Coral increases. See here, the operating profit margin of Coral was ideally 7%. But if we adjust the exchange difference, it becomes 13.7%. Increases to 13.7% after adjustment of foreign exchange difference. Okay, which is higher than Reef. Which is higher than Reef. So now you will say the operating profit margin of Coral is better than Reef. But now again I will counter here. Will this exchange difference come every year? Tell me, will this exchange difference come every year? No, it is only specific to this year. Okay, however, However, foreign exchange gain is an one-off event. Is a one-off event. Is one-off event. Right? Is that clear, everyone? Okay, chalo. So operating profit also we have commented. Now coming to return on capital employed. ROCE. Now, if you are writing ROCE in short form, make sure you are writing it here. You are defining ROCE somewhere. So what I will do is, what I will recommend you is ROCE. You write it off here like this. You write it off ROCE like this here. Okay, so that when you write the answer in the exam, you are not required to write the full RO's, return on capital employed, in the exam. Okay, now can we say it inflated profit? No, we can't say it inflated profit. No. Is exchange gain a fictitious gain? No, it is an actual gain. It is an actual gain. But this gain is coming only in the current year. This gain is coming only in the current year. It will not come up in the next year. Okay, so that's the reason we have to compare. We are comparing this ratio. This ratio is excluding foreign exchange. Okay, because foreign exchange gain will not exist in the future years. It is a one-off event. Now ROCE, let us compare ROCE. So ROCE, if you are wondering that why I am looking at this side always, because my system is in this side. Okay, so I am solving the question seeing this side. Okay, my camera is this side, my system is this side, so that's why I am looking this side and solving it off. Okay, so if you face any challenge, so just clarity. Okay, now coming to ROCE. If you see, ROCE of Reef company is 22.5%. Okay, and ROCE of Coral company is 11.7%. Right? So now basically what is happening? Reef company operating ROCE is better. Now can anyone define what is ROCE? What is ROCE? For each dollar invested in the business, what is the return that I am earning? For each dollar invested in the business, what is the return I am earning? Okay, now the investment can be made in the form of equity shares or can be in the form of loan taken from the market. Okay, but whatever amount we have invested in the business in the terms of in the form of equity capital or non-current liabilities is called as capital employed. Okay, whatever amount we invest, what is the return that we get on it? Okay, so for now tell me, this Aqua company is trying to invest 5.1 million. For each dollar invested, they will get 22.5% return. And in Coral company, only 11.7% return. Now tell me, you only tell me, if you were Aqua, tell me you will invest in which company, Coral or Reef? If you were Aqua, you will invest in which company, Coral or Reef? In my opinion, if I would have been Aqua company, definitely I will consider all other factors, but I will see the ROCE. For each dollar invested, I am getting here 22.5% return as in contrast to only 11.7% return here. Now you might argue that, sir, what about foreign exchange? So even if you take foreign exchange, then also it is 20.5, then also it is 20.5, then also even after foreign exchange, which is one-off event, even after foreign exchange, then also this ratio of 20.5 is lower than that of Reef company. Okay, so ROCE of Coral is significantly lower than that of Reef. Okay, this is due to Reef's better control over operating costs better control over operating costs, and any other reason that you want to say? And lower loan notes, which reduces its capital employed and thereby increases the ROCE. Getting my point? Okay. Now, further, after okay, ROCE of Coral increases to 20.5%. 20.5% after adjustment of exchange gain, but still it is lower than that of reef. Okay, also right here, also this ROCE of 20.5% of Coral is not sustainable. Why? Because it is adjusted for exchange gain. It is adjusted for exchange gain, which is one of transaction. Right? So how many points? 1, 2, 3, 4, 5, 6. 6 points I have written in financial performance only. Now coming to financial position. Now guys, before I proceed to financial position, tell me, is there any point you think that you will not be able to write in the exam? Tell me guys, come on. Any point that you think that, sir, how will I write this point in the exam? Do you think I have discussed any point like that? I don't think so. Come on guys, tell me please. Do you think, is there any point that you can't write? All the points are very simple points. Do you agree with me? Come on guys, tell me. Right? Chalo. Coming to financial position. Now, ratios. Again, which is the ratio of financial position? Gearing ratio. The gearing ratio is 33.3% of Coral as compared to 125% ratio. And even after adjusting foreign exchange, 100%. So right here, Coral appears to be highly geared. Coral appears to be highly geared as compared to that of reef. It is highly geared. Okay. Now further, repayment of loan of Coral is due in 2 years. We saw here, right? See, it has to be redeemed on 31st August 2008. Our is 31st August 2006. So 2 years. Okay. Now, if Coral is unable to repay, it might become an obligation of Aqua if it is acquired. Tell me, would you like to acquire a company which has an obligation? Tell me, will you like to acquire a company? Will you like to purchase a company? Will you like to make an investment in the company which has an obligation, which has to be repaid in 2 years' time? You know, if that company will not be able to repay, I will have to repay this loan. Right? So definitely it is a negative point again. It is again a negative point. So now in favor of Reef, I have lot of points. I have lot of points in favoring Reef. Why? What are the points? High profitability of Reef, high ROCE of Reef, low gearing of Reef, right? So I have got 3 positive points for Reef. I have got 3 positive points for Reef. Okay, now what else? What else? See, the interest expense. The interest expense of Coral is much higher as compared to that of Reef, which will put undue pressure in times of difficulty, as interest costs are fixed charge on profits. Tell me yes or no, right? 3 points here also. Now tell me, are we able to write 9 good points? 1, 2, 3, 4, 5, 6, 7, 8, 9. Done. Is it something very difficult? I believe no, yaar. It is quite very easy to write these simple points. You are not the challenge comes up because we read the suggested answer and we try to match that level. No, my dear friend, no. You are not expected to meet the level of suggested answer. You are not at all expected to meet the level of suggested answer. Not at all. Okay. You are required to learn from the suggested answer, definitely yes. You are required to learn from the suggested answer, definitely yes. Okay, but you are not required to meet that level. Okay, now coming to control. Now tell me, let us make a table. If Aqua acquires Coral, if Aqua acquires a Reef, tell me, if Aqua acquires Coral, how many shares can it acquire? Company has to make an investment of 5.1 million divided by, what is the share price of Coral? What is the share price of Coral? Can you please tell me? 6.6. So how many shares can it acquire? 5.1 divided by 6. You can acquire 0.85 million shares of Coral. Okay. Now Reef, if I acquire Reef, how many shares can I acquire? 5.1 divided by 6.25. So how many shares can we acquire? 5.1 divided by 6.25. We can acquire 0.816 million shares of Reef. Now tell me, what are the total number of shares of Coral and Reef? For Coral, total shares is how much? Of Coral is 2 million, and for Reef is how much? Reef Coral shares is 1 million. 1 million shares. Now, what is the percentage? What is the percentage? 0.85 divided by 2. How much percentage? 0.85 by 2 is 42.5% stake. So if I acquire Coral, I will get 42.5% shares. Now if I acquire this one, 0.816 divided by 1, I will get how much? 81.6% shares. So now, will I be able to make control on Coral? Will I get control of Coral? No. We get control when we get for 50%, above 50%, right? So we will get control only in the reef company, right? So now coming to the conclusion. Okay, now we have to conclude which company to be acquired. Okay, Aqua should consider acquiring reef for following. If you're writing only this much, Aqua should consider acquiring reef, you will get 0 marks. You will get 0. See here, 0. Okay, so then what to be done? Okay, you have to write Aqua should consider acquiring reef because, right here, better profitability of reef and lower gearing of reef. Done. Okay, so this is the conclusion. Done. And we are done with this question. Now one student asking, sir, please explain investment part again. So now I have 5.1 million. Okay, I have 5.1 million that I want to invest. So point is, if I invest in Coral, the share price is 6. How many shares will I get? I will get 0.85 million shares. I will get 0.85 million shares. What is the total shares of Coral? 2 million. So what is the percentage that I am getting? Getting 42.5% only. Okay, I am getting 42.5% of the total shares. But if I invest 5.1 million in reef, if I am investing 5.1 million in reef, how many shares I am getting? 0.816 million. What are the total shares of reef? 1 million. So what is the percentage shares I have acquired? 81.6. Tell me, do you think I will get control in 42.5? Do you think I will get control in 42.5? No, I will get control if I have acquired more than 50, which is happening in the case of reef, right? That's why I should acquire a reef company. Tell me, is that clear? So this question, if you write, you can get 20 out of 20. Is it easy to score 20? Is it easy to score 20? Yes, students have done it in the past, and you can do it, okay. If one of my student itself, he scored 20 out of 20 in interpretation of issues on the basis of my performance evaluation. I can say this, he scored 20 out of 20. Okay, now is that clear, everyone? Okay, sir, can we write all the ratios as a percentage? No, you can't write all the ratios as a percentage. The few ratios has to be written in times. Like for example, interest coverage ratio in the times. Few ratios has to be written in days. Okay, inventory holding period, days, right? So depending upon the type of ratios, you have to change the percentage or days, or you can say times. Accordingly, you have to change it off. Okay, so this completes our question number 31. Okay, now we have to move to the next question. Okay, I think this is the first video on the entire YouTube where someone has actually solved it off. Many would have discussed, I have solved. Many would have discussed, I have solved it for you guys. Okay, and this is the exact format how you have to solve in the exam. Okay, this is the exact format how you have to solve in the exam. Okay, chalo. So the next question is from interpretation of financial statements. Now, as I mentioned in the last class, a question of interpretation of financial statements can be any one of these. Either it can be comparison of year on year, same company, but two different years, current year, previous year. You have to compare two different companies. So in the last class, when we discussed September, December 2025 exam paper, we discussed comparison of two companies. Okay, that is Coral and Reef. Now today we have to discuss comparison with sector averages. Okay, so now the question is on the screen. The question is on the screen where a company is into the picture and the question has given you the sector averages ratio, and now you have to compare the ratios of this company with the ratio of the sector and conclude whether this company is outperforming the sector or underperforming the sector. Is that clear? Shall we discuss it, guys? Come on, tell me. Is that clear? Shall we start and discuss the question? Chalo, let us discuss it. Okay. Now, it says Longannet Company is the largest supermarket chain in its country. Okay. Its financial information is presented below. Now, Longannet Company, just a minute. Now, Longannet Company, the extracts of P and L is given here. The extracts of P and L is given here. And the reporting date is 31st March 20x5, and we need to highlight the reporting date. And we have to highlight the reporting date. Okay, now revenue is given, cost of sales are given, gross profit is given, operating expense is given, operating profit is given. Okay. Okay. The extracts of statement of financial position is given here. Okay. Now a question is coming, a query is coming. Sir, giving the answer in bullet points in interpretation, will it deduct marks? No, my dear friend. No. You can write your answers in the bullet points. No issues at all. Okay. At FR level, definitely you can write. Now, so statement of financial position is given. So let us read the statement of financial position. It says inventories is given, other current assets are given, equity is given, long-term borrowings are given. Now, can anyone tell me, guys? Again, this is a comment in the examiner report. What will be the capital employed? In this question, can you please read the question and tell me capital employed? Come on, guys. Can you read the question and tell me the capital employed? Come on, guys, tell me. Can you tell me the amount of capital employed? Let me see who can answer it correctly. What is the amount of capital employed? I am getting an answer from Tanya, 15,600. Okay. Any other answers? So please understand, capital employed is the amount invested in the business. Amount invested in the business, whether in the form of equity or long-term borrowings. Okay, equity is 10,000, long-term borrowings is 11,000, which makes the capital employed as 21,000. Okay. Now, one student mentioned 15,600. So they arrived at this way. Is this correct? No, it is wrong. It is wrong. You have to take equity plus non-current liabilities both. If there is a lease liability, will we take lease liability also? Yes. Lease liability will also be a part of capital employed. Lease liability will also be a part of capital employed. Okay, chalo. Now, the averages or the ratios for the sector is given and some additional information is given. Okay, now let us, before reading the additional information, I want to read the requirements of the question. Shall I read the requirements? Chalo. It says, calculate using the pre-formatted table provided, that is, this is called as a pre-formatted table. Okay. and excluding the gearing ratio, the equivalent ratios for the Longannet company for the year ended 31st March 2005 to compare to the sector averages. Okay, now prepare the manual journal entry to correctly account for the convertible loan notes. Where is convertible loan notes? Okay, here it is convertible loan notes. So we'll deal with this also. And part number 2, it says you have to manually pass the journal entry. So students who are saying, sir, we don't know journal entry, can we pass the FR exam? So please understand, journal entry is the base of financial reporting. Journal entry is the base of financial reporting. Okay, now, so it says prepare the manual journal entry to correctly account for the convertible loan notes, and having adjusted the relevant line items, calculate the Longannet company's gearing ratio. Okay, so first of all, you have to pass the journal entry to record this and then calculate the gearing ratio. Analyze the financial performance and position of Longannet company for the year ended. Now understand, this question is of 20 marks. 4 marks is for calculation, and again 4 marks is for calculation. So definitely, in my opinion, these 8 marks will be easy for you. These 8 marks will be quite very easy for you to score. Now in this 12, even if you score, 12 means 12 points you have to write. 12 means 12 points you have to write. Okay, now if you write even 8, you are scoring 8 here and 8 here, 16 out of 20. What else do you need? Right? Now, even if you have a target of scoring 100 out of 100, definitely you have that skill to score 12 out of 12 in this. Sir, how to score 12 out of 12? The practice. The more you practice, the better you become. The more you practice, the better you become. So if you take a pledge, that I will be attending all the 5 days of my marathon, okay, and solving each and every question which I am solving in the class here, you will solve it after the class. Immediately after the class, you will solve it. Okay, then definitely you will get a strong hold on section C. Okay, chalo. Now, so since we have already read the requirements, now let us read the additional information and then calculate the ratios. So first of all is the convertible loan notes, which I will not read now because for part A it is not required. For part A it is not required, so I will not be reading it now. I will go to the second point. Now these all are the reasons to justify the ratios. These all are the reasons to justify the ratios, right? If you read it, to combat the increased competition from the competitors which earn lower margins, Longannet opened a new range of cheaper budget stores. These opened in the month of Feb and March 2005 following a large publicity campaign. Longannet company owns all the properties and measures these using cost model. However, the competitors hold the properties under long-term leases. Longannet entered into an agreement with the retailer of home furnishings during the year, enabling them to sell these products in its store. Many of these Longannet competitors focus on the retail of food and drinks products only. For the year ended 31st March 2005, Longannet company had an average of 290 employees. So these are the reasons to justify the increase or decrease of the ratios. So as and when needed, we will come to these ratios. As and when needed, we'll come to these information. As of now, I am totally ignoring these information. For now, I am ignoring it. My first priority is to score these 8 marks. My first priority is to score these 8 marks. Okay, chalo. Now, first is gross profit margin. Come on, guys, tell me how to compute gross profit margin. How to compute gross profit margin. Now, in the exam, are you required to write the formula? In the exam, are you required to write the formula? Not at all. Rather, you have to show the workings. Formula will not fetch you even a single mark. Okay, but if you write the workings, it will give you marks. Okay, please understand. Gross profit margin. So gross profit is 4070. divided by revenue is 25320. Operating profit margin. Operating profit is 620 divided by 25320. Now return on capital employed is 620, that is operating profit, divided by what is capital employed. We just now calculate 10 plus 11,000. 10,000 plus 11,000. Okay, now what else? Just a minute. Revenue per employee. What is the revenue? What is the revenue of the company? 25320. 25320. Now, what is the number of employees? What are the number of employees? Tell me. 290 for the year ended 31st March 2005. Longannet company had an average of 290 employees. So 25320 divided by 290 employees. Gearing ratio we are not required to compute now. So let us come to the inventory turnover period in days. How to calculate inventory turnover period? So it will be inventory divided by the cost of sales multiplied by 365 days. So what is the inventory? Tell me, what is the inventory? 960 divided by what is cost of sales? 21250. 21250 multiplied by 365 days. Okay. What is trade payables payment period? So what is the balance of trade payables? 4600 multiplied by, divided by what is cost of sales? 21250. I believe guys you already know these formulas and I am not required to explain the formulas to you. What is the current ratio? It is current assets by current liabilities. What is the current assets? 9590. What are current liabilities? It is 4600. Done. So now can you please compute the ratios and tell me the answer? 16.1%. Operating profit margin 620 divided by 25320. It is 2.4%. This one will be 3% around approx. Now this one, revenue per employee, it is 25320 divided by 290. It is 87,310. Inventories holding period is 16 days. Trade payables payment period is 79 days. Current ratio is 9590 divided by 4600 is 2.08 is to 1. Is that clear? So we have very well computed the ratios and we have scored 4 marks. Tell me guys, is that clear everyone? Is that clear everyone? Come on guys, please tell me. Is that clear to all of you? Okay, chalo. How is revenue 87310? Okay, it is 25320. 25320 in thousands. Okay, 25320 is in thousands. So I will take absolute figure divided by 290. That comes to 87310. Buddy, 25320 is in thousands. It is in thousands. Okay. So I have to take absolute figure na. Okay. Dollar. Okay, you all of you want to say, come on, all of you, on the count of 3, 2, 1. How's the Joes, guys? Come on, tell me. How's the Joes, everyone? How's the Joes, everyone? Come on, guys, tell me. Chalo. So we have very well calculated the ratios for 4 marks and it is done, guys. Okay. Now we have to come to the requirement number B. Now, prepare the manual journal entry to correctly account for the convertible loan notes. What does that mean? There is something mistake in that. So what is the mistake? What is the mistake? Chalo, let's read it. Longannet Company issued $0.8 million 4% convertible loan note on 31st March 20x5, which can be converted into shares or redeemed in cash on 31st March 20x8. The interest is payable annually in arrears. As the holders of the loan notes have traditionally converted these to shares, the entire amount of $0.8 million of proceeds has been classified as other reserves in equity. The similar loan notes without conversion right carry 7% interest rate. Now come here and tell me, guys. Whenever we issue convertible loan note, what does that mean? A portion of the loan note is equity and a portion of the loan note is financial liability. Right? Tell me yes or no. A portion of the loan note is equity and a portion is financial liability. Now what they have done is they have classified the entire amount as equity. Is that correct? No. So understand what is happening here. Please understand. Wrong treatment that they have given is bank account debit to equity. How much? The entire amount of 0.8 million. This is wrong. This is wrong. Then what is correct? Then what is correct? Correct treatment. So we have to find the value of financial liability and equity and then do the treatment of the same. So correct treatment will be value of financial liability will be present value of principal and interest. Okay, so what is the present value of principal? Can you please tell me what is the principal amount first of all? 0.8 million. So I will write it in absolute figures, or let's write in thousands. Let's write in thousands for ease. 800 multiplied by present value interest factor, or I'll say directly 7% is discounted, multiplied by 0.816. Present value of interest will be 800 multiplied by 4% multiplied by, can you please add up all the 3? 0.935, 0.873, 0.816. 0.935 plus 0.873 plus 0.816, that comes to 2.624. 2.624. Sir, why have you taken 7%? Because we are calculating the value of pure financial liability. So discounting the cash flows of pure financial liability at a pure financial liability discount rate 7%. Okay. Now this will give us the value of pure financial liability. Basically, we are applying a split accounting of the chapter of financial instruments, if you can recall of it. Okay. Compound financial instruments. 800 into 0.816. That comes to 652.8. And here It is 800 into 0.04 into 2.624, 83.968, 84, 653 you can write. Okay, so the value of financial, therefore value of financial liability is 653 plus 84, which is equals to 653 plus 84 is equals to 737. So now what, therefore what is the value of equity? Can anyone tell me what is the value of equity? It is 800 minus 737, that is financial liability. This will be equity. So 800 minus 737 is 800 minus 737, that is 63. So now that is 763. So this is, now what should be the correct treatment? Tell me now guys, what should be the correct treatment? So correct treatment will be, bank account debit 0.8 million to financial liability. I'll write here 800 for the easy understanding. Here I'll write financial liability is 737 and equity is 63. Okay, now here also I'll make the same changes. Here I'll write here 800 and equity is entirely 800. So now what is the manual journal entry to rectify? What is the manual journal entry to rectify? So we have to debit equity, debit to financial liability. How much? 737. Tell me, do you all agree with me with this journal entry? Do you all agree with this journal entry? Come on guys, tell me. Do you all agree with the journal entry? Okay, because equity was credited by 800. Ideally equity should be only 63, so we have to reduce equity by 737 and we have to increase financial liability by 737. So this is what it is. Now can you compute gearing ratio? Now gearing is debt by equity. Again guys, if the question gives you the formula of debt equity ratio as debt by equity, will you use any other formula, that is debt equity ratio is debt by debt plus equity? Will we use that? No, no, no. Now students are asking why this journal entry. So please understand, this is the wrong treatment, this is the right treatment. I believe you already know how to pass the rectification treatment, right? That I expect. Okay, now coming to the debt equity ratio. Tell me what is debt. Debt is not 11,000 now. It is 11,000 plus 737 divided by, what is equity now? What is equity now? Equity is not 10,000 now. 10,000 minus 737. Do you agree with me? So 11,000 plus 737 is okay, and 10,000 minus 737 is 9263. So 11737 divided by 9263, that comes to 127%. 127%. Is that clear, everyone? Now, so this is the gearing ratio. So with this, you have again scored 4 good marks again. 4 good marks again, done, sorted. right? So now what is done? See, out of 20, you have already scored 8 marks. Now the remaining 12 marks. How will I sort the remaining 12 marks? Please see. So we have to comment. Now our comment should be divided into 3 parts: financial, performance, then financial, position, and then conclusion. Conclusion. Okay. Now, in conclusion, how will we write? In conclusion? How will we write the conclusion? So in the conclusion, you have to write. Okay. You have to analyze. Is Longannet outperformed? Not is, has. Outperformed or underperformed the sector, and why? This is what you have to conclude. This is how you have to conclude. So for conclusion, you will get as good as, just a minute, I will have the marking scheme with me. I do have the marking scheme with me for conclusion. Just a minute. In my opinion, you will get 1 to 2 marks for the conclusion. Okay. Yes. So conclusion, you will get around 1 to 2 marks depending on how you write. For performance, you will get as good as 6 marks. And for financial position, okay, 12, right? So 6 and 2, 8 done. 4. So you're here 4 to 5 marks. 4 to 5 marks here. So this will be the allocation of marks. So one student is asking, how did we pass this journal entry? ठीक है, चलो, let me show it to you. Though I think it is very bare minimum to expect this much, but still, chalo, let me discuss. Equity, financial liability. So please understand, what is incorrect treatment? They have written the entire amount as equity 800. What is correct treatment? FL is 737. Equity is 63. So what is the rectification? You have to reduce equity by 737 and you have to increase financial liability. So how to reduce equity? So equity will be debit 737 to financial liability credit 737. Is that clear now? Come on, buddy, tell me, is that clear now? Wonderful. Chalo. Coming to the third part, that is analysis. Now, how to do the analysis? So just compare the ratios. Tell me, gross profit margin is high. Gross profit margin is high. Gross profit margin is high. So we will write here, gross profit margin is high for Longannet as compared to that of sector. Why? Now comes the reason why. Only writing high will not fetch you marks. You have to write the reason. Okay, as Longannet is the, if you see here, largest supermarket chain, is the largest supermarket chain in the entire country. Okay, hence it would have obtained economies of scale. What is the meaning of economies of scale? When you produce in large quantities, the cost of production goes down. Right? The cost of production goes down. The cost of production per unit goes down. The cost of production per unit goes down. Okay? Now, so gross profit, not bulk discount, rather I say cost of production. Okay? Economies of scale, yes. Now, operating profit margin is lower. Why? So now it's a time that we should read the reasons also. See, I'm not able to justify why operating profit margin is lower. Operating profit margin is lower as compared to that of sector. Why? To combat increased competition from the competitors. Now the competitors earn lower margins. So Longannet company opened new range of cheaper budget stores. These opened in Feb and March 2005. Now we have opened in the month of March and Feb, we have opened new stores. Now, Wedman, I am not able to read the name, but whoever you are, so please understand the answers or the reasons which you are giving are bookish knowledge, are bookish reasons. Are we required to write those type of reasons in the exam? No. Read the additional information given in the question. Link the increase or decrease of ratios with the information given in the question, and then only you will get good marks in the analysis. Okay, now we have opened new stores, okay, where we are selling cheaper products. Okay, now one student will say, sir, we are selling cheaper products, that's why our operating profit margin has gone down. No, my dear friend, we are selling cheaper products means our gross profit margin will go down. It means our gross profit margin will go down because the cost is less. Na, I am saying operating profit margin is less. It means some operating cost is more. Now the cost to open these stores is an operating cost, right? The operating profit margin is lower as compared to sector because of significant costs would have been incurred in the publicity campaign of newly opened stores. Right? Publicity campaign, yes, very well point. Publicity campaign, rental expense, and other administrative expenses of newly opened stores. These stores, no, okay, fine. Done. So we have written the reason for the operating profit margin. Okay. Now further, let's write one more point. Profitability will further go down, will further decrease. Now I'm not saying operating profit, I'm saying overall profitability. I am talking about overall profitability. Why? Profitability will further decrease in next year. Why? Because newly opened stores deal with products with lower margins. Getting my point? Now, what else? Let's read the ratios again. Return on capital employed is higher. Okay, then why? Why is ROCE higher? So what to do? One thing here, you do one thing. Here you write in the bracket ROCE, so that we can write everywhere ROCE. ROCE of Longannet is higher as compared to that of sector. Why? Come on guys, please tell me. Why is ROCE higher? Operating profit margin is low. Operating profit margin was lower, right? So definitely you can't say higher operating profits. No, because operating profit margin was less, right? So the increase of the ROCE is attributed to the capital employed. So we have to find the reasons of capital employed. Okay. Now, ROCE of Longannet is higher as compared to the sector because of capital employed. First of all, write capital employed. Then let us analyze and break it. It is because of capital employed and not due to operating profit, that is for sure. Because operating profit was less, so it would have decreased ROCE, but ROCE is increasing. So let's read. Longannet owns all the properties and measures these using cost model. Its competitor hold properties under long-term leases. Okay, because of following. So I can write point number 1. Higher lease liabilities in the financials of competitors as they hold properties under long-term leases. Now, higher lease liabilities increases capital employed and thereby decreases ROCE. Okay. Now, it might be the case that competitors would have measured the properties at revaluation model. Sir, it is not mentioned in the question. Then why are you saying that? But the question says Longannet company owns all the properties and measures under cost model. So might be the case that competitors would have measured it at fair value model, revaluation model, right? revaluation model, if we follow revaluation model, the revaluation gain will be accumulated in the revaluation reserve, which will increase the equity, which will increase capital employed. This will increase capital employed and thereby decrease ROCE. Okay, done. So this is also done. What's next? What's next? Revenue, return on capital employed is also done. Now revenue per employee. Revenue per employee. Revenue per employee of Longannet. Just check, is it higher or lower? Is it higher or lower? If I can recall, it was lower. It is lower. So for the sector, it is 94250. But for Longannet, it's 87310. Revenue per employee of Longannet is lower as compared to sector. This prima facie indicates inefficient management of employees by Longannet. However, this could also decrease due to new employees hired in newly opened stores, which will fetch revenue only in the next year. Right? Since we have opened up the new stores, we would have hired employees in that store, right? So the number of employees increases. The number of employees increases. But understand, revenue per employee is a factor of revenue and number of employees. Number of employee increased. But tell me, we opened the store just in the month of March, last month of the year. Tell me, do you think revenue would have increased? No, revenue would not have increased, right? So revenue will increase in the next year. For the full year impact, it will come only in the next year. That's why it would have decreased. Revenue per employee would have decreased. That's the reason. That might be the reason. That might be one of the reason. Okay. Now, this is for I think how many points? 1, 2, 3, 4, 5, 6 points we have written. 6 marks, 6 points. Very well written. Is that clear, everyone? Come on, guys, tell me. And tell me, have I written something really out of the box? Have I written something really out of the box? I don't think so, yaar. I don't think so. Okay. I think we have written fairly good points, easy to understand, easy to explain, nothing beyond the box, nothing out of the box. Chalo. Now coming to the financial position. Gearing of sector is 68 and Longannet is 127%. Oh my God. Highly geared company. Okay. Now, it appears, now understand, Longannet is highly geared in comparison to the sector. Why? Tell me why. If you can recall of it, it said that the company owns all the properties, right? It appears that Longannet would have used significant borrowings to purchase properties. to purchase properties. To purchase properties. Okay. Now, Prakash is saying due to convertible debt. See, convertible debt that is issued is only 737, right? But if you see, the company has 11,000 of non-long-term borrowings. Just see here. What is the, see, this is the total debt that the company has. Non-convertible debt, sorry, convertible debt, convertible debt that the company has issued during the year is only this much. Apart from that, also the company has 11,000 of borrowings. Why? Might be company have used the borrowings to fund the purchase of new assets or to fund the purchase of new stores. Okay. Then what else? Gearing is done. What else? Inventory turnover period. 16 days, 13 days. Any comment on that? Any comment on that? See, we have used this one. We have used this one. Now, Longannet company entered into an agreement with a retailer of home furnishings during the year, enabling them to sell these products in its stores. Many of the Longanet's competitors focus on the retail of food and drinks products only. Higher inventory holding period. Higher inventory holding period. Why? This could be due to lower inventory period of competitors as they deal with foods and drinks which are perishable. Which are perishable in nature. Which are perishable in nature. Okay. Further, you can write one more point. You can write one more point. You can write one more point. Further, if Longannet deals with perishable goods, then higher inventory holding period is a area of concern. Is an area of concern. Is that clear? Chalo. Then what else? What else? Trade payables payment period. Higher trade payables payment period. Okay. Which is a good sign, I believe. Higher trade payables payment period of Longannet company. And tell me why. Tell me why. Why it is higher. Why do you think it is higher? Might be due to better, you can say, a reputation in the market, right? When you have a better reputation, you get better credit. When you have a better reputation in the market, it means better credit. Okay, in the higher trade payables payment period of Longannet, okay, enjoyed by Longannet is enjoyed by Longannet as compared to sector. This might be due to a better reputation in the market, as it is the largest supermarket chain. Right? If you become large, you become reputed. That's how the situation works. That's how the market works. The more large you become, the more reputed you become. Right? If you see top personalities or celebrities, even if they do something wrong, then also we respect them. Right? then also we respect them. If we see very persons at the bottom line and they are very good as a person, then also we might not respect them, right? So the large you become, that's how the world works, guys. That's how the world works. Okay, the more you reach at the top, the more respect you govern in the market. Okay, sir, you were teaching FR, you came into psychology. Okay, no issues. Chalo. Higher trade papers, payment paid also done. What else? Current ratio. Current ratio is how much? 2.08:1 and it is 1.8:1. Higher current ratio of Longannet represents that it is able to manage its current assets properly and is very well able to repay its current obligations. Sorted. Right? So how many points we wrote here? 1, 2, 3, 4, 5. Right? So 6 points here, 5 points here, 11 points done. Now 1 point for conclusion. How to write the conclusion? So now overall, tell me, what do you see? Overall, tell me now. Overall, is the Longannet outperforming or underperforming? I think, see, gross profit is high, ROCE is high, operating profit margin is low, but that is a one-off event because of you can say opening of new stores, right? So otherwise profitability is higher. Everywhere the profitability is higher, right? So I can say first of all, I'll conclude overall the profit overall Longannet has outperformed the sector. Okay, now you have to just writing this. Will it fetch you mark? No, you have to justify your point. Why? Because it is because of higher but not higher, right? It's a better profitability, then strong liquid funds because the current ratio is higher. Okay, further, new stores being opened representing growth and okay, and take it now this one. Further, the company is highly geared, but it is stable as it has sufficient properties as well. Done. That's all. Okay. Sir, how can you write sufficient properties? It is nowhere given the question. But because, see, we have assumed now that the loan has been taken to purchase properties, right? So you can write that also. You can read from the sentence. It is highly geared, but it is stable as the loans are obtained against properties. You can read from the sentence anyways, right? So this is how you have to write the answers in the exam. Tell me, guys, is that clear to all of you? So we have written A, B, and C all, right? 12 marks. If you can see, I have written 12 good points. Just 12 good points. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Right? You can just make it 2 points ideally. Done. Okay, so this is how we have to write the answer in the exam, and I believe this sessions is and will be helpful for all of you. On this note, now tomorrow we are going to discuss which paper. Tomorrow we are going to discuss September December 2024 exam paper. September December 2024 exam paper. Okay. Now, this question is from the interpretation of financial statements. Okay. Now, let us read the question first of all and try to solve it off. Okay. Let me open the examiner report also for this question, because I have highlighted the comments which I will be discussing with you guys. Done. The directors of clocking purchased 80% of the 100 million ordinary equity $1 shares in stopping on 1st April 2008. Okay, this is an interpretation of the group FS. This is an interpretation of the group FS. So if you can recall, I mentioned in the very first class itself, the questions that comes up can be from comparison of year on year, comparison of two companies, comparison of sector or industry averages, acquisition of subsidiary, disposal of subsidiary, right? So please understand, let me highlight that. For September December 2025 question paper was interpretation from this part. March June 2025 question paper was from this one. Now today is September December 2024. It is from this one. Okay, if you are able to notice, they are asking on a circular basis. Okay, now, so ideally, even if I'm doing all these analysis, don't try to find out a way to identify which question will be asked in your attempt, because you will not be able to identify, because ACCA, understand, you will not be able to predict the paper in any case. Okay, why? Multiple reasons. Point number one, the paper which is released by ACCA is a hybrid paper. March June 2025, September December 2025 means what are the best question from September 2025 exam, December 2025 exam? It is this one. Now in every exam they prepare 3 to 4 sets of question paper, and in each question paper, some question paper will have group accounting, some question paper will have interpretation, some question paper will have single entity. So you never know which question will come to you. Okay, so will you be able to predict the paper? In no scenario will you be able to predict the exam paper in any case. Okay, there are multiple videos that circulates in the before the exam, that paper prediction. Okay, so I will strongly recommend you, don't go behind paper predictions. Okay, don't go behind paper predictions. No one can predict the paper. Even ACCA, if you ask them, if you ask ACCA, can you please tell me which paper will I get? Even ACCA doesn't know. Okay, so don't go for paper predictions in any manner. Chalo. Let us discuss this question. The directors of clocking company purchased 80% of the 100 million ordinary equity, okay, in the stopping company. The consideration comprised of 1 of 4 share exchange. There was also immediate cash payment of $2.8 per share. and a further $2.7 per share is payable on 1st April 2009. On 1st April 2008, the market value of each equity share in clocking company and stopping company was 12.5 and 8 respectively. Okay. Now, the retained earnings of the company are given. For the subsidiary company, retained earnings is given. Profit earned by the subsidiary company during the year is also given. The company has a policy of valuing non-controlling interest at fair value and has a cost of capital of 8%. This appears to me a question of group accounting. Okay. The directors of clocking have accounted for the acquisition of stopping company correctly. Okay, the consolidation has been done correctly. Okay, and there are some additional information given. Okay, now what is the requirement? What does the requirement ask? Calculate the goodwill. So now again see here, for the students who say, sir, my interpretation is weak, please see here. 20 marks question, 5 marks for calculation of goodwill. Will you be able to solve it? Very well, easy marks. 5 marks for computation of ratios, again easy marks. So out of 20, 5 plus 5, 10 easy marks. Then again 2 marks for the limitations, very restricted answer, right? Very small answer. Again 2 marks also gone, right? So 5 plus 5, 10 plus 2, 12 marks are very easy peasy. You have to write analysis only for 8 marks. Right? So even out of 8, you are able to write 5 good points or 6 good points, which definitely I believe you will be able to write 6 points in the entire question. You think you will not be able to write 6 points? Definitely yes, 6 points is very easy to write, right? Now, so 5 plus 5, 10, 10 plus 2, 12, 12 plus 6, 18 marks. So out of 20, you are very easily able to get 18 marks out of 20. That's a good score. Okay, chalo. Now we have to compute first of all goodwill. Okay, so for that, let me include the table first of all. Now, how to compute goodwill? Goodwill is purchase consideration. Add, since NCI is at fair value method, so I'll write here fair value of NCI on date of acquisition less fair value of net assets on date of acquisition. That will give you the goodwill. Sorry. Chalo. Let us compute the values. The directors of clocking purchased 80% of the 100 million ordinary shares in stopping company on 1st April 2008. So we have acquired on what date? 1st April. So this is the date of acquisition. Please keep in mind. What is the reporting date? Reporting date is 30th September 2008. Again, keep in mind. So means subsidiary is acquired in the mid of the year. Purchase consideration. Please understand. Cash payment. What is the amount of cash that you are paying? Cash payment is how much? 80,000 shares multiplied by 2.8 is cash payment is equals to how much? 80,000 into 2.8 is 224,000. Chalo, what else? And a further cash of 2.7 per share is payable on 1st April 2009 means it's a deferred consideration. We have to compute the present value using the cost of capital of 8%. So fine, present value of deferred consideration, which will be equals to 80,000 multiplied by 2.7 divided by 1.08. So what is the amount? 80,000 into 2.7 divided by 1.08 is 200,000. Then what? Then what else? What else? Share exchange. Share exchange. So fair value of share exchange. So what is the fair value of share exchange? 1:4. So it is equals to 80,000 multiplied by 1/4. Now, so this is the number of shares that will be issued by the parent company, that is clocking company. So what is the fair value per share of clocking? 12.5. So what is the amount? 80,000 by 4 into 12.5, 250,000. Done. Anything else? No. So what is the value of purchase consideration? What is the value of purchase consideration? 250,000 plus 224,000 plus 200,000. It is 674,000. I believe it is very much clear to all of you. I believe it is very much clear to all of you. Now, what is the fair value of NCI on date of acquisition? So how many shares NCI has? 20,000. Total shares was 100 million and parent has 20,000 and NCI has, parent has 80,000 and NCI has 20,000. Okay. Now what is the share price of subsidiary? 8. So fair value of NCI is 160,000. Now fair value of net assets. Fair value. What is the share capital of subsidiary? What is the retained earnings at 1st October 20x6? What is the profit till 1st April 20x8? Not x, this is x7. Share capital is how much? 100 million. So means 100,000. Retained earning at the opening of the year is 610,000. Profit here is how much? 88,000 for the entire year. But we have to take till 1st April, means October, November, December, January, Feb, March. 6 months multiplied by 6 by 12. That is equals to 44,000. So what is the amount? 100,000 plus 610,000 plus 44,000. That comes to 754,000 minus 754,000. So what is the goodwill? $674,000 plus 160,000 minus 754,000. It is 80,000 is the value of goodwill. Is that clear to all of you? Come on, guys. Can you please tell me, is that clear? Goodwill is clear to all of you? Is the goodwill clear to all of you? Is the goodwill clear to all of you? Chalo, done. So first paragraph, first part for 5 marks, done. 5 marks sorted, 5 marks sorted. Now comes the next. Now comes the next. Ratios. Chalo, let us find out the ratios. Let us find out the ratios. Pre-formatted table is already given. We have to find the ratios using the extract of the financial statement for current year and for the previous year both. Chalo, let us do that. Gross profit for, first of all, we'll do it for 20x8 and then we'll do it for 20x7. Okay, chalo. Gross profit is 157,250 divided by 418,000. Operating profit margin is 96,777 divided by 418,000. Return on capital employed is 96,777 divided by, what is the capital employed? Capital employed is debt plus equity, that is 1168,287 plus 387,000. Okay, then what is net assets turnover ratio? What is the formula for net assets turnover ratio? It is revenue by capital employed. Revenue is how much? 418,000 divided by what is capital employed? Can you please add up and tell me? It is 1168 287 plus 387,000, that is 1,555,287. 1,555,287. Now gearing ratio is debt by equity. So what is the debt? Debt is 387,000. Equity is 1168,287. Now what is your interest coverage ratio? What is your interest coverage ratio? Tell me, guys. Interest coverage is the operating profit 96,777 divided by interest is 10067. Okay, now can you please tell me the ratios? Can you please tell me the ratios? 37.6%, 23.2%, 6.2%. Net assets turnover ratio is 0.27 times. Gearing is 33.1%. Interest coverage is 9.6 times. Chalo, let us do it for 20x7, the previous year. Okay. Now gross profit again, 158,520 divided by 340,400. Then operating profit is 101,482 divided by 340,400. Then return on capital employed. Return on capital employed is 101,482 divided by what is capital employed? Debt plus equity, that is in the bracket 852,305 plus 104,000. Now what is net assets turnover ratio? It is revenue by capital employed. Revenue is 340,400 divided by what is capital employed? 852,305 plus 104,000. It is 956,305. 956,305. Gearing, debt by equity. So what is debt and what is equity? Debt is 104,000 divided by equity is 852,305. 852,305. Now interest coverage. Interest coverage is operating profit is 101,482. 101,482. Interest is 3,187. Chalo, let us tell me the ratios for the previous year. 46.6%, 29.8%, 10.6%, 0.36 times. Gearing is 12.2% and interest coverage is 31.8%. Okay, because I know you guys don't give me answer, so what I have done is I calculated the ratios beforehand and I came in the class. Okay, I have I have calculated the ratios. I've already calculated the ratios and came. Okay, so final numbers I already had with me. Okay, but just that I wanted to show how things work. That's why I calculated in the class also. But ideally I had the final numbers. So 5 plus 5, 10 marks, sorted. 5 plus 5, 10 marks, sorted. Is that clear, everyone? Is that clear, everyone? Okay, chalo. Now we have to write about the performance and the gearing. So what you have to write? Analyze the comparative performance and then the gearing for the year and comment on the limitations of the ratios. What are the limitations of the ratios? Okay, and then conclusion. So our analysis will be divided into 4 parts. First of all, we will have to comment on the financial performance. Then we have to comment on the gearing. Then we have to comment on the limitations. And then we have to comment on the conclusion. These 4 things. Now, how will you divide the marks? 1 mark, total 10 marks, right? 1 mark here. Sorry. 1 mark here. 2 mark here. Then 7 marks remaining, right? So you can write here 2 points here and 5 marks here. 5 marks here. Chalo. First of all, I will write the limitations. Tell me, please understand. The subsidiary has been acquired in the current year, right? The subsidiary stopping company is acquired in the current year. So the current year is parent plus subsidiary, but previous year was only parent. Previous year was only parent. So first limitation I can write here. The first limitation I can write here is the financial statements are not comparable. Are not comparable. Why? Because financial statements of 20x8 includes stopping for 9 months, but the same was not there in 20x7. Okay, it was not there. Second limitation, second point, individual financial statements of stopping is not provided. So we have fairly 2 limitations with us. Okay, because individual understand whether due to acquisition, profits might increase, profits might decrease or decrease, anything can happen, right? So if we are saying it is either increase or decrease is due to stopping company, so we have to see individually what was the profitability of parent, individually what was the profitability of subsidiary, right? So individually the profitability of parent we can see from the previous year, because previous year subsidiary was not there. But do we have the financial statements of subsidiary to see the individual profitability of the subsidiary? No. Okay, to evaluate individual profitability of stopping and the impact it would have on consolidation. I believe it is clear, everyone. The limitations. So 2 marks again sorted, 2 marks again sorted, right? Now coming to financial performance. Okay, but before writing the performance, let's read this additional information we have not yet read. Clocking company has suffered decreased revenue in recent years. This, which directors believe, is mainly due to general economic downturn. The falling sales were the main reason for the investment in stopping company. Now, in the conclusion which you are writing, you have to conclude whether the objective of acquisition of stopping is met or not. What was the objective? Declining. Okay, to reverse declining, decreasing, or decreasing, falling, to reverse falling sales and profitability. Okay, this was the objective. So we have to conclude by this one. Now coming to financial performance. Okay, now under again read it. Clocking has suffered decreased revenue in the recent years, which director believe is due to general economic downturn. The falling sales were the main reason for the investment in stopping company so that the clocking company could have more control over its competitors. To encourage customers to continue purchasing from the clocking company throughout the economic downturn, many products are now being sold at significantly discounted prices. Now we are selling at discounts. So what does it mean? If we are giving discounts, we are increasing the discounts in the current year. Tell me what will be the impact in the current year? The gross profit margin will go down. The gross profit margin will go down. To assist in generating future revenue, clocking had taken a loan of 25 million in the current year. Okay, chalo, let us now evaluate. The gross profit margin has went down. It is very much evident. It was very much evident. So let's write here. Gross profit. Somehow we knew this part will happen. This is going to happen. Gross profit margin has decreased as compared to 20x7, and okay, this is primarily due to general economic downturn. Okay, this is due to general economic downturn, which led to significant discounts. Since we are giving discounts, the sale price going down, cost remaining same, gross profit falls. Okay, now what else? Your operating profit margin is also falling. So let's write here operating profit margin has also decreased as compared to 20x7. Now comes the reason why. Just see here. It has decreased. Why? Why? Because I can see the reason is this is due to a carry forward impact. This is due to a carry forward impact of decreasing gross profit margin, right? Let's see if that's the case, right? Gross profit margin has decreased by 46.6 minus 37.6, that is 9%, and operating profit margin has decreased by 29.8 minus 23.2, 6% only, 6.6%. Okay, so operating profit margin has fallen less as compared to fall in the gross profit margin. Okay, so let's write that also. The decrease in operating profit margin is less as compared to decrease in gross profit margin. This represents a better control over operating costs. This represents a better control over operating cost. Now we need to keep in mind that since we have acquired a subsidiary during the current year, we would have incurred some operational cost for that, right? The acquisition related costs. This would have increased the operating expenses and further decreased the operating profit. But still the operating profit margin is not decreasing by that ratio. So it's a better control over the cost. So let's write that also. Okay, let's write that also. In spite of acquisition of stopping, which would have led to many acquisition, not many, which would have led to acquisition related costs, thereby increasing the operating expenses. Okay, thereby increasing the operating expenses. Still, if still the operating margin is falling less as compared to gross profit margin, is a good sign, is a good control, better is a good control over, is a good control over operating costs, is a good control over operating costs. Are you able to understand what I'm trying to say? Come on guys, tell me. Right, we have to write 5 points, 5 marks, 5 points. We have written 4 points already. What else? One, ROCE. ROCE. What is happening in ROCE? See, ROCE is decreasing again. ROCE is decreasing again. So right, see again, understand this point. Even if you don't write, it's completely fine. Okay, ROCE, decrease of ROCE, decrease of ROCE. Now, since we're writing ROCE, let's define that here. ROCE, decrease of ROCE is mainly due to point number 1, carry forward impact of operating profit margins. Okay, and see, if you see the capital employed has increased significantly. And why? Because of new issue of shares. Increase in capital employed due to new issue of shares, due to new issue of shares. Okay, which was issued to acquire. Stopping. Again done. ROCE also done. Then what else we can write? Net assets turnover. Net assets turnover is falling. See, revenue is increasing. Revenue is increasing. Still net assets turnover is decreasing. Okay. Why? Because again the same reason. Again the same reason. Capital employed. Okay. Net assets turnover. Okay. I'll write here NATO, and I will have to define there NATO. NATO. NATO is decreasing. Why? Because of increase in capital employed. Due to increase in capital employed. Done. So we have written a lot of points. 1, 2, 3, 4, 5, 6, 7 points. We've written as good as 7 points. Right? So even if you want to eliminate this point, you can do that. Even if you want to eliminate this point, you can do that, right? So now, is that doable? Yes, I believe very well doable, right? This point is very easy to write. This point again very easy to write. This point again very easy to write, and this point again very easy to write. These 2 points, yes, where something really needs application of brain. So which, even if you're not able to write these 2 lines, fine, no issues. Now, gearing. What is the impact on gearing? Please see. Gearing has increased significantly. Gearing has increased significantly. Gearing has increased significantly. Okay. From 12.2 to 33.1. 12.2 to 33.1%. Okay. This is mainly due to new loans taken of how much? 387 minus 104 is equals to how much? 387 minus 104 is 283 million, of 283 million. Okay, now out of this, loan of 25 million is obtained to fund future operations, and then you can write no information is given about other loans. This could be the loans of stopping which is consolidated. Okay, this could be the loans of stopping company. Okay, now interest coverage has decreased significantly. See here, interest coverage from 31.8 times to 9.6, decreased significantly, which is a high risk. Okay, now so we have done about gearing also. Now we have to write the conclusion, whether the objective was to reverse sales and the reverse falling sales and the profitability. Is the objective met? Guys, tell me, is the objective met? No. So right here, the objective of clocking to acquire, stopping to reverse falling sales and profitability is not achieved, as profitability further sees a dip, a decrease, a decline. Okay, now the stopping company is highly geared. Okay, a further analysis, or I can say further the stopping company is appears to be highly geared, which can be a high risk. Done. The conclusion also done. Right now, in this question of 20 marks, I believe this 5 marks is very easy. This 5 mark is also very easy. So 5 first plus 5, 10 marks is very easy. Now 1 mark easy, 2 marks easy. So 10 plus 2, 12. These two were tricky, I understand. But let's suppose if you remove these. Okay. So till now you scored 12. These 3 were again easy. 12 plus 3, 15. Again, these 2, this is not 4. Okay. This is 3. So 12 plus 3, 15. 15 plus 3, 18. 18 plus 2, 20. 20 plus 1, 21. Still you have written more than 20 marks. Right? Even if I remove the tricky parts, you have lot of points to write. Okay. Now Prakash asking, do we have to write suggestions? Yes, we have to write. Just writing the objective is not met is not sufficient. You have to write why are you saying the objective is not met, because the profitability further sees a decline. Okay. So in this question, even if we eliminate the tricky reasons, then also you have 20 fair points to write in the exam. Tell me guys, is that clear to all of you? Come on guys, tell me, is that clear to all of you? I believe these sessions would have really helped you. Okay, these sessions would have really helped you, and I request all of you, if you like these sessions, okay, drop a genuine feedback, a comment, okay, appreciation or an improvement point if you have any in the chat box once we wrap up the session. That's all for today. Thank you guys. Bye bye. This is Vishal Jain signing off. See you tomorrow. Now tomorrow we will be discussing March-June 2024 question paper. March-June 2024 question paper will be discussed tomorrow. That's all for today. Thank you guys. Bye. And do not forget to leave a feedback. Now, the Plundell Group owns 100% of Holloway Company in addition to several small subsidiaries. Okay, there are multiple subsidiaries that the Plundell Group has. Okay, and the Holloway Company is 100% subsidiary. Needless to mention, it's 100% subsidiary. On 31st December 2008, it received an offer to sell Holloway for $121 million, which it is considering. The Plundell Group has just completed the preparation of its consolidated financial statements for the year ended 31st December 2008, extracts of which are shown below. Okay, so the reporting date is 31st December 2008 is the reporting date. Selling the subsidiary at $121 million. Okay. Now, the consolidated financial statements are already prepared. Now, this is the consol P&L given. Now, the information is given. Now, requirement. Calculate the Plundell Group's potential gain or loss on the disposal of Holloway Company. So now this is the first requirement which I will cater to. Now again, since it's an interpretation question and I have noticed, and students do come to me before exam, sir, interpretation comes in the exam for 20 marks, and students say, sir, I am weak at doing analysis. So the only answer which I can give you here is, see, analysis comes for 20 marks, right? Now out of these, 5 marks is pure calculation. This 4 marks ratios, again pure calculation. 5 plus 4, 9 marks, easy marks. Tell me yes or no. 5 plus 4, 9 marks, easy marks. Now out of 11, even if you write 5 or 6 good points, which I believe you can definitely write, even if you are not at all good at doing analysis, even if you think you are a very below average student, then also if you have done a little hard work, or even if you have just watched all these 5 past paper series, just this 5 past paper series, even if you have watched it, I can give you a guarantee that out of these 11 marks you can at least write 6 or 7 points. Okay, taking 6 points only. 5 plus 4, 9, 9 plus 6, 15. You are able to score 15 out of 20 for a question which you are not that strong, which is your weak area. In that weak area question, you are scoring 15 out of 20. What else do you need in that? But if you are, if you are someone who is strong in interpretation, definitely you should target around 18 or 19 out of 20 in these questions. Okay. Scoring 20 out of 20 is also very much possible. Now, calculate the Plundell Company's potential gain or loss on disposal of Holloway. The directors of Plundell wishes to assess the impact of disposal. Okay. As a result, they wish to exclude all the transactions associated with Holloway Company for the financial statements for the year ended 31st December 2008. Okay, fine. We'll discuss that. But first of all, calculate the Plundell Group's potential gain or loss on disposal of Holloway. So now tell me, requirement A, gain or loss on disposal. Now tell me, how do you compute gain or loss on disposal? How do you compute? Let me insert table and compute. So first of all, we write what? First of all, we write what? Sale proceeds. Sale proceeds. Okay. Then less what? Net assets. We will reduce what? Net assets. Add net assets plus goodwill minus NCI. This is what we have to reduce. This is what we have to reduce. Now, since it was 100% subsidiary, so no question of NCI. So let us remove NCI. So now we will reduce net assets and goodwill. Goodwill, net assets on date of disposal, on disposal date, and here goodwill also on disposal date. Okay, now so this will give me gain or loss on disposal. This will give me gain or loss on disposal of Holloway. Sorry. Now, tell me what is sale proceeds? We know 121 million. We very well know 121 million. Okay, but what I write the figures in thousands because the figures are in thousands. So I will write in thousands. Always make a note of it. The format which is used in the question is the format which you will use in your presentation of the answers. Now, net assets on the date of disposal. What are the net assets and what is the goodwill on disposal date? So we don't know these two things. So we have to find out. So I will write here working note 1, and I'll write here working note 2, and I'll prepare here working note 1 goodwill on date of disposal. Tell me how to calculate goodwill. First of all, purchase consideration. Then less what? Since it is a 100% subsidiary, it will be net assets on date of acquisition. Okay. Now, what is the net assets on date of acquisition? Is it given in the question? Just see. Plundell Company acquired the 20 million share capital of Holloway on 1st January 2004 for 88 million. Okay, so the purchase consideration is given as 88 million. At this date, Holloway Company had a retained earnings of 20 million, share capital of 20 plus retained earnings of 20 plus Holloway also had a land which had a fair value of 30 million in excess of its carrying amount plus fair value adjustment of 30. So 20 plus 20, 40, 40 plus 30, 70,000. Okay, so this gives you goodwill on date of acquisition 18,000. Okay, now any impairment of goodwill, just see any impairment of goodwill. Yes, goodwill is in the Holloway has been impaired by 4 million since acquisition, and out of this 4 million, 1.5 million has been impaired during the current year due to the news that Holloway's one major customer was lost. So impairment is 4,000. So goodwill on reporting Date is 14,000. Goodwill on reporting date is 14,000. So we have this answer 14,000 now. But we are still to arrive at net assets on date of disposal. So chalo, let us find that also. Now retained earnings on the disposal date is 42 million. Okay, so we can no need of working to, we can calculate it here itself. So share capital will be 20 plus retained earning is 42 plus retained earning is 42. Okay, and land fair value adjustment also 30 plus 30 land, since the land is not depreciated, so there is no depreciation of this one. Okay, so this becomes how much? 20 plus 42 is 62. 62 plus 30 is 92,000. So what is the amount here? Can you please tell me? 92 plus 14. 92 plus 14 is 106,000. 106,000. So what is the value of gain or loss on disposal? 15,000. Tell me, is it clear? 5 marks sorted. Tell me guys, come on. Was that difficult? Was that difficult? I don't think so, yaar. I don't think it was difficult. It was quite very easy to score these 5 marks. Very simple, plain, easy marks. Right? Come on guys, tell me please. Now, moving on to the next part. Requirement B. Requirement number B is the calculation of the ratios. Okay? Requirement B, ratios. But now let us read the question first of all. Make necessary adjustments and recalculate the ratios. What adjustments? Read this line. The directors of Plundell wish to assess the impact of potential disposal of Holloway. As a result, they wish to exclude all transactions associated with Holloway Company. They wish to exclude all the transactions associated with Holloway Company from the financial statements for the year ended 31st December 2008. They wish to exclude it. Okay, and then compute these ratios. So now see here, the question is given you the ratios for the previous year, for the current year, but these ratios are including Holloway. We have to compute the ratios for the current year excluding Holloway, because the extracts of Holloway's financial statements are given to you now. Individual FS of Holloway is given to you now. So how will you compute the ratios? So I will write here 3 ratios: workings, current year, previous year. So right here, ratios, workings, 20x8 excluding Holloway, and it is again 20x8 including Holloway, and 20x7, this is also including Holloway. Okay, now first ratio which we have to compute is GP margin, second is operating profit margin, and third is interest cover. That's all. Now the question has already given you the data of this one: 46.1%, 20%, 3.5 times. Question has given you the data for this one: 47.6%, 24.2%, 3.8 times. Even if you don't draw these two columns in the exam, it's completely fine. Then sir, why are you drawing? But for the sake of easy comparison, when you have the ratios parallelly available, you can compare it well. Okay, now the workings for excluding Holloway. Okay, now tell me guys, come on. First of all, let us calculate the ratios. For 20x8, gross profit margin is 39,800 divided by 86,400. Sir, this is including Holloway, na? Yes, I will exclude Holloway towards the end. Then operating profit margin is 17,300 divided by 86,400, and interest cover is 17,300 divided by 4,900. Okay, now let us exclude the figures of Holloway. Revenue of Holloway is how much? 33,500. 33,500. Okay, now what is the gross profit margin excluding Holloway? Gross profit is 18080. Operating profit, let's remove the operating profit of Holloway, 13580. Let's remove the operating profit of Holloway, minus 13580. Okay, now not only this, we are also required. See, the impairment loss of 1.5 million is for the current year, which would have been recorded in the operating profit margin, right? So if we are removing the impact of subsidiary, we have to remove all the impact, right? So we have to do plus 1,500 plus 1,500, okay, for the impairment, for the goodwill impairment. Now, can you please calculate the ratios and tell me the amounts? Tell me the percentages. Come on, guys, tell me. Can you please tell me? It will be 41%. This will be 9.9%, and this will be 1.7 times. Tell me, is that clear, everyone? Now we have all the three ratios available with us. Was that difficult? Come on, guys, please tell me. Now we just first of all took the entire 20x8. We removed the impact of Holloway. We removed the gross profit of Holloway. We removed the revenue of Holloway. We removed the operating profit of Holloway. We removed this one also from Holloway. Operating profit here also we'll have to add 1,500. Okay. Okay, now we have removed the impact of Holloway everywhere. Whatever is the impact, we have removed that impact and recalculated the ratios, and I believe it is quite very easy, which you can easily do it off. Clear, everyone? Okay, now the question might arise in your mind, sir, why 1.5 million we have added here? Because we have to remove all the impact of subsidiary. Now, so this 1.5 million is the goodwill impairment for the current year. It would have reduced the profit since we are removing the impact of subsidiary Holloway. So we have to increase the profit. Okay, done. So I believe we have fairly dealt with this part. 5 plus 4, 9 marks, fairly done. Tell me, guys, clear, everyone? Is this 9 mark clear to everyone? Are you confident on these 9 marks? Now we have to focus on the rest 11 marks now. Okay, but before moving on to the rest 11 marks, I will strongly recommend you to first of all draft the how exactly the marking scheme will work, understand that, and then write the answer. C, analysis on financial performance. Read the question C. Analyze the performance of Plundell Group, not the position, only the performance for the year ended 31st December 2008 and 2007. The answer should specifically refer to the potential disposal of Holloway Company. Parul, that's what I explained right now, because 1500 is the goodwill impairment of subsidiary. Okay, since we are excluding the impacts of subsidiary, we'll exclude this impact of 1500 also. Now, what is the treatment already done of 1500? We would have increased the cost, thereby reduced the profit. Okay, the goodwill impairment will reduce the profit. Okay, since we are excluding the impact, we are increasing the profit by 1500, increasing the profit. Okay, chalo. Now, let us comment on the financial performance. No financial position, only financial performance we have to comment. Only financial performance. Okay, so we have to comment on the financial performance, and we have to give towards the end a conclusion. Now, what should the direction of the conclusion? What should be the direction of conclusion? Decision should be, is the decision to dispose of Holloway good or bad? This should be your conclusion. Now, you will get 1 to 2 marks for conclusion, and the rest 9 to 10 marks are for analysis of financial performance. I believe it is very much clear to all of you. Can we skip conclusions? So let's suppose if there is a student who has written, see, part number C is for analysis of financial performance. Okay, so if there is a student who have written 11 points for financial performance, will he get 11 marks? No. You have to write at least 1 mark for conclusion, at least 1 point for conclusion. Even if you write 13 points here and don't give conclusion, you will get a maximum of 10 marks only, because 1 mark is always, at least 1 mark is always and only for conclusion. You have to give conclusion. You can't skip conclusion. You have to give conclusion. Okay, that is one of the major comment of the examiner, that students do not give conclusion, or even if they are giving conclusion, that's vague. They're saying no, the decision to dispose of Holloway is not correct. Arey Baba, tell me why. You have to tell why. You have to tell it why. Now, so before I start the performance, I will read the information entirely once. Plundell Company acquired all the $20 million one share capital of Holloway on 1st January 2004 for $88 million. At this date, Holloway Company had a retained earning of $20 million. Holloway Company had land which had a fair value of $30 million in excess of its carrying amount. The fair value adjustment has not been reflected in Holloway Company's individual financial issue, but still exists at 31st December 2008. Okay, it says this fair value adjustment on land has not been reflected in the Holloway Company's individual FS, because the fair value adjustment happens in the group FS. Okay, but it exists on 31st December 2008. Fine. Holloway Company has a retained earning of this much. Goodwill has been impaired by this much, and in the current year, the goodwill has been impaired by this much due to the loss of one major customer. Now, Plundell Company develops computer games. Plundell means the parent, develops computer games. Holloway Company makes and sells packaging material, means they are into different sectors, different business. Plundell acquired Holloway thinking it could utilize the packaging material in its games, but has now found little need for them as gaming has moved online. Okay. Earlier, if you go 10 years back, or not 10 years, 7-8 years back, okay, gaming used to come in a packages, right? Gaming used to come in packages. Okay, now everything is online. Now everything is, now as of now also the PS4, all those gaming system, they also come in packages. They also come in packages. The big gaming system still comes in big packages. Okay, so the Plundell company is into games. So now they thought that acquiring Holloway would have been good decision because we would have got the support in packaging. But now since the gaming has entirely moved online, a major sector, a major market of the gaming has moved online. So they are saying that it is little need. Plundell has experienced increased competition in the recent years. This competition has led to significant increase in the research and development expenditure. Now, significant research and development expenditure. Research is expensed. It's an operating expense. So it will increase your operating expense and the operating profit margin will go down. Just see, is your operating profit margin going down? Is your operating profit margin going down? G, yes. Ji haan, not G, yes. Ji haan. Yes. There has also been increase in the general reduction in the expected life of the games. Expected life of the games are also reducing, with the consumers using games for shorter periods before buying new games. Since the trend is changing, the trend is changing. Understand? The consumers wants new game every day. So the life of one game is small, means the gaming being an intangible asset. Okay, let's suppose I develop the one formula for one game. Okay, how long earlier, if you go 20 years back, I developed a game. That game will run for 10 years. So the patent for the game has to be amortized over 10 years. Okay, but now I have developed a patent game. Okay, now I know that I will get the benefit only over 3 years, right? So I will have to amortize it only over 3 years. So amortization expense will increase because the cost will be the same, but life is less. So amortization expense will increase. The operating expense will increase. Operating margin will go down. Plundell and Holloway use similar amounts of plant and equipment, and all of it is leased. Plundell's property, plant and equipment is leased under 3-year lease expiring in 2009. Holloway uses much longer leases, which has an average of 10 years remaining. Okay. Now, higher lease life means higher finance cost, higher depreciation costs. Okay, now extracts from the Holloway's financial statements are given as follows. Now can you find out, just for your purpose, can you find out before we start to do any analysis, find out, see if the individual FS is given, find out the ratios of individual FS also, find out the ratios of individually, what is the ratios of Holloway. So now why? So we can say individually Holloway was making this much margin. So what was the contribution of Holloway in the console? Was it contributing to increase the margin or was it contributing to decrease the margin? Why I'm saying it like this? Please understand my rationale. Please understand my rationale. Let's suppose parent is making a margin of 20%. Subsidiary is making a margin of 10%. So the group makes a margin of 15%. Rough, I'm saying. So subsidiary contributes to decreasing the margin of the group, right? But now let's suppose subsidiary makes a margin of 30%. Then the group makes a margin of 25%. Subsidiary contributes to the increasing the margin of the group. So that's why I'm saying calculate the individual margin of subsidiary. Calculate the individual margin of subsidiary. Let's evaluate what was subsidiary contributing to, increasing the margin or decreasing the margin. Accordingly, we will be able to take a better decision. What was Holloway increasing the profitability or was Holloway decreasing the profitability? Chalo, now let us come to the ratios and comment. The gross profit margin has decreased. First of all, revenue. Revenue has increased. Revenue has increased during current year. Despite increasing competition. Okay, despite increasing competition. Okay, now this might be due to continuous research and development done by Plundell. Fairly, right? We have seen the company done research. Significant increase in research and development. Okay, might be due to that they have come up with a new game which have sort of taken over the market, right? Though there is no significant increase in the revenue, but still there is an increase. They are surviving the competition. They are not only surviving the competition, they are beating the competition. Good. Now further we can write Holloway generated how much sales? 33,500. Generated sales of 33.5 million, which is around how much? 33.5 divided by 86.4. 39%, around 39% of group sales, which is significant. Hence, the revenue of the group will see a significant dip in future years due to disposal of Holloway. Tell me yes or no. Right? Come on, guys. Now, whenever you feel that I am writing something really out of the box that you can't even think of, do let me know. And I believe these things are very general, right? You can definitely write these points, very generic points. And as you can see, I'm writing these in pointers. Which exactly you can write in the exam also. Okay, so revenue is done. Now, we can go to the gross profit margin. Gross profit margin decreases in current year. Why? It might decrease in current year. It might be due to increase in or decrease in selling prices. Might be due to decrease in selling prices to sustain competition. Right? It might be due to decrease in selling prices to sustain competition, and they have sustained it, right? They have increased the revenue a lot. Right? See here, please see. The cost is increasing. Revenue is increasing, but the profit is same. Meaning thereby they were able to sell more products. By reducing the price. Okay. Now further. If we exclude Holloway, the gross profit margin further decreases. Why? It is because the margin of Holloway individually was how much? Just see. Can you please see? 18080 divided by 33,500. It is 54%. 53.9 was 53.9%. Okay. And hence disposal of Holloway contributes to decreasing margin. Tell me yes or no, right? These are the fair points which you can definitely write in the exam. Nothing difficult. I think fairly possible. Okay, now done. What else can you write? GP margin done. Come to operating profit margin. Operating profit margin has also decreased in the current year. So let's write that. Operating profit margin has decreased during the current year. One of the reason apparently can be decreasing gross profit margin. Another reason for decrease in operating profit margin is increasing operating costs for one you have to write this one. Research and development expenses. Second, since the trend changes fastly, the life of a game reduces, and hence the amortization increases. Okay, and hence the amortization increases, which will increase the you can say this one, what we say as operational costs. Tell me yes or no. Come on guys, is that clear everyone? Okay, now very good. What else? We have fairly written about operating profit margin. Now if we exclude subsidiary, 9.9%. oh my god. So again, I'll just write this way. I'll just take the same reason again and I'll write that here. Further, if we exclude Holloway, the operating profit margin decreases. It is because the margin of Holloway individually was how much? 13580 divided by 33,500. 40.53%. My god, 40.5%. And hence disposal of Holloway contributes to decreasing margin. Okay, so this is also done. So far, how many points we have written? 1, 2, 3, 4, 5, 6, 7, 8 points written fairly. Tell me, they are very normal points. Now interest cover is increasing, decreasing. Interest cover is decreasing. So let's comment on that also. Interest cover is decreasing Now why interest cover can decrease due to two reasons. One is the increase in the finance costs or decrease in the profitability. Just see, is the finance cost increasing? No, finance cost is decreasing. Finance cost is rather decreasing, right? So interest cover is decreasing. It is due to decreasing operating profits and not increasing interest costs. Okay. So how many points? 9 points, fairly done. We told 9 to 10 points. We have written 9 to 10 points. Tell me, is that clear, everyone? Okay. Now we can write more points. We can write more points in decrease of operating profit margin. One more point I can write here. Goodwill impairment. Goodwill impairment. We can write goodwill impairment. Goodwill impairment of $1.5 million in current year due to loss of major customer. Due to loss of major customer, that has also contributed to decrease in the operating profit margin, right? So we have done 10 points now. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 points, right? Now, conclusion we can write, is the decision to dispose of Holloway good or bad? Tell me. Okay. Is the question saying about performance? Yes. Let's see here. Analyze the performance of Plundell Group for the years ending 31st December 2008 and 2007. Your answer should focus on potential disposal of Holloway, and that's what we are focusing on. What is the impact of disposal, right? And that's what we have to conclude. Tell me, you guys tell me, is the decision to dispose of Holloway good or bad? Tell me. So I'll write here, overall, the group has performed good in current year. Nothing bad. However, due to disposal of Holloway, the margins will significantly decrease in the next year. Why? Because this is because Holloway individually was a high profit margin company which was contributing to increase the margins of Plundell. If disposed of, that's all. I think that's fine. This is fine. We have done here 2 marks. This is for 2 marks. So 10 plus 2, 12 marks. Tell me, is that something very difficult? I don't think so, yaar. We have written fairly good points. We have written fairly good points, good number of answers, good amount, good answer, and a fair answer we have written. Tell me, guys, is that clear to all of you? Come on, guys, tell me, is that clear to all of you? Is that clear to all of you? Okay. Now, with this, we come to an end of our past paper series of ACCA financial reporting paper. Okay. And I believe you guys enjoyed it. You guys learned a lot from these sessions. If these sessions were helpful, do leave a comment in the chat box. Okay. Now, interest cover is in the performance. Interest cover is part of performance. Interest is a part of performance means what? P&L item. Interest is a part of P&L item, right? If I would have talked about gearing, yes, that's not performance. That's not performance. Okay. Chalo, that's all for the day. This is CA Vishal Jain signing off from this past paper series. I hope you enjoyed, you learned a lot, and I'm glad that I could contribute to your journey of success. Okay, but do leave a genuine feedback in the genuine feedback in the comment section of this video. Thank you guys. Bye. And also do not forget to refer these videos to all the ACCA community students. Okay. This is what I request from all of you, right? Try to share this video with all the ACCA students. This video should reach all the ACCA students appearing FR in June 2026. Will you do that for me? Tell me, guys. Come on. Will you do that for me? Let's. Why are you taking the benefit only yourself? Let all of the students take the benefit of these past paper series. Okay. So spread it as much as you can. That's all for today. Thank you, guys. Bye bye.